know it, how you feeling? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Woo. Hello. How was everybody last night?
Well, we're missing right now. Well, we kind of missed it. It's the blood moon. It was the lunar eclipse.
Oh, I saw that. Wasn't it supposed to be like
it was this morning, yeah, but it's cloudy and like rainy.
I was driving in at 5:30. I don't see nothing.
I know. Well, because we had cloud cover here, so
we always get gypped out of like all the, moons, the blood moon, the lights,
You
all
started to sound like
the
a boomer.
stars, all those things. We never get any of them. Never get any of them because of the
the
clouds,
city is bright.
The city, the lights. We don't get any of that good stuff.
Yeah. Well, it's got us
like father, like son.
But if your cats have been acting weird lately, it's because
Is that what it is?
yeah, it's because of the lunar eclipse. Don't look at me like that.
What do
it's
they
cat
do?
facts.
What's their like weirdness?
Being a little weird. Cats are little aliens anyway. They're little weirdos anyway.
They like know something that we don't know. They like see
That's why you should be nice to animals.
The dogs are not like that. Dogs don't have any sixth sense.
No, dogs are just looking for their next meal.
Yeah, the cats they creep around like there's like something.
Yeah. And they're in the know and you're not.
Yeah. Yeah.
It's true.
What did you get up to last night?
Oof, I was watching the markets a lot last night. I thought volatility was bid for most of the night, even with the S&P's only down 40. Now they're down twice as much as that or more. But it looked like there was something percolating in the market all night long. So I was watching the market a little bit. Watched a little bit of what's that? Drive to F1?
Drive to Survive?
Yeah.
Is it a new season?
Yeah. What are you doing there?
That's my Russell.
Oh, you're buying back. You're buying back your Russell
from yesterday. Yeah, I'm gonna short some oil too.
That was
MCL.
So oil I can see as a short here. It got all the way up to 77 and change. It's trading down to 75 and change. It's only down to 70. That's a $7,000 move.
Oh my gosh!
Overnight on one larger future. Now we're trading MCL. What's
MCL.
that? Yes.
I'm doing the micros.
Yes, small.
Which are 100. No, it's 100 barrels.
That is correct. 100 barrels, like 100 shares. Yeah.
I got a new request, Nikki. I don't want bagels because when I got off the elevator from the parking garage to come into the other bank of elevators to come up to our office, there was this lady and she had a spread Chick-fil-A breakfast.
Ooh.
That's what I want with your oil winnings.
Chick-fil-A makes like eggs breakfast? Or
no, like little chicken minis and like little and like a fruit platter and like they got like hash brown thing. Like, ooh, it's good, girl.
I actually will say, as a breakfast defector, and
you did turn me on. You did turn me on to the breakfast defector of Taco Bell.
I will tell you that Chick-fil-A does a good like breakfast wrap. I don't do it with the chicken. I do it with sausage, and it's very good. Sausage, egg. They put the little.
They do put egg.
They have the little circle,
the little hash browns,
the little circle hash browns in there. It is very good.
You haven't steered me wrong.
Anyway, I would like to put in my order. Thank you, Nikki.
Yes, I can do that. Yeah, I've had the like breakfast biscuit ones, the little
chicken minis.
Yeah.
They're good, but they also do chicken biscuit. They do bigger chicken biscuits for breakfast.
His point, you still have to dip it in a sauce because it's too dry. So you need like a sauce of some sort.
Complain.
So you're eating, like I like a buffalo sauce.
Sure.
You're going like, stuffing your face with like chicken and
dip it in honey
at like 6 a.m.
Ooh, it's good.
I don't know if that would work for me.
You were about to destroy your body and go to Vegas. Like, what are you talking about? You're like, I don't want a buffalo sauce.
I'm not going to destroy my body. No, this is an adult trip. This is a golf trip. Yeah. Yeah.
You made 60 handles on that Russell. I don't think I've ever made 60 handles on a Russell future. That's
high fives, please.
That's a big move. I mean, that's a 2% move.
All I had to do was go to sleep.
Yeah, you sold them yesterday, around 2 o'clock in the afternoon or a little bit before, and all you had to do was go to sleep, is right.
It was the outperformer of the group yesterday, and that was why I was short it.
We have had that kind of.
It was up a full like half. It was almost up a full percent at the end of the day yesterday. You had bonds
with the market not green for the day.
No, the rest of the indices closed down. I mean, they were rallying
slightly down.
Closed the last 30 minutes. They sold off. You had bonds down pretty significantly. I mean, we were almost in the 120 handle on Saturday.
48 hours ago, yeah,
Sunday.
sure.
And then you had the huge reversal, so you had bonds down. It just didn't really.
So now you're going macro on me. You've been listening to that guy Ilya and Chris too much. You're saying why are the bonds
they
going
made
down?
Me 50 handles.
Yeah. Mm-hmm.
I mean,
got it.
What have you done for him lately?
Yes. I haven't done anything for him lately. If you ask him, you kidding me?
Right? Nothing.
No.
Well, good.
I did do something for you. I will say that we've promoted him a little bit, and we gave him his own account.
Yeah, on the follow page, there I am. You can.
It's only taken 16 years.
Yeah.
Yes. Well, I mean, there's no trades there yet, but I am there on the bat.
Yes.
My past trades from option trades today aren't there yet. But everyone moving forward will be there now. So it'll be segregated. A lot of people were asking. I don't send you the emails because you're good over there. You don't. You have your own emails. They say people say my trades. They would like to see them option trades today, which we are doing every day today. Every day this week now. So you'll be able to see them there. Easy for you to find.
Hey.
It's a nice
Beautiful.
Nice little addition to the follow page. About time you got.
Thank you. And you even gave me Skinny Tony. You didn't give me the fat Tony.
I did. There was a big kerfuffle happening. The design team gave me a picture, and I was like, no, that's Fat Tony.
You slap all the filters on this bitch.
I was like, you can't, because he was already a little upset with our picture. Two of us.
Sure.
I mean, both of us look a little plump in that picture.
Oh, thank you for adding yourself in there a little bit.
No.
Talking about this picture down here.
A little plump there. I'm a little extra weight there in that picture. So I had to make sure.
Nice to yourself. Just be kind to yourself. It goes a long way. If we're all just a little bit nicer to ourselves and to others.
That.
Yeah.
Nice.
Be nice to yourself.
Yeah. So, but
You look good, Rotund.
Don't say that.
There's more to love.
What did I just say?
Being nice.
I said be nice.
Being nice.
Goes a long way.
Yeah.
Just
So anyway, I had his back, and I was like, no. He looks a lot different now. You got to get a skinny picture.
It is really funny because I would say that
Testosterone.
the group of us that have been here, it's unusual to maybe, in your 20s, when you started this job, to be at a company this long. Because normally you stay at a job 2 years, you go somewhere else or whatever.
2 years and go. Kidding me? I was in one spot.
Okay.
Matter of fact,
my
one
God.
spot. I didn't move.
Yeah.
Shit. I didn't even go
But
take
anyway,
a
but
pee.
it's been so interesting.
For 20 years.
We've all been here, like Mike and Nikki and Katie and
Decade.
Tracy
Decade
and
or more.
right, we've all been here for 10 years. And it's funny when graphics will put up a photo of when we first here before this company stole our youth.
Yes.
Stole our
so
and you're just oh, sweet baby, oh, you precious child. So
I know.
It is funny, isn't it?
yeah.
Time flies.
Yeah.
Crazy.
Your hair was brown.
Hey, be kind. Be kind to him.
I know.
Be kind.
I'm just
Be
for
kind.
I'm
Be
saying for
kind.
all of us, it was just
Yeah.
just
I know.
It's a
10
little
years in
different.
the market will do this to you.
we'll do it to you.
Take a look in the mirror, everybody out there. This is your future.
Anyway, what did you get up to last night, Bat?
It was a quiet night. Watched the market. I was a little bit. Yesterday took a little out of me, emotionally, physically. Yeah. Just
Why? Just because of
Just the market itself.
Oh,
I mean,
okay.
parents.
Act like you've been here before.
Economic news. I know, but it takes a little bit out of you every day.
It sure does.
Yeah,
Just
yeah,
turn
I
your
mean-
phones off and go outside.
Sure.
Yeah.
And it certainly took a lot of the Korean market, which you were talking about this morning, which is down about 7% this morning. But
Yeah.
what is that? I think
Yeah, EWY is down 10%.
Yeah. I read it's up. Down 7%. It's still showing a healthy return. Do you know what the return is just this year in the Korean market?
It's over 100%.
Well, year to date, it's 128%, one full calendar year. But just this 3 months or so, or 2.5 months, however you want to do, or March 3rd, it's up 37%, even after the 7% downturn. So
Wow.
crazy markets there in Korea. So that's why a lot of people wrote into me when we were talking about this just about a week or so ago. We were talking about the U.S. market versus a lot of
The global markets, right?
Yeah,
We're
yeah.
underperforming.
Underperforming.
Yeah.
Some, on up 10% or more on average. Like, should we jump in there? I'm like, no, that's not when you kind of jump in there. At least in my opinion.
My opinion is to invest in Korean skincare.
Yes, that's exactly what you said when we talked about it.
I am glowing. Okay.
Yeah.
Thank you, South Korea.
Exactly what you said. Stay true to your form.
Yes.
For sure.
Yes. If it gets more expensive, I'm gonna be upset.
Why don't we have that stuff more readily available here?
We do. We do. There's K Beauty and J Beauty stores all over. You don't have to even go that far. I get some K Beauty stuff at Costco.
My man Brandon just reminded me of a trigger word for me. Some people it's like donuts or croissant or whatever their trigger word is.
Moist
Or
like a
moist. Husky. He goes, husky. That's right. You were a 34 husky back in the day when you were really a 36, but they had pants that were a husky. They were like a size smaller.
That's fine.
Yeah. Well, that's good. 35. That's usually like a good middle spot to be. There is no 35 usually.
Yes. Single digits, like 33s and 35s. Yeah. Mm-hmm. Anyway.
Shenanigans all around. Yeah. Well, last night I went and got gas because I was like, that you should do. I should have done it like on Sunday, but I didn't want to leave.
You think Biden was back in office?
I didn't want to leave my house on Sunday, but I got gas yesterday, so $3.14, not bad.
Yeah,
I like the word. I went to Costco, so
that's way better than around here.
Right. So Costco get like locked in, but my car's hybrid, so I have 420 miles for us to sort all of this crap out before I get like really upset.
Yeah.
Oil will be back in the 6 handle by the time you need another tank of gas.
I know. I get
kind of
420 miles a tank, so I just I need it to be.
You'll be fine.
Sorted out.
You'll be fine.
But when did you guys get gas or?
Well, Nat Gas is actually, which I know is not in your car, but I'm just giving you the Nat Gas analogy. Nat Gas had a wild day too. It's up 4% right now. It's up almost 8% at one point.
Oh wow!
Oil is up big. It's up almost $5, which is 7% move, but it was up $7.50 at one point. And then it's funny. You've got gold and silver down now. You got kind of that fear trade, or at least flight to quality, safety, whatever you want to call it. Off here with the bonds lower, gold lower, silver lower, crypto's
weird one.
Crypto's unchanged pretty much.
The same weird that yesterday was weird too because you had oil kind of fading, you had gold and silver strong, but gold up on the day. At the end of the day, silver was down. It was kind of like a like chop fest there. You had Bitcoin higher, which is
never happens.
I consider the risk on asset, and then you had markets. We moved 120 points yesterday. High to low.
Top to bottom,
one of our bigger ranges of the year, and going
volatility
back.
too.
Yeah, volatility had a huge move. Higher to basically unchanged on the second.
Yeah, stair-stepped higher all day long.
It felt like you had there was a lot of randomness to it.
Yes.
You had like kind of risk on in your Bitcoin and equities and volatility. You had like kind of a mixed sort of risk off with gold and silver as well as oil. So it's like kind of like a weird. There wasn't like a consensus as to the feel in the market.
And you had the gold silver ratio. You could have been a hero. It was trading around 55, 56. It's 62. It traded up to 65.
Yeah,
that's $10,000.
I know.
Per one.
I had it, but paper.
Man, you know how much Chick-fil-A breakfast that would buy me?
You could have got the egg one with the sausage and
the fruit cup.
One.
And then the next week I would have done bagels.
Yeah.
Done a whole year.
Oh, too funny.
Well, shenanigans all around. Hey, we got a great show for you today. A lot of great content headed your way. It is a terrific Tuesday here on Tasty Live. And the top of the 8 o'clock hour, we have an options jive. Volatilities of put spreads and call spreads. Nikki, what is that going to be about?
I was actually looking at the other content for tomorrow. So I have the wrong one. But
on Tuesday.
Yes, it is Tuesday. So we're going to be looking at return on capital volatility, put spreads versus call spreads.
Okay.
We can have like P&L swings.
Okay.
Should be a good one.
And then we have Let Me Explain is back.
with Mr. Vecchio.
Yes. Yes. Well, this says Chris and Ilya. I don't know why it says both. Is that a typo?
I don't know.
I don't know. They must have a lot to explain to us.
I don't.
So they have more than one.
Or maybe, yeah.
Or they want to tag team us or something. Or they have something riveting to.
Because sometimes the sheet will just fill in, like if she's typed it for Chris and Ilya, like for their show, then maybe. But I don't know. Who knows? You're just gonna have to stay tuned and watch and see what the heck happens at 8:40. But we're gonna get something explained to us by one or two people. So yes. And then 9 o'clock for market measures. What are the success rates of the top sector ETFs?
Ooh, so we're looking at strangles in sector ETFs. So like you're talking like XLE, XLK.
Okay, XLU.
XLF. I don't know. Yes, we have XLU in there.
Yeah.
XLV, which is healthcare. So looking at like, I don't know, just kind of branching out a little bit past SPY to go into specific sectors and see kind of if those perform in line.
Okay.
Good one.
And then we have live from the trade desk at around 9:20. Quentin in the house counting down the top trending tickers over at Tastytrade, and Glenn G Money on the FX side of things. Obviously, global currencies are moving. So
I don't know how I feel about this, but Glenn and I were dressed very similarly yesterday. We had a similar kind of shirt. He made that comment when I saw him, and I was like, you're right.
I did not notice.
I don't know if that's a good thing. I mean, he is, the young guy. He's, like in the know.
Sure. He still has brown hair.
Yeah, he's a cool guy. So I felt kind of good about that.
Yeah, okay.
I just wanted to put that out there.
Okay.
Yeah.
Beautiful.
And then TP will be back again on the Liz and Jenny show.
Ooh,
so I think
special.
I think that will be good. So they will not be at the SIBO, so I do not get to say my favorite phrase, but it's still electric with
when
TP.
TP joins the show, it is electric.
It's electric.
Yes.
Anyway, that is our run of show for today. Programming note tomorrow. We would love your trade ideas for what's your assumption. So if you have an underlying and a directional bias, obviously everything's up for grabs.
Yes.
Nope. Yep. Yes. tastylive.com/assumption. Yeah.
Full.
Get into it.
MCL rally a little bit, just rallied about $1 from the last time you just sold it just a moment ago.
Full. No more.
Full, no more. You're in. All done.
And I'm short oil vol.
Yes, I am too. Mm-hmm.
Sorry about that.
Yeah. Well, hey, let's get this show on the road. You guys want your daily dose?
Sure.
Maybe with my theme music. Let's go.
Our leading story. Breaking news.
Coming
Across the wire. Our leading story. Top story. Just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's March the 3rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Well, two fun facts. One, we've entered meteorological spring. It's hard for me to say, but yes. Okay. So it's spring.
You there?
Yeah. And two, we haven't had the spring equinox, so those are different things. Anyway, but then two, we're going to gain 93 minutes of daylight over the next 30 days. Let's go.
It's already gotten so much.
It's so nice. Like when I leave my house this morning, like it is cold still.
It's funny that we still subject ourselves to living here because I
still sit in front of my happy light. Like I still got to sit in front of a light when I put my makeup on.
But it's like when you get
so I don't stab someone.
Extra sort of light.
You appreciate it.
You appreciate it. You do. You look at it and you're like, blessed.
Yes.
I'm blessed.
Yes. But earnings today, Mr. Bat.
For today, just CRWD. I think that's the only one that will.
CRWD. Time to get rowdy.
Yeah. I think that's the only one we'll look at.
Well, I got a story about that, so we'll talk about it.
Okay.
Talk about it.
Yeah, Target and Best Buy yesterday.
Yeah. Target and Best Buy, yeah.
First headline of the day, bonds logged the biggest sell-off yesterday in 9 months as the Iran conflict sparks unusual treasury moves. Mortgage rates and more will be vulnerable to the surge in the 10-year treasury yield. Where do we go from here?
Where do we go from here? Bonds are trading down 17 ticks to 116.29. That's taken out about a week or so rally that we've had. Back to that range where we were sitting in from around right here, low 116s to the high 117s and change. We'll see what's going on here with bonds. I would imagine that they hang out here for a little while.
Yeah.
Bond volatility is only 13, so it is a direct.
Which is the weirdest part about the whole thing is like you had a 2-point swing in the bonds.
Yeah, which is a huge move. I mean, when
Why wasn't that reflected in the volatility?
That's the question. Isn't that weird?
What's going on?
You think the
you
bonds
had basically a month move in
a day,
bond in
overnight,
48 hours, right?
Yeah. So it's been a little bit odd that bond volatility hasn't really exploded.
Are you doing like a TLT or no? That's hard to still?
I haven't been messing around with the bonds. I mean, we've traded it sparingly, like short puts. I mean, it's just, it's not my forte.
Sure.
I like to trade equity markets. I mean, I look at the bonds as a way to just kind of gauge risk and just see what's moving.
That's
in the
fair.
markets, but it's not like, it's hard to, the Ivy rank is 17 on a huge,
Ivy rank is 17 and monthly implied volatility in TLT is 13. You got so much going on. You got markets moving 8 to 2% all over the world with tight liquid markets.
8 to 2%. That is
well. I mean, you got volatility up 8%. You got the market down 2% this morning. I was just kind of oil up almost 8% or 7%.
Yeah.
Hey, in other news, dollars.
It's hard to get a tick in bonds.
The dollar has reclaimed its mantle as the go-to safe haven as the Iranian strike rattles nerves. The dollar's sharp rally following U.S. strikes on Iran is reassuring investors the currency still functions as a global safe haven. Wish there was a better way to check.
I am vindicated.
Yay.
You are vindicated. You got a move in the dollar today of biblical proportion.
Yeah.
The last 2 days, actually.
I'm still
Euro down almost 1%.
Yeah, the biggest part of my dollar longs is via short Aussie dollar, which is down, but
Aussie dollar's down 1.25%, but you are right. I mean, it was 71 at 70.
15%.
Right. It was 67 starting the year, or a little bit lower.
Yeah.
Yeah.
So
But still had a nice rally.
I still got some
Still got some work to do.
Yeah,
It owes you still.
Yeah. Yeah.
Got it.
Yeah.
Got it.
All right, hang in there. You're doing it. Chevron stock surged to a record as the attacks on Iran spark an oil rally. CVX just dominated the market yesterday. Of course, XOM, COP, Oxy, XLE, they were all up, but CVX hit the record new highs.
ExxonMobil up again this morning. I mean, it traded as high as 159 and change before closing at 154. Looks like it's trading 156, 57 right now, up around 3. So oil definitely back. Oil up about $5 for $4.87 to 76. Numbers that we haven't seen well over a year.
Yeah, I love that for them because I always worry about the oil companies.
Yeah.
Are they making enough?
Yeah, I get you.
It's a hard trade though for any of those and like the defense names too. When you have
Chevron up $2, you mentioned it.
the move has happened, like you've had this huge move and now what do you do?
But I did mention XLE. Like, what can you do in there?
Yeah.
Right.
It's a good one to talk about.
Well, you're going to talk sector ETFs.
Yeah. No, XLE is kind of a death trade for me. I think. It's just like it's a slow. Like I took off a strangle yesterday into the move lower, so I legged out of the puts, and then you had the little bit of a sell off in oil at the end of the day. I took off the calls and scratched the trade. I mean, the trade just doesn't move. It's just I don't know.
It's a tough one. 30% monthly implied volatility. You think it would be good on a $57 product, but it's
I'd rather
gone
go
in
get
one
some
direction.
delta in like CVX or XOM.
Agreed.
Call diagonal, poor man's
Yep.
cover call, something like that.
Yep, agreed.
Sort of.
I got you. That's fair. What are you doing in just straight, sweet crude?
Short.
We just shorted it, right?
Yeah.
Average price of around 76. It's trading
Yeah.
76.20 right now.
I'm short, and I'm short a lot of out of the money volatility. I guess it's close to at the money now, so I'm in the money.
Okay.
Short vol, short delta, ready to rock.
Big bank boss Jamie Dimon warned that inflation could become a skunk at a party. Is that a saying? Do people say that? Is that a thing? Are skunks getting invited to party? I'm not getting invited to party. Anyway, he says that inflation could be a skunk at the party for the U.S. economy. There's some risk. There's more inflation than people think, and that could be like a skunk at a party if that ever happens. Okay. It's the latest animal Diamond has invoked to talk about risks brewing in the financial system.
I'm pretty sure the people know the inflation number is a lot higher than the number that gets pumped out.
Sure, right.
I think the normies like us know it.
Those books are cooked, chat.
Yeah, it's not like Jamie Dimon is like telling me something I don't know.
Right.
But I appreciate the acknowledgement.
Thanks for the heads up.
Yeah, thanks for the heads up, brother.
Thanks, JD.
So, yeah, I mean, from the numbers that will come out, this move in oil is certainly going to affect that. I think.
Yeah, because that was the one.
Like
that was the one.
5% of
Yeah.
the number, 30%. Like oil.
I mean, this year it's gone from 55 to 75, just rounding on both sides. Yeah, it's a
And to be fair, one of the few bright spots that you do have to give credit to in any inflation report was like, yes, well, at least gas is cheap.
Yeah.
That was like at least something that we could say.
Yes.
And that does go directly to the consumer's pocketbook because if you buy gas weekly or monthly,
Right,
however
sure.
you travel, I mean,
I'm always just like, well, you can't eat gas, but at least gas was cheap.
yeah,
Right, which helps.
No,
which helps.
It would
yes.
save you money. We don't have that
I do
right now.
want to look at, because the Russell was so doing whatever the Russell was
Yeah.
doing yesterday, let's look at the bank like JP Morgan, JPM, what are the bank stocks doing?
They've been kind of on the weaker side. I mean, they bounced back a little bit yesterday. JP Morgan, Goldman Sachs was up. If you remember on Friday, Goldman Sachs had a huge move higher. It was at 920.
Yeah.
It basically reversed the whole move. And then, yesterday it was down $50, $60. So
Yes.
definitely getting hit a little bit.
Yeah, JP Morgan trading 293. It closed at 297, back near the lower end of its range. Same thing with the market. I mean, they've all been around the same.
Well, you guys were psychic. We don't talk about this before I do this, but Goldman traders see a painful path for U.S. stocks before rebound. Equities are going to need to pull back further before they can mount a durable advance. That's coming from Goldman Sachs trading desk yesterday, citing fragile sentiment and choppy flows. Again, you mentioned how much Goldman was down
Definitely
yesterday.
trust the words from the Goldman Sachs trading desk. Let me tell you, they're not going to use you as exit liquidity. No way.
They have their finger on the
Yes,
pulse.
they're a very omnipotent
Yes.
group of people there.
Okay. Hey, here's something interesting. Since 2020, the number of low and moderate income investors has increased 2.7 times, or 167%. Factors including increased access to investment information and additional cash through COVID stimulus packages have helped individuals in lower to moderate incomes invest.
It's great.
What a time. The year and it's gone. No, I'm just kidding. But no, it's great.
Yeah. No, I think this is a huge positive. I mean, and some of the stuff that is moving forward, like the Trump accounts and all the starting it early.
Sure,
is
absolutely.
So important, and with even if it's a small amount, is just a huge, just to have that in front of them.
I'm so proud of
But
you.
underlying, it also sort of proves the case for UBI. Like if you give people extra money, they will use it in a
Bottle service.
good way, right? But right? Okay.
Yeah.
Anyway. Hey, MongoDB had earnings yesterday, and they posted better than expected sales in Q4, but the stock dropped 24% anyway.
Yeah, $325 stock down to $230. Well, I mean, a humongous move in Mongo. Markets were not really
last
tradable.
year.
Yes.
Reversed a year of upside.
I mean, the open interest there was single digits pretty much on every line. I mean, this was a market that had, $90 bid at 98 kind of thing. This is nothing that we would be looking to trade. And that's why you got to trade liquid products. You can't go into this and think you see something that's there. It's not there.
That's a good tip. NVIDIA is going to invest $4 billion into photonics companies
Are they doing this again?
Coherent and Lumentum. It sounds like I'm doing a Harry Potter spell. Coherence, Lumentum. No, it's a tough room. NVIDIA is investing the combined $4 billion into the two photonics companies. Each company will receive $2 billion each from the chip giant as part of the strategic investment. Light is one of them, LITE, and COHR is the other. They're both down massively.
Yeah, I mean, Light, you say it's down massively. It's up of 4 or 5x in the last year.
Sure, down
So
this morning.
it's
Right.
down
Relative,
today.
yeah.
But these stocks they're kind of, we've gone from the semiconductors to the memory stocks to now we're going to like optical stocks here. We're kind of going down the chain of all the data.
But it's weird to me that like quantum hasn't caught a bid though. Like I'm just saying it seems like an outlier. Like if you want all these buzzwords, it's still no one
Quantum's
really
not
knows.
physical stuff. Like these are like cables and like.
If I shoot protons at you,
Don't shoot your
photons
proton
you.
at me.
If I shoot photons at you, yeah, like I don't know.
GLW is another one, Corning, where they're like they have the glass that is used.
Oh, I still remember the fiber optics being laid
fiber optics.
under the ocean when Corning went nuts.
Yeah, so they're like we're moving
Not
to
under the ocean, in
physical
the ocean.
stuff.
What are you guys doing in NVIDIA?
That's the more tradable product.
There it
down
is.
around $3.50 to 177 or trip sevens there. That's about as low as it's got down in the 172.
Yeah.
That's about as low as it's been in this big channel from around 170 and change to about 190 and change. NVIDIA, 23% IB rank, no earnings looming. Always one of the top stocks to trade.
Pretty good.
Yeah,
It's traded today.
Amazon's cloud unit, AWS, said yesterday that its facilities in the UAE and Bahrain were impacted by drone strikes amid Mideast conflict. That's not great.
What do you think?
I've got long delta in Amazon. It's a dog.
Amazon has been a dog. 203.
Dog with fleas. It
down around
you can't
$5.
catch a bid on anything.
You saying they need another Prime Day?
Something.
Well, it had a bid from 200 to about 210 or so, and it closed at 208 and
Yeah, it's been
change.
trading 210 for 5 years.
Amazon?
Yeah, go back 4 years. Do a year chart, 1 month. What was the trade?
Okay, yeah, all right. Well,
I'm like an elephant. I remember all these prices. All I do every day is watch these silly flashing lights. I know it all.
Amazon's been in the 230, 240 range.
That was the high
It was-
of this year.
from August to now, it's been around 230. Its low was 220. Its high was around 250. And now,
Nowhere.
relatively speaking, with the rest of the market, has been going sideways. Even the S&P down 116. Still 30 handles off of their lows, but still down 116. It's a big 1.75% move. NASDAQ is down over 2%. Russell's down 2.5%. Dow down 1.75%. Same as
Close all watertight doors.
Volatility getting bid.
Volatility 23. Its high is 23.50, up $2. It's a 10% move in volatility. Big move.
Mom, come pick me up. I'm scared.
Yeah, you should be.
CrowdStrike stock just got upgraded ahead of earnings, and analysts sees minimal risk to the company's guidance.
This guy will be fired.
And thinks shares have been overly punished by a broad sell-off in the software sector. A Piper Sandler analyst upgraded the stock yesterday. The company reports earnings after
He's
the
no
bell
longer
today.
with Piper Sandler anymore.
I miss Piper Jeffrey.
I know you do. Closed at 384. Looks like it's 374 right now, down about $10. I think more market related than
Sure.
obviously this upgrade. But again, just
What was up yesterday?
Yes, it was. It was
Yes.
up yesterday. It's been up the last 4 or 5 days in a row, from about 350 to about 380, where it closed, 385 or so where it closed. Now it's 370.
What are you going to do in CrowdStrike, Nikki?
I've got, I guess, some long delta here. I'm short a strangle in March. But I played it to the upside and took off a diagonal spread, which worked out well. I sold puts into the initial service stock down move, which CrowdStrike was at I sold the 350 puts and it was at 420, and it dropped all the way down to 340 within 4 days.
But you had a defined risk trade on you. It was a
Well, no, I sold puts into it too, so I had some pain. So now we're back. We're right where I need it to be. I'm short the 350, 430 strangle. It's basically a scratch right now. I have it on for $12. It's at I have it on for $12.70. It's at $14.70, so about $200 into earnings.
A $30 expected move in Crowd will probably go higher this morning when
Sure.
the option market.
Sure enough.
Not the greatest markets in there.
No.
No.
Yeah.
Apple is... Start over. Apple opened its week of product launches yesterday with a refreshed low-cost iPhone and a faster iPad Air. The headline device is the new iPhone 17e. It's a cheaper model in the iPhone 17 lineup. It starts at $599. Apple also updated the iPad Air, which keeps the same design and price, but moves from the M3 to M4 chip. My iPhone 13 now won't charge on the back anymore, so something like it.
You have to plug it in?
Yeah, you have to plug it in to charge. That's fine. I'm holding on.
That's how they
They're
get
just trying to make it obsolete for you. That's
I
all.
know.
They give you that kind of defect for the next couple months, and then middle of the summer or something else will go out a quarter of your.
I know, but I'm worried about how
On a nice
expensive
day in
phones are
Chicago,
going to
too.
be.
They can pinpoint it
Yeah,
for
they
a nice
pinpoint
day.
the perfect.
I know, but phones are going to get the most expensive ever because of the whole memory chip thing. I don't. What are you doing in Apple?
262 in Apple. You want to say Apple's gone nowhere for quite some time?
Yes. No.
Okay. So from
Apple's new
280
highs.
to 250 or so?
Yeah.
Sitting at
last year it was at 220.
Yes.
Yeah.
Yes, in the middle of the year.
The whole year while everything was going.
Yep, it was an underperformer as the market was rallying.
Yeah.
And it's been an overperformer here, kind of keeping the market a little bit higher. But again, $2 today, smallish move relative to the rest of the market so far and everything else that we've talked about.
I just bought a little bit of NASDAQ here.
Okay.
A little bit of the
nibbling
NASDAQ.
on the long side. NASDAQ, you bought it at 24,483.
Just to see if we get a little bounce.
It's been about 100 points lower, just to put it in perspective, NASDAQ.
Today it was? No. In the overnight session? Yeah, in the overnight session. Okay, yeah.
Down to 370.
Since this morning, this is
Not since this morning, it's been this about as low.
Yeah,
Same thing with the E-mini S&Ps are on their lows, but they've been about 30 handles lower than that.
Yeah. Cool.
Oh no, you're good. You're good. I don't know if you're familiar with something called the Streisand effect.
No.
And what it is? It's actually a really cool No, Barbara Streisand.
Yeah, Barbara.
Yeah, Barbara. Yeah, Barbara.
Brooklyn girl.
Barbara Streisand.
Oh, okay.
So this story first sort of falls into that. So first I'll explain the story and then I'll explain what the Streisand effect is. So Microsoft is banning the term microslop
They're banning it?
from its official Discord server in an effort to boost AI investments. Microsoft has integrated AI tools into every part of the company's operation. Of course, people hate it because we're just forced to use Microsoft products in a corporate environment. We're not choosing to use them. But anyway, on the Discord server, the pejorative has been banned from use in the community. But what happens is, I didn't even know that this was a thing. So the Streisand effect is she didn't want pictures of her house being available online, but she made such a stink about it, and there was a lawsuit that many more people searched for her house, and it was the most so by complaining about something, you are actually making it 10x worse because it was something that wasn't on the majority of people's radar. Yeah. And so now I'm just going to call everything microslop. Yeah.
I know.
Very mid-teen word. Slop, anything is slop.
Well, AI slop, slop bowls.
Yeah.
But get it Microsoft, microslop.
Yeah, no, I get it. I get why they want to ban it. Yeah.
Yeah, it's so funny though.
I know a family that I don't know who they know, but if you Google search their address, it is blurred.
You can blur your own address. Mm-hmm.
Can you do that?
Mm-hmm. So they're not Illuminati. There's settings in there. You could blur your address. Yep.
Oh.
What are you doing at Microsoft?
Actually, leaving a little long in there, right?
Shamefully.
390 down around
Painfully?
$7 this morning. Its low was 380. Its recent high was about 407.
We scalped out of those puts yesterday into that move. I took a lot of.
You took a lot of positions off?
I took off AMD. Did I get out of the Snowflake trade? I think I still have that one.
I don't think you
It was
did.
post earnings. Yeah.
That one didn't get hit. But Microsoft, we got out of the puts there. Scalped out of some AVGO. Palantir, we had some long delta in.
First 15
Robinhood,
trades were basically
XLE.
closing short positions that you had on.
Yeah, we sold some short delta in Oracle, which will help us today. So,
and you talk about why you're selling crude oil. I mean, it's as high as it's been since 2023.
Yeah.
So, I mean, when people are writing me in emails, why are you selling oil? They close the Strait and everything else.
The Strait of Hormuz.
It's just price. I mean, you know that. I know that.
Yeah.
I actually heard it was insurance companies that closed it.
Yeah.
But I don't know. Who knows?
Yeah. It's a we're at the
Yep.
tip.
There's not really a gate. Like you can't just like
No, there's not a
close it and
gate.
be like you shall not pass kind
Right,
of thing. Like
right.
you can't really do that on a 30-mile stretch of ocean.
SoFi stock rose yesterday as CEO Anthony Noto reacts to recent sell-off with a $1 million purchase. He already owns a SoFi stake worth around $215 million on paper. He's been known to buy the dip before. My question is he a long-lost Baldwin brother? What is open your eyes, my guy? What is like this?
You're that savage. You just talked about his
looks
body
like
shaming.
Stephen
I mean, come on.
Baldwin. Does he not look like? Where's the lie? Does he not look like a long-lost Baldwin brother?
Sure.
Like if you're the CEO of a Fortune 500 or whatever company, like this is your press photo. Open your eyes. We had a CEO who couldn't open his eyes. I said the same thing.
We just fixed it. We just fixed it in post. I mean, that's that's all you got to do. That's all you got to do. Yeah, SoFi got down to around just under $17.
Okay.
Closed at $18.40. It's about $18 right now.
So it worked.
It did work. It did work. SoFi has been a $30 company. It's been a $10, $11 company. So place your bets.
It's a cheap stock in terms of like the price of shares is $18. I think it's like a $20 or $30 billion company.
It seems to always be in the top
$22 billion
20 at Tastytrade.
It's a good trade. There's some volatility there, especially for a banking related stock. 77% implied volatility. I've been selling dollar options on both sides of the market here for like 2 years, and it's been it's been great because the stock's gone basically nowhere, but you've had some movement in both directions and some high volatility, so it's been good. So I'm long shares and short puts here, so I'm definitely leaning long, but if we do get a continuation, I can sell some calls here.
SoftBank's PayPay is targeting a valuation of $13.4 billion in a U.S. IPO, pressing ahead despite volatile markets and what could be among the largest U.S. listings by a Japanese firm. The U.S. IPO market started out the year on shaky footing with market swings prompting some companies to delay IPO plans, but PayPay says yay.
I don't know. PayPal might have something to say about this.
About PayPay?
Yeah, I mean, it's one letter. They switched the Y to the L to a Y. And
from payday. Yeah.
No, pay to
PayPal. I mean, sorry,
yeah.
payday loans. What I was thinking.
PayPay.
Yeah, I don't know.
Yeah, I don't know if I want to be a $13 billion company IPOing when you have SpaceX, Stripe, OpenAI, Anthropic. You have all these companies coming that are going to soak up liquidity.
Sure.
I might.
Yeah, but if they get ahead of it, like if that big event isn't coming till July, like like that's what Elon said he wanted to be in like July. So it's just like March now, maybe.
Yeah.
I don't know.
Yeah.
You do you, PayPay.
PayPal.
Hey, I will tell you this. The shenanigans I get up to over the weekend, I did do my taxes over the weekend. So, yeah. Got that out of the way. But your average tax refund is 10.2% bigger than last year. The latest IRS tax filing data shows that over 41 million returns have already been processed this year. The feds and the states, mine did get accepted because I owed money. So they're like, yeah, girl, we'll take that.
Yeah.
And so the average refund totaling $3,800. That's a 10% increase over the same week last year. I will say I did owe, because all things being equal, like relatively the same, whatever, I did owe $1,000 less this year to the feds, and I owed $100 less.
You should owe
to
money
the state.
every year because that means you're not letting them use your money for free. So
No, I like getting a big fat refund check.
Man, you don't want to. I remember having this conversation with you in years past.
No, I know, but I owed money. I don't know. I could get it wrong both ways. I'm telling you, I owed money, and I already paid the money.
You didn't pay the money, but all right. Yeah.
No, I did pay. I had to pay the federal government, and so I sent them the money. So I paid my
Right, but that's a good thing because they take money out of your paycheck every
When
week,
you're owed money, they've been essentially holding that money for a year.
Thanks, mansplainers. I get it, but I'm saying vibes-wise, it's better when a refund check hits the bank account than when you have to pay the federal government, especially right now when you're mad at the government.
All right, you give me $500 now. I'll give it back to you in July.
Yeah. All right. Fix my roads. Yeah.
No, Ashland is going to be another year minimum, I imagine. That one block stretch of road. It's
Oh, yeah.
Yeah.
for
I
some
know.
reason.
Yep.
Hey, public service announcement here. I'm out here doing the Lord's work. A manufacturer has recalled one of its chocolate male enhancement supplements
No.
due to an undeclared ingredient. The supplement, USALess.com's Rhino Choco VIP 10X, accidentally.
Let me check my recurring billing.
Here's the thing. It contains tadalafil, which if you know what that is, that's just straight up Cialis.
Yeah.
Oh,
So,
that's good.
yay, but you can't use it if you have high blood pressure or diabetes. So like it's bad. Like if you have comorbidities, as they say,
Yeah.
like underlying health conditions. But yay, because you just bought bootleg Cialis in a chocolate bar. What is happening?
No wonder it's 10 times stronger. As advertised.
Oh no. Yeah, so if you want to be a Rhino Choco 10X dude,
I wanted to be. Now
be
you
careful.
ruined the gig.
Yeah.
time, size,
But they'll be
stamina.
on sale now for you.
That's
So when you bulk order, they're going to be on sale for you. So it'll be fine.
It's just a scam anyway. I mean, you can get drugs now,
Well, it's not
even
if it
see
actually,
a doctor.
If it
Yeah,
actually
it's
has
Viagra.
Cialis
Yeah.
in
Not
it,
just
then that's
that,
not
anything.
a scam,
Like
right?
you can almost get anything by doing it from a remote doctor these days.
Yeah.
I mean, you can get all types of kits and stuff.
Oh, you're a man. Everything is available to you.
Yes.
It's not a problem.
We were born with a penis.
Yeah,
I mean,
you don't
that's
have to
why
fight-
we
you don't have
get
to
all these
fight the
things.
patriarchy.
Yes.
I don't know if you guys saw this clip that went viral, but it is wild. I don't know how they let this see daylight. But the McDonald's CEO, in the most cringeworthy social media video of all time, is trying to promote the Big Arch Burger because it's going to get released in the U.S. for a limited time starting today. So it's 2 quarter-pound beef patties surrounded by 3 slices of melted white cheddar cheese. But in the video of the taste test, he is taking like the tiniest little girl bites, and he's just making the craziest face. But I'm like, are you okay, sir? Like he's just like, it's so good.
Yeah. And also the phrasing was a little interesting. He was like, the product.
Right.
As if it's not like a
A burger, or it's not beef, or
like,
whatever.
Man, this burger is
Like the
freaking
whole,
awesome. He's
the
like,
whole thing.
This 100% pure
this
beef.
product, this thing that is in front
But
of
it's
you that is
so
edible.
weird having like all these CEOs that are like such a disconnect from like these iconic brands.
Yeah.
Like if you're the CEO of McDonald's, like you should want to friggin' house a hamburger.
Yeah.
Like
Yeah. Eat
Yeah,
3 of
they
them.
were trying to steal the ick from Burger King. I think here at McDonald's, that's what they were trying to do.
But also, it looks like his mom dressed him. Like, what are we doing? Like, he's like, hello, my name is Stuart.
That said, I will be trying this.
Not sure what the stock has done, though. I think this is.
It's been on its highs. It's off
yeah.
of it now, but it's trading around 332. Its high was 340. It started the year at 300. So it's been up a huge 10% this year, selling off just a little bit this morning, all things being equal.
He's like, I love this product. It's so good. I'm going to do a tasting right now. But I'm going to eat this for my lunch, just so you know.
Yeah. Okay.
Sure, my guy. Sure. Oh, my God. Hey, here's something that has happened. Mississippi is on a path to waive state income tax on athlete revenue share payments. Arkansas did it as well amid a pressurized recruiting environment within the SEC because the Big Ten is straight dominating. But they are like, hey, what if we had no tax on these NIL? To which then the state's police, fire, and teachers were like, what the hell? What are your thoughts on this?
I mean, it's an interesting angle. Is it really going to bring?
It's not
that much
official.
revenue?
Official.
Is like that. I guess the NIL is probably a decent amount of revenue, but it's like how many schools? Like Ole Miss is probably one of 2 or 3. Mississippi State probably the kids are getting paid there,
I have
but like
no
some
idea.
of the smaller schools,
I have no idea,
There's
yeah.
probably
Yeah,
only
no.
like 100 kids.
Sure.
total.
Yeah, it
You know,
seems like a little bit of posturing more.
Yeah, like I don't think this like really takes away from like tax revenues in the state.
Sure.
Like, yeah, sure. All right. So we're giving kids a couple dollars. I mean, they got to compete with like Alabama and all the other schools. So,
Yeah.
I don't know.
Okay.
I don't know either. It's a tough one.
There you go. Hey, finally today for my viral video of the day. Luckily, my job is not super stressful. Doing what I do. Sometimes I gotta break up.
Making fun of us.
Sometimes I gotta break up these father-son fights and stuff like that. But
Therapy.
overall, my job is pretty chill. I cannot say the same for this lady. Just a regular day at the office. Watch this.
What do you think? What do you think? Oh, he wants a squid or he wants some? Hey, no, legitimately no. Hey, babe, stop. You too, stop. Okay,
Stop.
Go to the other side. There you go.
She's
There you
talking
go.
to it like it's a Labrador.
Someone gotta hold it together.
Sit, stay.
No.
What do you think? What do you think?
Yeah, I mean, God bless, lady.
Wow.
She's like, no.
I thought everything being down 2% in the equity world was a problem. That's a problem.
That's a real problem.
That's a real life problem.
Yeah.
Well, we're going to take a quick 90-second break and come back. We're going to go over the market and a lot more in about 90 seconds. We got confirm and send. We've got market talk. We'll be back in 90 seconds with Tasty Live. Looks like a different market than yesterday. We'll be back in 90 seconds.
Okay, it does look.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
When the market moves, traders need to move faster. Tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tastytrade.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Nikki, we are back, son, and we've got a little confirm and send on this Tuesday, March 3rd, which I think a lot of people are going to remember this date for some time. E-mini S&Ps are down 120 handles. 1.75% move. You can see the E-mini S&Ps are about as low as they've been, maybe even a little bit lower than where they were when we were back on February 6th, when our low was 67.51. We got down to 67.42. If you go back to February 6th to see what volatility was doing, February 6th volatility was closer to, well, on the highs, it was 21.57. We're at 23.05. I know you just sold some volatility futures at 23. Small. Yes.
Micros.
Micros using /VX, right? VXM /VXM. When you put that up there, it goes right to the front month, which is H. You can see they got as high as 23.50. They're 23.03 right now. So you sold volatility. It's a bullish trade. You bought some NASDAQ at 483, right where it's trading.
Small as well.
Small, yeah, small.
I'm not full.
No, but I'm just saying it's all on the same side. A little bit of buy the dip, kind of like what we were doing yesterday, although we haven't had any really bounce back in the market. When I woke up this morning, the S&Ps were down around 120 where they are now. They rallied down to about 85 and have come back down subsequently to where they were right off of their lows. Russell, definitely the weakest of the group. You had some short delta in there, which you covered nicely, a little 2% move in there. You covered them just right about where they are right now, just under 2,600. They're 2,590. Dow down 800 and change, in line with the E-mini S&Ps, about a 1.75% move. Big moves across the market. Bonds down 23, 116.23. That's about as low as they've been. I mean, it was just yesterday they traded 119. That's a $2,000+ move in the big bond future. Bitcoin hanging out at 67,000. I'll round up here. Traded down to 65, up to 68. Big move in Bitcoin, down around 1.5% right now. Ethereum doing a little bit worse. Remember, yesterday traded over 2,000, 1950 right now in Ethereum. I'm talking about the Ethereum futures and the cash. Oil, there it is. You're short at right around 76. It's right there, 76.10. Got up to 77.5, got down to 70. It's about as high as it's been since September of 2023. My Korean and Taiwanese sources tell me. Gold down $150. That's an almost 3% move. Silver a little over a 7% move, down $6.38 back to 82. Net gas finally catching a bit. I know we've got a lot of net gas buyers the last couple of days waiting for this big rally, and you do have a big rally up almost 6% to 312. On the earnings front, which are going to take a back seat, nobody's going to care about earnings when you've got markets moving, like I was saying, 8 to 2% across the board here. Target is higher by about $3. That's about where it's been all day. And BBY was up around $8 earlier. It's up around $5 right now.
MongoDB was after the close yesterday. It's down 90 and change.
Untradable market there, but $90 is definitely a big move. 236 and change.
ASTS is another one.
Not familiar with it.
AST Space Mobile.
Don't know it.
Kind of hot right now. Space,
the
Rocket Labs, SpaceX coming. So I know some people trading that. That's basically unchanged here on after earnings.
Very good. What do you think about this market? I mean, I know you've been trading it from what's been working. I mean, that's what you're going back to, right? You're going back to the well here. Every sell-off has been met. This is one of the bigger sell-offs that we've done. You've been nibbling.
But we've traded from the short side too. I mean, I'm just.
Oh no! You've
trading
done
around the moves in the market. I haven't been like.
I should have rephrased that. From the future side, which is the only thing that's opening right now, you've been trading it a little bit from the long side.
Yeah. This morning, it doesn't. To be completely honest, it doesn't feel as good as it felt Monday. Monday felt. Yeah, as in yesterday, felt a little bit easier.
What a difference
in
a day
my own
makes.
opinion to buy the dip. This one doesn't feel as good, but I think it goes down to size. You got to size them appropriately, and I'm pretty small here, and
volatility's been as high as it's been. The market's been as low as it's been. I'll give you the other side of the coin, and I do agree with you. It does seem like an unchanged market, which we got to yesterday, basically. Speaking amongst friends, seems a lot less in the cards right now than it did yesterday. In my opinion,
shocked at a full reversal like we had yesterday. I don't think that's in the cards.
Which is surprising because that's what we've had every other time we've been met with this kind of sell-off.
But we were also talking about if we were to get like kind of that washout yesterday, that would have been the time to go. Now I think you kind of
going through a weekend
got everybody kind of caught in the up move now. So I feel like this is a little bit more dicey than a washout yesterday.
Yeah.
Like if we were down 150 yesterday, it would have felt a little bit easier to buy that dip.
Yeah.
Now, if we're down to 150, 200, it's going to feel like there's going to be more of that through the rest of the week, just because we had the kind of we had the buy the dip. Everybody's like, okay, it's over, it's done.
You caught a lot of people with this move.
With this move,
right?
Which
on Friday you more than likely had people buttoning up positions.
Yeah, into the
little bit of delta
hedging, you had volatility going higher. Like it felt like people were hedged for what was going to happen over the weekend. Like it wasn't a shock. And then Monday, you want to see that kind of wash out of the weak hands, and then you can buy that dip, and that's fine.
Yep. Other side of the coin, and this is the way I'll be looking at it, the way you've been trading the futures right now. I think volatility futures at 23 here, about as high as they've been. Certainly could go higher. Nobody has a crystal ball, but let's watch the volatility futures as the market moves too. If the market continues to sell off and volatility does not catch itself a bit, I think volatility leads a little bit here.
Yeah.
Maybe you get a little bit of a pushback, a little bit of a bounce back in the market.
But we did button up a lot of positions yesterday. So, I mean, I took off.
Yeah, you have powder dry. You took off a lot of.
I took off probably 20% of like my buying power that I had out there because a lot of those positions were naked. I had the naked puts in Microsoft, naked puts, or the strangle in AMD. Palantir were call diagonals. So that was taking off some long delta into that move yesterday. We scalped around some positions. XLE, we took off some delta there. Those were naked positions. I sold some puts into gold and silver, which aren't going to help me today, but I have net short delta there, so that'll help. And I'm short volatility as well. Sold some calls against NVIDIA. I had call diagonals. NVIDIA was up, $5, $6, $7. That's going to hedge me a little bit. So, sold the calls against Oracle. So I got a little bit of short delta into stuff that was moving higher and took off a little bit of long delta and took off buying power and just general risk.
Yeah.
That I feel pretty good today.
Well, good. Well, we'll put that money to use. Let's get to confirm and send Tuesday, March 3rd. Your viewer emails. Let's see what you had to say. Is it possible to roll out an iron condor in time as a package on the platform? I believe they're talking about 8 legs here. I see that I can roll out in time each spread separately, doing 4 legs, but not together. What do you think?
So you can't do them all together. You can't go 4 close, 4 open, because you
can't do an 8-legged spread.
Yeah, you can only route 4 legs in each transaction, in a single transaction. So you can't do that, and that's just like an exchange thing. It's 4 legs. It's a limit on any order that is routed. If you are looking to roll these positions, the way that we typically do them is the tested side first, because that spread is going to move more so than the untested side. So that spread that's at the money is going to have more delta to it, more vol exposure, and it's going to move more than the far out of the money spread that might be marked at, pennies or much less relative to the tested side. So we're always rolling that first spread, the tested side. Now, if buying power is an issue, and it shouldn't be an issue because you're doing this, your buying power adjustment.
It's going to stay the same.
Well, no. When you roll the spread, you're going to have 2 spreads for a moment in time.
Yes.
So, like if you have $10 wide spread and you're rolling the call spread,
yes.
You're now going to have a call spread that's margined to $1,000.
Yes.
Put spread that's margined at $1,000.
As soon as you roll the other one.
As soon as you roll, it's going to adjust and give you back that buying power. If you don't have that buying power, which means you're probably using too much capital to begin with, you can buy the wings first and then just roll the straddle. That's another way. Those wings are going to cost you something, so that's
sure.
But that's another way to kind of get around it. But
you're getting pretty deep in the weeds there. I mean, on this, if you have that,
or you buy the untested side, the put, the short.
Right, but if you're that short on buying power, you should think about taking off some trades. Is the point I'm gonna make here. Meaning, if a roll of a $10 wide iron condor using $1,000 puts you in,
you're using too much capital.
Too much capital.
But if that is a problem, it's a bigger position, and you don't want to put up that capital, you can close out the untested side, and that'll free up that'll be a debit, but when you roll, it won't use any additional buying power.
Awesome. I totally agree with you. Can't do 8 legs. I agree with everything he said there. Usually at 6 of one, half dozen of another. I would rather do the spread that's bigger than the spread that's smaller, just because that's the one that's going to have more delta to it, even though there's no delta. Hopefully no delta on the overall trade, but sure. Totally agree with everything he said. Next one, please.
I always hear the expression risk on or risk off, and it confuses me. Could you please clarify it in simple terms what this means?
It confuses me too, because there's really no real way of knowing if risk on or risk off. But it's always been talked about if bonds go higher, that's a guaranteed yield on a product that's never defaulted, versus a stock market that's had market crashes.
Yeah.
I mean, so there's more risk in the stock market, and hopefully get paid more. So when things are good and you feel that taking on more risk, you should be in the market and not in bonds or any related product that has a yield to it. That would be like, a risk on trade. If you're looking for risk off, you're going to those products that are going to pay you a dividend. They're going to pay you a monthly quote unquote yield on your money. That's all it means. Now,
gold and silver get lumped into that too.
Sure.
But I think to your point, it's overall just kind of market awareness.
Yep.
Today feels like a risk off day.
Yep.
Just from the movements that are happening in the market, you have volatility expanding, you have markets down, you have gold down, Bitcoin down, bonds down. Like it feels like everybody's just like kind of like risk off. They don't want to, they
don't even want to be in the market.
Yeah, they're selling.
They don't want to be anywhere.
It's just like a general term. And so, when you have, markets moving in different directions, like if E-minis were up and bonds were up and gold's up, it kind of gives a mixed signal. Like, like it feels like, okay, yeah, it's risk on because they're buying risk assets, which are typically, your Bitcoins, your stocks, like those are risk assets. And then risk off assets are more like your gold and bonds. And so if everything's rallying, it's kind of like, hard to put a spin on it. But it's really just, I think, market awareness. And
I agree. It's just market awareness. I think that's the way to put it. Yeah. Next one, please. I think it's likely that volatility will contract quite a bit in the next week. Okay, well, you've got everything you've wanted with volatility that's highs right now. What do you think about selling front month / VX and then buying the back month just in case I'm wrong?
So you can't really do that. I mean, like you can do that, but it's not a covered position, and they're going to move vastly.
They're going to move independently of each other. Now, typically they move together. Typically, but you can't. It's not like a stock. If you have
it's not a covered.
It's not a covered position, like you just said. This
is how you blow up, because the problem is that front.
What is it? Back the ETF. Back the BTFU. You got to back up here. Yeah. This is not what you should be looking to do if you're looking to sell volatility here. This is one of the most dangerous things to do in volatility.
Yeah, you can't do this. I mean, the front volatility will move a lot more than back volatility. And so you could see a 15-point move in vol to 30 or 40, let's say, in a big move to the downside. And back month volatility might move 3, 4, 5 handles. Like, it's not the same sort of risk. And so it's not. If you're going to trade volatility, I would do small with VXM. I would trade, long the minis. That's the sort of like trade I would do. I would not be trying to overcomplicate it.
Totally agree with you. This looks good on paper. In practical applications, they do not move together. Mm-hmm. Try to avoid this. Next one, please.
Why don't you? I have a piece of ice from my coffee here. Why don't you utilize straddles more often based on the success of 0DT trades? Wouldn't it make more sense to sell straddles in the 45-day cycle as well, but just close more aggressively? So just manage them a little bit quicker.
Sure. I mean, sure. I mean, again, I mean, the probability of success is going to be what it is when you put it on, which is going to be a little over 60%, I would imagine, on what you're looking to do here, just doing it from memory. I have no problem with it, especially in the 0 day. As you're out at the end, it's cash settled. I'm assuming you're trading SPX here. It uses a lot of buying power, tens of thousands of dollars in buying power. Maybe that's not something that you looked at, and that's why we usually do it with a defined risk type trade. But if you have that kind of account, sure, go ahead. No problem.
I prefer strangles. They move a little bit quicker. I manage them.
Move a little bit. Straddles move a lot quicker than strangles.
From a percentage, like if you're looking for $100, it's going to be quicker on the strangle than it is straddle.
All things.
Straddle, you're going to have to hold. You have more delta risk.
Yeah.
But
it's on at 0 when you put it on. I mean, just similar.
Yeah, for the 0 DT, sure.
Cool. I mean, you could do either one. I mean, you could do what you like. I like to look at the strangle too. So
yes.
A little less risk, a little higher probability of success than the straddle. But we've done the research. Straddles work just as good. Is that the last one?
That's it. Yes.
Let's take a quick.
I'll put your star back there.
We'll take a quick 90-second break and come back. We got more Tasty Live as even the S&Ps make new lows since we've been on the show, about 20 handles off of the lows that they made last night. We'll be back in 90 seconds. Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Global markets never sleep. Explore them with Forex on Tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tastytrade.
It's option jive. That's right, son. It is time for an option jive. Go. Volatilities of put spreads and call spreads.
Yes.
Oof.
What do you think?
Near 0, depending on how tight they are?
That is true. From a P&L standpoint.
Oh. Measured by risk that you're taking?
Swings in P&L.
3 times your gain.
No, I mean, like, which side do you think is more volatile from a P&L standpoint?
Oh,
On SPY.
probably call spreads just because we've gone higher.
Selling for cheaper. And
Is trade cheaper because of put skew?
put skew means that your spread is going to be a meteor spread, all else being equal.
Yeah.
So, and the volatility is typically to the downside. So when something happens, those spreads don't move all.
They're going to be close. The call spread's going to be closer to at the money than
Yeah, that too.
spreads. I think is really what it comes down to.
So, due to rising uncertainties, market uncertainties, many traders might opt for the risk-defined strategies such as an iron condor, put or call spreads. These strategies offer clear understanding of their potential losses. So typically, we look to sell somewhere around the 30 delta, 20 to 30-ish delta is where our shorts are typically placed. Your spread width can depend on what your risk tolerance is, how much capital you have. If you do a $1 wide spread and you're selling the 30 delta option, you're typically going to get about 1/3 the width of strikes. For $1, for a $5, for a $10, it's all kind of the same across the board here. If you're using around that 30 delta, and when we're talking about 1/3 the width of strikes, it's relative to the stock or ETF price. So if you're looking at SPY that trades at $600 and some odd dollars, going $10 wide from the 30 delta, you're always going to collect around $3. It's going to be 1/3 the width of strikes. If you go to like a SoFi, where we were talking about earlier this morning, and you go $10 wide, those options, those 10-point options, relative to what SPY would be, SPY price would be 100 points wide. So like you have to take the width relative to the stock price. A $1 wide spread in SoFi is going to trade for probably 1/3 the width of strikes. It's going to be the same thing as like a $10 wide in SPY relative to the actual stock price. So here you can see just like relatively what you'll collect on each one of those spreads. If you're selling around a 30 delta for each of those options. So unlike naked puts, which are more expensive due to the put skew and indices, call spreads actually collect about 50% more premium than put spreads. So typically when you're trading on the put side, you're going to have when you're talking about the width of the spread, your put spread is going to be cheaper because the long option is going to be a higher delta. So when you're looking at these spreads, your long option on the call side, if you're going to the 30 delta for the put and the call, the short options, you're going $10 for the width, your $10 option on the call side might be a 15 delta, whereas on the put side, it's going to be a 25 delta, 27 delta, something like that. So the spreads trade a little bit cheaper. And here's just a breakdown of what your spreads will trade at relative to the width of the spread. It's still going to be somewhere around, 1/3 the width of the strikes. It's also going to depend on the duration, right? If you're 40 to 50 days out in time, it's going to be much closer to 1/3, if not a little bit more than 1/3. Whereas if you're 30 days to go till expiration, it might be close to like 25% of the width. It's all relative to time as well, and volatility changes in volatility.
Well said.
So how do the volatility in both spreads perform differently? The two questions we're going to answer is, since volatility tends to increase when the market goes down, does that mean that the volatility is higher in the put spread? Does the tight spread have better volatility control? Does this imply that a $1 wide spread has a lower volatility than a $5 or $10 wide spread? What do you think of either of these questions?
The tighter the spread, the less of any of this you're going to get.
Correct.
So that's how you mitigate risk and just make it a directional bias trade. Now, this could be neutral, it could be bullish, it could be bearish if you do both sides, one a little bit closer, one a little bit further away. But the tighter the spread, and it's going to be minimal also, even though you go wider in a $10 wide.
For something like SPY, the 1, 5, and 10 are not that much different.
Right.
I mean, you don't have much exposure to any of the Greeks. We've used the phrase that they're like kind of binary trades in that, you do have some theta decay, you do have some short volatility, but for the most part, you're playing for a range bound trade. The binary aspect of the trade is that the options are out of the money relative to the stock over the next 20 some odd days. Mm-hmm. That's really what you are trading. Your exposure to volatility and time and all the other things that we kind of talk about are going to be much lesser. Now, to use the example of like a SoFi, you're doing a $10 wide spread in SoFi, you're synthetically naked.
You are.
You're selling the put that is a 30 or 40 delta, and you're buying a put that might be a 2 delta if you're going $10 wide, maybe even less. Might be a penny option, basically. So it's all relative to the stock price. And so the comparison we're going to make here is we use the same buying power for different wing sizes. So we sold a 30 delta naked SPY put and call, and then bought $1, $5, and $10 wide wings. So we're selling the 30 delta options. We're going $1, $5, and $10 wide. And then we're going to do our standard 45 days, and then we're going to manage at 21 days.
Classic mechanics here is what you're really looking at.
Yeah. And so when you look at these options, and I know we're going to be talking about the volatility in the call spread versus the put spread, and this is very, very small, but the data is going to show us. So contrary to our assumptions, the call spread actually has a higher volatility in all three of these scenarios. And this shouldn't be a shock to you because the long option that you're buying on the call spread, whether it's $1, $5, or $10 wide, is going to be a lesser delta than the volatility in your long option. The short options are going to be the same. But when you're going equal width, you're not playing into skew. So if you wanted to make a real delta neutral trade, you'd have to go to the same delta for the long options. That's what you're seeing here, which is we call that a dynamic iron condor, because you'll have different widths on either side, and that's because that plays into skew. When you go equal width in something like a SPY or the Qs, you're actually going to be short delta, even though you have the same risk on either side. And that's because the drop off on the call side is much steeper than the put side. The skew is on the put side. Something like a gold or silver, you see that flipped. So here, narrow spreads have the greatest volatility just from a P&L standpoint, and the wider spreads, the lower the volatility here. And that's just because the spreads are they're not as binary as your $1 wide options. When you're managing positions across the board, you are changing your P&L volatility, your return on capital volatility, and this is just relative to the position itself. You're tightening that up significantly. This is across the board on basically any study that we've ever done, is that managing winning trades, managing at 21, it's all a function of reducing, it's all done for the purpose of reducing the P&L volatility across the board. Whether you're trading $1, $5, $10 wide spreads, you reduce the overall P&L volatility in all circumstances. And that's really why we're managing these trades.
That is correct.
Couple takeaways for you. The premium for the call spread is approximately 50% higher than the put spread. This is because you're getting a little bit of short delta on these trades overall. Spreads with narrow wings may reduce the risk per unit, but the return on capital volatility is actually higher. And that's because you net out to full losers on your losing trades. When you have a $1 wide spread, there's no variable there. When you have a $10 wide spread, you have a $3 buffer to where you might have a scratch trade. With a $1 wide spread, it's pretty much max profit, max loss. That's it. It's binary outcomes.
100%.
Managing at 21 days can reduce your P&L volatility.
Little rally in the NASDAQ.
Yeah, I took off half the NASDAQ. 50,
Very nice.
50 points.
Very nice.
Managing at 21 days can reduce P&L volatility by about 50%. It's a positive for you. It reduces both the upside P&L and the downside P&L by 50%. It makes it more consistent. And when you do this for a long time, you want stair step. You want this stair step, stair step, stair. You don't want big wide, big up, go to zero. Big up, go to zero. That doesn't work.
No. And
it's small,
not good for your psyche either.
That too.
Good job out of you. We're going to take a quick 90-second break and come back. We've got more Tasty Live. You know what comes up next? The moment we've been waiting for, the opening bell. You mean the S&P is down
an interesting one.
115. NASDAQ just rallied about 50 handles off of its lows, and that's where you just sold about 50% of your position. We'll be back in 90 seconds. Tasty Live, just from your little scalp.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Global markets never sleep. Explore them with Forex on Tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell imminent here in about 2.5 minutes. Even the S&P's down 115. Almost seems like they're up on the day. They rallied about 10 handles off of the lows that we've seen since we've been on the show. Still about 30 handles off of their lows from last night, down about 1 5/8%. NASDAQ down a little over 2%, down 500 off of its lows of 370. That's 24,370. It was just last night we were 25,000, if you can believe that. We've had a 600 and change point move in the NASDAQ. Russell down 71. That's your weakest of the group. You actually covered some short Russell this morning. Good job out of you. Dow down 900 and volatility hanging in their bid at just under 23. We sold 23, up $2 right now. That's an almost 10% move in volatility. Bonds, big movement in every market. We're going to get to the rest of them in just a quick second. But bonds 119 on the highs, now down to 116.22. Bitcoin hanging in there, down only 800, a 1% move. Seems like a 1% move is a small move these days across the board in any type of product. That's why the volatility is so high. Ethereum down $30, a 1.5% move. It was about $30 low in that just a moment ago, so it's cut its losses by about 50%. Oil trading 77.46. That's about as high as it's been, as we've been talking about since 2023. 77.52, up $6 and 30 some odd cents. Oil down, and we're out $1 or so on some of those futures. Gold down around $150. Silver up $6 and down $6 and change. That's a 7.5% move versus a 3% move. That gold silver ratio spread that we've talked about so many times that we were buying in the 55 handle, now trade up to 65. I think maybe if it goes, it's trading 62 now. If it trades around 65 again, maybe you trade it from the other side a little bit. Maybe we look at buying silver and selling gold.
That's the more volatile side, is the silver side.
Oof, is it ever? Yeah, you're
kind of buying, like you're
just trading silver. I mean,
more
with a little bit of
silver with a hedge.
Yeah, silver with a hedge.
That's what it is. Not really a pair. It's like you're trading silver, but not.
It's not as bad as doing the volatility that the emailer wrote in. But it is one that moves not independent of each other,
Yeah.
but it certainly can say decoupled
Yes.
for a long time. Let's see what's moving this market across the board here. When we go to, I'll go to the high option volume list and see what's there. MDB, of course, is going to be there. That's for earnings. NASDAQ, you just sold some more out. I think that cleans you up from your from your NASDAQ futures from this morning. NASDAQ down 480. Let's see what else is moving here. MDB down about $90. SanDisk down around $30. MU down around $30. These are big moves. TSM down about $20. 5% move there. Gold down $18. That's going to reflect /GC, of course. BE down $13. Interesting stock trading 152 in the middle of its most recent range. Even the S&P's down 105, catching a little bit of a bid here. AVGO down $10. Tesla down $8. Tesla always
should have held my NASDAQ. I could have been somebody.
You could have been a hero. I think you did a hero enough. You did a good job there. USO up around $6 with oil being higher. Target for earnings up around $3. Not your usual suspects to the upside here. Netflix up 45 cents. That's your one loaner there. Good job out of you.
Yeah, I was thinking maybe I get back into that Microsoft. Oh, Microsoft has reversed its whole move.
Microsoft MSFT is down 90 cents. What a resilient market here on some of the pigs, right? Some of these stocks that have not cooperated with the market. Some of the stocks that have gone parabolic are taking on the chin.
Sorry, that's not me.
No worries.
That's me. Microsoft. I'm doing the 375 puts again.
Trade down to 393, almost up to 398 where it sits right now. Microsoft, you sold.
I sold the puts out that I closed yesterday. I sold them at 820, closed them at 720, and then I just sold them out again at 820.
Awesome. I was able to push your Microsoft through.
That worked. All right.
And you got your MNQ there, your sale at 538, also in there. So you got the close scalp on that 100%. So good job out of you.
What do we got here?
/VX down about a quarter from where we sold it, as the S&Ps have rallied about 10 handles or so, but still down significantly across the board on this market so far. Orderly sell-off?
Yeah, I would say so.
Yeah, I would say so.
I
would say so too.
Palantir's reversed the move too.
Yeah, PLTR had a big move yesterday to the upside. Palantir opened around 141, 142, let's just call it there. It's 146. It's now up about a buck. It was 50 cents to a buck. It was down around $3 or $4. Interesting all around here as we take a look at the market. Oil under 77 now, back to 76.95.
I have these put diagonals that I put on in the diamonds and SPY. I think I'm going to take half of them off, but it's a hard decision because I have the in SPY I have the 660 puts in March that are.
Well, I think the diamonds are an easier pull than the SPY. Diamonds are making new lows. That's the Dow, right? Recent new lows. I mean, it's been the strongest of the group, one of the stronger of the groups, all things being relative and equal.
Yeah, that's right at the money too. All right, I'm going to take half that off.
What do you think about your overall? I mean, all things. You don't have any outlier moves here.
No.
Like in any of your, I'm not just talking about a daily P&L. You got a little bit of a red P&L in oil.
Yeah. Oil.
You got a little positive in IWM. You know what I mean? Like, you've got a nice positive in silver. You've got a big move in silver down to 73.5. I'm talking about SLV here. Silver volatility percolating the last couple of days. You were short a tight 70, 75 strangle here with silver now 74, down $8. You had a little bit of short delta coming in. Now you're probably a little bit, more neutral in there. And they're leaving you a couple of dollars in silver. Your SPX trade that you put on there, that's stupid, moving a little bit there, or what'd you call it? Not stupid.
Super Bowl.
Super Bowl with SPX.
Won't call anybody stupid anymore.
Of course not.
Never,
ever. With SPX going lower.
Yeah, the move in volatility is mitigating some of the short delta.
Oh yeah,
from yesterday. Like even those. So those NVIDIA calls, the 200 strike calls I sold yesterday, they've moved from like 170 to 130.
Yes.
Like you expect on a $4 or $5 down move, they probably move, 50% with 17 days.
Sure.
2 weeks to go into much higher prices. You would think that, there would be a bigger move there, but it's not.
SPY low 174. I mean, we haven't seen 174 since December of last year. I'm sorry, 674 in SPY since December. So new recent lows in SPY. Even the S&P's down 114. Volatility back to 23.
That's just taking off some calls from. I have a call diagonal and we're short the put, so I took off some short delta into this move. I just bought back a call that was trading at $1.
And you.
It was part of a crab trade. It was like, it's just all tail risk.
Right.
You have a dollar off.
And you closed your diamonds, right?
Yes. Took the diamonds off. That was a good one. I'm still holding the diagonal spreads in SPY and IWM. Because I got a little bit more room to the downside. The diamonds move was really the biggest.
Yep. Even the S&P down 103, volatility in by about 25 cents to 22.60 and change.
Today you're gonna have some two-sided action.
Keep your powder dry. You certainly are. Yep.
Is that you?
No, not me.
I don't know. I'm having some funkiness.
Even the S&P's down 102. Let's take a look at that mover board from the downside here across the board. MDB for earnings down $93, still there. SanDisk also still there, down around 38, about $9 off its lows. MU about $10 off its lows, still down 27. BE about $2 off its lows. Gold down 20. GLD down $20 to 469. Tesla down $10, only about $1 off of its lows.
Tesla hasn't gone. I mean, like volatility in Tesla is so
low. Yeah, it's just a directional.
It's bizarre to me that that's like been on the top of the list.
And it always is.
In the Tastytrade symbols.
Yeah. Well, you know what? It's had some two-sided action, stair-stepping lower, obviously here. I mean, I'm not being a genius by saying that just because near the low end of its range, but it's had good two-sided action daily. So I guess you've been able to. If you trade it, you can trade it well. Buying dips, selling rallies. You haven't gotten tested on either side really too much. And the S&Ps.
Buy the dip here. They just rallied them 150 points.
On NASDAQ.
On the NASDAQ.
Yeah, even the S&Ps rallied about 10 handles, yes.
I think the NASDAQ is where you can scoopy.
Well, the Russell's definitely the weakest of the group, down almost 3%.
As foretold.
As foretold from yesterday, yes. I like it when the NASDAQ and the even the S&Ps, as I've said repeatedly, holds up the market as opposed to the Russell. But you still need the Russell to cooperate too.
All right, that's the rest of the diamonds.
That's the 480, 495. You're closing it.
I bought them. I'm sorry, at 588, and then we closed them at 10.
So. 10, 15, 10, 20.
Yeah,
that's a great trade. Very nice trade. That's your diagonal coming to roost here. You got to get the direction right, which you did, obviously. Yes. And you also have to get have to put it on. So you did good there on both of those. Let's take a look at silver one more time. Trading at hold on a second. What's silver here? Silver down almost 8% to 81.8. About $2-3 off its lows. Gold still continues to be weak. Oil hanging in there at 77, up almost $6, 77.10.
I just sold a put against I have a 1x2 crab trade in Dell into earnings. Earnings were just face ripper to the upside. Stock's down a couple today. I just sold the put out, so I'm short premium in the 17-day, and I've got an in the money call, the 125 out in April. So I'm neutral delta here. Is pretty much where I'm at. If you look at my delta, it's basically flat. I mean, I'm like short like 20 to 30 deltas here overall on the position, but I have the 2 in the money calls.
Got it. Even the S&P's hanging out here in about a $10, $15 range. We're in the middle of that range right now. Even the S&P 67.78.
I just closed the EWI call. So I'm short the 120 puts in EWI into this move. I'm basically a scratch on the trade. We did this strangle last week for a what's your assumption, I think. Took a little
down $17, a 12% move. This is South Korea.
Took a little heat on the upside.
You sure did.
So I'm basically a scratch into this move. I need a little bit of a bounce and a vol crush. That would be nice.
That's all you need. You're not asking for much.
Yeah, still out of the money. I mean, if we go lower, I'll sell out a closer.
Well, you got 100% implied volatility. That's how on a 10% move, you're still out of the money.
Yes.
If volatility was half that, you'd be in the money.
Yes.
Even the S&P is down 111. Volatility hanging in there at 23, up $2.05. Oil still bid. Not out of the woods yet, son.
No.
Stay nimble.
I mean, yesterday we talked about too. You're going to have 40 or 50 point ranges today, like within minutes.
Yeah.
Like you should expect.
Expect the unexpected.
Well, no, you buy NASDAQ and it could go 40 points against you in the next 3 minutes. That is.
You are correct. You are correct.
That's part of the game.
That is part of the game. Are you ready to take a quick 90-second break?
Sure. I don't have I wish I had more to do. I'm kind of like.
Well, like I said, your overall P&L with a slight. What do you have? Pretty flat here on your.
I'm flat. I have nothing.
Yeah, it's really just a volatility move. I mean,
volatility is the reason I'm not taking stuff off.
We haven't had the opportunity to take stuff off. Even if you had a little bit of delta that played into that way, volatility expanded so much. That's why the plays that you made, like in the diamonds, that were long volatility.
Yeah, that was long volatility. Yes, but I took those off. Those were long volatility.
That's why you were able to take those off.
Short delta. That's where my delta has come from today. It's taking off like positions like that.
Yep.
And I still have some of them in like SPY and IWM as well.
Very good.
You know what? I'm going to do something in the queue.
IWM, Russell down 3%. Big move there. NASDAQ down almost 2% now. Even the S&P is down near the low end of their range since we've been open. Volatility 23.20, catching a bid. So we were under 23 there, saying we're not out of the woods yet. Kind of coming to fruition here. We'll see what the rest of the market does today.
I might do like a one by. I want to take in some of this upside vol.
In what?
Like on the call side, in something like the Qs. Like I'm thinking of doing like buying the 600 in April and selling like 3 of the 620s in March.
March with 17 days, you're really going pretty tight there, right?
Pretty tight, but it's a vol play because you've got a 3 or 4 point vol differential between April and March.
Yeah,
it's minimal risk to the downside. So like if we fall out of bed, this position might move a couple dollars. But if you get like a little bit of a bounce and a vol contraction, this thing is a
Sure. You're selling shorter front month vol at a higher vol, and you're buying back month vol, and you're doing it on a ratio spread.
Yeah. And it's basically at the start is going to be essentially delta neutral.
Right. And if volatility contracts, you'll be long.
Yeah, on a because
it's net long.
Yeah, you're buying a 50 delta ish, 45, 50, and then you're selling 3.
Selling premium.
Yeah, you're selling 320 deltas, so you're actually slightly short delta.
Yes.
Start. But if you get a vol contraction and a little bit of a bounce, you'll flip from flat delta to long 20 deltas.
Yep.
I like that. Should we buy a little NASDAQ here? Should we get back in?
Even the S&P.
We go down. If we go, look at the Dow.
Dow down 1,000.
Let's see what's moving.
Dow making new lows here at 47.9.
So you can actually pull up the Dow. I can pull it up for you. I'll show you.
DIA?
No, the Dow components.
Oh, sure.
So we have a watch list here. If you go to market indices, Dow Jones here, so you can see what's moving, and it's actually cap weighted. So the bigger stocks have a bigger effect on the index itself. So CAT being down 36 points, almost 5%. Goldman Sachs is in there. Sherwin-Williams is another big one. Boeing is another big one in here. Like all the big stocks, the big boy stocks in here getting killed, which is why the Dow is, the Dow and the Russell too. Wish I held that Russell short.
Dow down over 2%, Russell down over 3%, NASDAQ now down 2%, and even the S&P is now down 2%, about 10 handles off the lows of 133. Bonds hanging in there down 23. Oil hanging in there at 77 near its highs, just off of it. Gold just sold off by about $100, down 244, and silver down $9. It's a big 10% move in gold and silver. The gold-silver ratio spread back to 63 and a half. But now the gold bugs are going to say what's going on in the market here too.
I'm going to do a little 1x3 in SPY too.
Okay. Same type of trade that you just made. Yeah. Okay. You did it for about a 676 debit.
It is a little bit capital intensive, but the risk to the downside.
But you're doing it in SPY, which is smaller than an SPX. So you're doing it in the smaller price. I guess you could do that in XSP if you want to get really small.
Yeah.
But I think SPY is where you should be leaning. Do
you get long NASDAQ or Russell?
I think the lows are in, son.
I think so too. This is what we wanted to see yesterday.
This is what we wanted to see yesterday for a healthier market. I agree with you. I agree with you.
Volatility is expanding though.
Volatility 23.16 now after going back to its highs. Even the S&P is back to its lows from last night.
Micro volatility.
/ VXM.
So if the low's in, how do you play it? Is the question I'm asking.
It is.
I kind of agree. I think this is kind of a spot. So what do you think?
I think it's going to be 6 of one, half dozen of another here. I think you'll probably have more opportunity to trade it if you're doing ES and NASDAQ than if you're doing volatility. I think volatility won't come in as much as the market will go higher if we get a rally. That's a big if.
So you think volatility will kind of stay bid?
I think volatility is going to stay bid. It stayed bid all day yesterday. It stayed all bid all last night.
I agree. All right, I'm gonna buy a little bit of NASDAQ, a little bit of the E-minis. I mean, they're both long, obviously. Smaller, I'm probably about 25% of my size. And the plan is to scalp these a little bit. If we go lower,
that's the plan. The plan was to scalp the Russell yesterday too. We had to wait till today.
Yeah, but Russell stayed at highs. I sold basically the highs. We didn't get. It wasn't like I held a bag.
No, it wasn't. But you didn't have any opportunity. You had an opportunity to scratch and make $1 or $2. Basically nothing yesterday.
Yeah.
I mean, we got that email from Confirm and Send saying, how long do you hold these scalps for? I mean, sometimes they're a little bit longer if your conviction hasn't changed. All right, let's take a quick 90-second break.
Wait. Before we go.
Yeah, sure.
Let's do something in gold and silver out in April. I'm already in March.
Volatility staying bid here, 23 and a half.
What do you think about just like a wide strangle in both these? GLD and SLV. You could do we'll do like the 425
GLD
525.
Okie dokie.
And then we'll do like a similar like 20 delta-ish in silver out in April.
Silver down almost 10%, gold down almost 5%.
Yeah. So I'll do the 60 100. I kind of want to sell a little extra juice. I'm going to do this 1x2 in silver. Selling
some upside skew?
Yeah. Okay. All right.
Ooh, volatility futures say we're not done yet.
Not done yet.
Well, you know what? We've got a segment that says, let me explain.
Yes.
Okay, because I need some explaining here. We're going to get my man Chris to come in here and explain it to me. We'll be back in 90 seconds. We're going to play good cop, bad cop. We'll be back in 90 seconds. Tasty Live. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tastytrade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
We built Tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tastytrade.
Nikki, we are back, son, and you know what that means. The voice of reason is in the room. Let me explain with Chris Vecchio. Chris, explain this to me. Even the S&P is down 2%, NASDAQ down 2%.
Help!
Russell down 3.5%, Dow down 2%, volatility 23.45. I say the low is in right here. What say you?
From your lips to God's ears.
Yes.
Oh no! If we're smoking hopium, then I gotta revise my call here a little bit. Then we gotta have. So is there pain in the streets?
There's pain in my streets, at least. Not the least because the streets are closed again because of snow. And so the kids are home from school, which is just delightful. I think my daughter's been to school 8 times in the past month because of holidays and whatnot. Anyway, good to see our tax dollars at play. No, I'm not going to lie. I'm getting cooked out here today with gold and silver right now. It is a broad liquidation type of move in this market, so I'm having no fun here. Whatever little long oil exposure and long deltas in gas that I have going on for me is not enough to offset the pain otherwise. So the question, Tony, that you asked, though, is are the lows in? I don't believe in technical analysis on the VIX. I say that all the time because the VIX is a non-stationary time series, and thus you can't apply technical analysis to it. However, recent cycle highs in the VIX, if we were to think about where it's petered out on advances, have come in that 24 to 25 area.
Yeah.
If we look back to October, November. So further material escalation would have to be required from here. But, in terms of that material escalation coming, there are signs that it has happened and is happening. Iran is striking Qatari and other facilities, UAE facilities, Bahrainian facilities, even those that are not even within the constraints of the Strait of Hormuz. So it's not like they're just trying to pinch that particular global choke point. They're trying to destroy Gulf energy infrastructure in totality. So a market here today pricing in much higher physical supply risk overall. Europe and Asia to me are really the big tells. You could look to EWY, Tony, on the platform, which is the South Korea ETF for the Kospi. That's fallen out of bed here, I think 12% in today's session. And so when you have a lot of
now.
Yeah, go ahead.
Yeah.
13% now in today's
right,
session.
but they were closed on Monday, right? The market, the Korean market was closed on Monday, I believe. That's what I've read.
Oh, so it's a little 2 for 1.
Yeah.
Everything that I read. They have all leveraged products.
They got a lot of leverage.
It's up a gazillion percent, like 150%, even after this move down today. It's a 2x, 3x leveraged gambling type product. This is why I think the market's actually near its lows. You've got gold and silver, which I'm looking at as...
That's another leverage. There's a lot of leverage.
Yeah, as another, as like a meme stock type run up that we've had, and two-sided action, meme stock like, not like market type. I'm just going old school now.
Yeah.
And as even the S&Ps make new lows and volatility is right near the highs here, you're getting no rotation anywhere, but you're getting a 10% move in things that are, I don't know, Bitcoin-like. You know what I mean? Meme stock-like.
Yeah.
And you're getting a smaller move. We're down near the lows, making new lows maybe in all the equity prices. I think the flight to quality is actually to the equity markets. I don't know. That's my thinking. When you have Europe, when you have our market basically unchanged, now down for the year, and across the world up 10%, something's got to give.
Yeah,
and I would imagine to be that 10% up move than our market. That's the way I'm looking at it.
Mag 7's only down 1.5% today compared to everything else. So, if we want to dust off a 2022 playbook, right?
Mm-hmm.
I know as human beings, we like to tell ourselves stories to help make sense of the world. And so I think a lot of people in the past few days have been looking at, is this an Iraq 2003 type of market reaction, or is it going to be more of like a 2022 type of reaction? Because while war came in both of those scenarios, the S&P 500 fell about 5.2% in March 23 when we invaded Iraq and Saddam fell, but the pace of that war and the framing of the war, I think, allowed the market to think that it was going to end quickly. So within 16 days, the S&P 500 had erased its losses. And in 2003, the market was up 26%, a little bit more than that over the course of the year. 2022 is a different story, of course. We know that small cap and mid cap stocks got hit hard. You have your rising oil and energy prices, which feed directly into inputs, and the Fed is having a hike rate. So whatever moats that some of these companies had were quickly deteriorated. And the Mag 7 companies with their tens or hundreds of billions of dollars of cash on their balance sheets were better suited to withstand those pressures. So just early days here in this 2-day, now day 4 of the war, but 2 days with the market opened. We shouldn't ignore the fact that some of these cross-sector flows, people are running to the big cap tech names on a relative basis as a flight to quality. And that's more of a 2022 type of reaction than a 2003 type of reaction here. So not loving what I'm seeing right now. The best laid plans of mice and men often go awry. And my plans were to start getting long stocks here in early March. We may have to wait a little bit for that, Nick. Maybe 6,600 and ES.
Oh, we're right there. We're 100 points. That's one day. It's 100 points off from there. But I think what you're pointing out about the Mag 7s, the Mag 7s over the last 4 or 5 months have gone nowhere or lower, right? So we've had Microsoft is down, let's call it 25%. Meta is down 25%. Amazon hasn't moved in 4 years. Google's at highs. Nvidia is kind of at the lower end of where it's been trading. It's at 175-ish. It's down about, we'll call it 15, 20% from the highs. Apple has been kind of near the higher end of the range. So netting out, I'd say about, if you took the Mag 7s, what are we down? 15% from the highs-ish?
Yeah.
If you got people rushing to buy those right now, that's a good sign for the markets bottoming out, is it not? Because you've had them wash out. Market's gone basically nowhere. You've had everything kind of catch up or go parabolic. You have the Caterpillars of the world that are up 5x, and Microsoft is down 25%. So that nets out to a scratch. If you get Microsoft to bounce back to highs and some of those stocks come down 20, 30, 40%, we're probably at higher E-mini prices, are we not? Net.
Yeah. I think, look at software, for example, on a day like today. If this was truly the the world's ending, don't we think software would have caught a little bit of a down leg too? And it's off 1.5%, but that's not the 2% the Nasdaq's down. So some of the stuff that we've been looking for to stabilize prior to the Iranian strikes, it's continuing to hold up, which comports with the view that late February, early March is a period that tends to be of difficulty for the broader market. It's when the volatility tends to rise, and then you get your market bottoming out by around March 10th. So seasonally speaking, those seasonal traders, which I wish I was trading along the seasonality a little bit more, obviously, because I haven't been. And if I was, I wouldn't be in the blender like I am today. But the seasonal traders, they've had a pretty good run of things because you anticipate higher vol and lower equity prices over the next week or two. But, the sentiment here, I think, is the most important thing to take away from all this. On one hand, the market's reaction to the Citrini report and the way that we're trading today shows that a lot of people still are levered long, even in a name like silver, where the CME has raised margins a bunch of times. On the other hand, the AAII bull-bear spread has moved to a place where, because of the dramatic shift in bearishness over the past 3 months, it is in washout territory for sentiment. So, the news flow matters most. Energy and energy vol are the tail wagging the dog. If there's any sort of break in the news flow that allows oil to break lower or gas to break lower, the market's going to stabilize, I think, very quickly. And then we start to look more like 2003 and less like 2022.
Well, you're the one that told me oil's at 2023 levels. I mean, we haven't seen these numbers since 2023. So you're my Taiwanese Korean source. That's what I named you. You're my
just told everyone.
Just the source. We should just call him the source.
The source. Yeah. So wouldn't that play to your irrational exuberance in oil? The narrative?
Rational exuberance? It feels like it's pretty rational given everything going on right now.
Yeah, but it hasn't been a face.
That's the buy the news. You got to sell the news.
No, you buy the rumor.
Have to sell the news.
Yes, but go ahead.
Let's get a day where we don't have an incremental new high in oil fall. I think would be a good stepping stone. Because
that's
over the past few days, even yesterday when oil prices came in, we did see a new daily high in IVR. And today we're at 102.9 right now, which is, again, the highest that we've seen in the IVR since last June. So as long as those continue to climb, and I think that's actually noteworthy, right? When you get through 100 in IVR, Nick, I mean, what is that telling us? It's like going below zero. We're now 2.6% above the highest reading that we've seen over the past year. So oil vol has eclipsed the June episode. That tells you that it's not the same type of conflict. But once that breaks, then we're going to get the green light. And so today is not the day. We have the new incremental high. The low in IVR for oil is 76.32. So just as a exercise here, let's say at some point in the session news breaks and IVRs are back in the 80s or 70s. That may be an intraday signal that we have something to work with, taking a shot at a more significant swing low in equities there, Tony.
So question for you. If we close down 2% or more on the day across the board on the equities, I mean, the Russell's down 3.5%. Is that bullish, bearish, doesn't mean anything, or is it better that we close down 1% across the board? Is that bullish, bearish, or neutral? Just asking hypotheticals to you.
I'd like to see the market close like down 1% as opposed to 2%. I feel like this is one of those questions when I'm talking to Ilya. I'm like, Ilya, stocks just closed at an all-time high today. And he's like, yeah, but not like the absolute all. If you're down, you're down. Okay. Yeah. Like I'm not going to, it's bad news if you're a bull. But in terms of the shape of a recovery, if all of a sudden it's 2 o'clock, 3 o'clock, 4 o'clock, and the market's 50, 60, 70 points off the low in the S, it just gives a different flavor to how the day went out. And, right now oil is sitting at 77, up over 8%. So it's not like we're looking at that swing occurring at this very moment in time. And IVR just hit a new high for the day at 103.1. So, the ticks continue. There's no reason to fade it and play hero ball until oil vol breaks.
The move in oil, though, I mean, it's been a big move.
And market volatility's hung out there too, right? I mean, just under 24 now, 23.90 on the high.
The oil move is big. It's not like an explosion big. We're not at 100. We're not at 120. Like,
no.
Does that kind of tell? Does that give you the thought that maybe like this was kind of already in the cards? Like we were positioned for this move in oil. We were positioned for this move in equities to some regard because 2% move it's a decent move, but it's a paper cut in the grand scale of the market. I mean, we're given a couple weeks here, and we've gone basically nowhere for 6 months. These aren't big moves here. Doesn't it kind of give you the air that this whole thing is kind of we've already hedged for this? Like we all knew this was coming, right?
We had to have known this was coming.
Not to this.
Tony, we moved two carriers.
Not to the magnitude of this move back and forth the way that we've been. I mean, we've gotten the ick multiple times. We've gotten the ick multiple times on this show, only to be 15 minutes later have a rally of 100 handles on the E-mini S&Ps. I mean, just yesterday you were 6,900. I mean, I know you say we're only 150 handles lower than that, but that's in a 1-day move, not in a 5-day move. I mean, ES, just to give you an idea, looking at like the expected move, it's only 48 handles, which I think at this time right now, which I think is relatively low the way we've been moving. Now, we've only moved 20 some odd handles for the day, top to bottom. I know we're down 2%, but from the opening, we've moved about 20 handles.
Yeah.
So are we perfectly priced here, down 145?
Well, I mean, Tony, let's just go back to like 6 months ago. If I told you in the start of, before the end of the first quarter, Trump will have captured Nicolas Maduro and killed the Ayatollah. How far off of the highs do you think the S&P 500 will be?
I think we would be making new highs.
No, I mean, I think people would say like 48 hours after the Ayatollah, the markets open after the Ayatollah's killed, how much lower are we? And you're like, okay, well, the straits effectively closed. Insurance companies are no longer offering war insurance, so only 2%.
Right. That's the spin that you don't hear. Like you hear that the strait is closed, and they don't say it's because insurance. You think the strait is closed, and the public thinks it's because it's unsafe. And obviously, if insurance companies stop their pay. This is the thing about insurance companies. This is why I should hate insurance companies more than anything else. I mean, when you need the insurance, they're not going to be there for you. When you don't need the insurance, they're willing to take your money.
Yeah.
You have to look at this as an opportunity, and I think it's an opportunity slapping you in the face. Now, I don't know if we're 1%, 2%, 5% eventually off the lows, but I'm nibbling on the long side.
And you should be trading. It's not like
you should be trading it.
It's not like it's like all.
There's been no
all or
opportunity.
nothing.
There's been no opportunity one way or the other right now because we've been in a pretty tight 20-ish. You actually bought the lows and sold the highs on the NASDAQ move that we had this morning. Other than that, we've been sitting within 10 handles.
Yeah, but this has been.
If you're putting in tight stops, you're going to get chopped up too.
Oh, you're going to get chopped up, and I mean it's position sizing, but you have to be. You have to take the opportunities as they come. Yesterday we took off some long delta in Palantir. It was up like $8, $9. It was up $2 or $3 more this morning.
Yep.
But you're getting these huge moves in both directions where if you're scalping, if you're trading options, when you have a VIX of 25, 26, you're going to have stuff moving around. You got to be a little nimble here. The story.
Yeah, and you know what? I think just sticking to the longer term data here in terms of what we know works best in these scenarios, we trot this out every few months whenever there's a big vol expansion.
Sure.
But I recall our what strategy fits best slides that we've shared on air before when measuring what the average daily return when the VIX is between certain levels. And for example, when the VIX is between 20 and 30, according to the data since 2005, long ES returns minus 0.04% a day, whereas a short strangle returns plus 0.14% per day. And so I know that these are scary times. Two things to add on to what you said, Nick, about this being a scalping environment. For someone like me I've looked at my own trading performance. I'm a garbage scalper. My mindset right now is capital preservation, right? It doesn't need to be to trade as much and make as much money as possible in the volatility. It's because I know these are choppy waters that I don't do well in. But two, if I am going to jump into these waters, we have history to guide us for what we can do to keep our head above water and to not be emotional about what we're seeing on our charts. And that is the typical Tasty kind of trading, not my cowboy gold out of the money calls like ES is going through the moon, see you in 3 months. But it's more of that typical Tasty trade methodology where we look to sell the vol with enough duration so that we can weather the storm. And the data supports that.
And to your point, just to reiterate that, the reason why that is and that the long E-minis is not as fruitful as the short vol is because the mean reversion in vol is typically faster than the price reversion. We are so used to having these V bottoms where in a week we're back at all-time highs. A lot of the time you chop around for a little bit and you grind higher over weeks and months and a significant amount of time, whereas volatility is back to where it was in a week or two. And that's why those kind of stats, when you get this high volatility, that's why we're looking at those opportunities.
I don't know, 1-by-2 put ratio spreads, my bread and butter seem to be bid crazy. Things in SPY that I was doing for $3, $4 the other day are around $7 now. So they've doubled in price just in SPY. Now, if you're staggering in there, I think with volatility at 24, it's a gift. You want to do both sides? Do both sides.
Yeah.
but it's a gift here, in my opinion.
And you know what? Looking at that vol in the face, we were talking about this yesterday on Futures Power Hour and Overtime. Just the 6-month trading range. You're effectively at the midpoint. Lows near 65.82, highs up at 70.40 in the ES H6 contract. If you want to be directionally neutral with a 38.40 IVR here in ES right now, there's really not a better place to do it. You just got to give yourself the time to ride out whatever unfortunate and unsettling headlines we see here. But let's look to the future. Let's say the sell-off continues. Let's say, Nick, we get another 3% between friends, 2% between friends over here to get down to 6,600. That's where I start to take a swing with a little bit more conviction, because that is a 6-month range low. And I have faith in my fellow retail brethren that they will try to be dip buyers at 6-month range lows.
We're getting a little, we're getting hurt here a little bit. The retail dip buyers. Ow. Ooh.
Yeah, I have losing trades on here. Yeah, 100%.
Yeah. But I'm with you.
Capital preservation, gentlemen.
Even you,
that's the name of the game,
who had positive P&L for a quick moment in the overall portfolio here, is now with volatility creeping up almost 15%, is starting to hurt your portfolio too, and you nibble a little bit. Some of the trade, just to go back to like your diamond trade that you put on, just to see how much that's moved. You did it at like $10 and change. It's $11 and change now. So
and diamonds haven't really moved in.
Diamonds haven't moved at all, but volatility has.
Yep.
Good job out of you, Mr. Vecchio. Thank you for explaining some things that are unexplainable to us and their opinions. So trade what's in front of you and trade in your size, right? Don't ramp up, but you can ramp up the strategy. If you're not used to doing a naked option, maybe today's the time to do a naked option. If you're used to doing $5 spreads, maybe today's the time to do $10 wide spreads. Incrementally make your trades more risky by doing it in a sophisticated way, meaning just expanding on what you normally do to take advantage of some of this volatility, and also putting on more risk. We like to ramp up when volatility is high. We like to kind of pare it down when volatility is low. If you've never done a diagonal spread, well, vol dispersion between front month and back month has never been higher recently over the last 6 months or so. So if you're looking at doing that type of spread, do that type of spread. Today would be the day.
Ooh, that's not a very liquid underlying there.
GS. Yeah, and stay liquid.
I sold some puts in Goldman Sachs here.
And stay in liquid products. Don't do as we do as we say. Goldman Sachs.
I was looking at what was moving the Dow, and it's one of the biggest movers.
Down $25 off its lows of 826 to 835. Good job out of you, Mr. Vecchio. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up here with we're going to do a market measure and talk about the markets in between there as we do this market measure. Thank you so much, Mr. Vecchio. Oh, Vecchio, don't go anywhere at 2:30 Central Standard Time today, because I'm going to be on the show with Liz doing last call.
Oh.
Yeah, you got to bring in the big guns.
Heavy firepower.
Wow. Beautiful. We'll be back in 90 seconds. We got more Tasty Live after this.
Grow a strong community with Tastytrade's referral program. When your friend joins Tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tastytrade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tastytrade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son. Mama said there'd be days like this. You know that, right?
Mm-hmm. Yeah, no, this is done. You should expect to have some downside moves occasionally.
Expect the unexpected today. And we have been, well, we both talked about how we were going to chop around. It didn't look like it was going to be one of those V bottoms today. I actually thought we'd be a little bit stronger than where we are right now, down 146, just a few handles off of the lows on the E-mini S&Ps. NASDAQ hanging out here at 24,500, actually just making some lows right now. Russell is the weakest of the group, down 3.5%, and the Dow down 1,160 or so. Volatility up $3.28 and staying bid across the board here. Even the E-mini S&Ps rallied by 10 handles. Volatility has not come in. Might be a little bit early in our calls here. Bonds down 10. I meant to ask Vecchio if he thought bonds had to rally for the market to catch a bid. I don't know what his answer is. Maybe if he's listening, he can write into me and ask him that. What'd you just do in JP Morgan?
Got a little long delta, did diagonal spread.
Gotcha.
Some of these banking stocks have just got, I mean, obviously it's the move in bonds is going to reflect in those, but they're down 10, 15, 20%. You know, they seem like they've kind of had a little bit of a spanking here.
JP Morgan down around $4. Let's see what's going on. Even the S&Ps make a new low here, down a $1.50. Let's see what the buckers are. We can't look at volatility. That's going to be a bucker. USO, that's going to be oil. Obviously, with oil higher, that's a bucker. BBY, which had earnings, Best Buy. Somebody wrote it to me. What is Best Buy? Up $3.60.
What is Best Buy?
Yeah, big box store. I'm just teasing. Like, you know, the Target up $3.50. And then there's really basically nothing here on this high option volume list. When you go to the downside, obviously it's going to be numerous. MDB, which was MongoDB for earnings. You can't really trade it. Markets are too wide. And their gold down $30 to 450, 460 right now. Goldman Sachs down 29, TSM down 21. A lot of stocks being taken out to the woodshed. Meta, which was up before, is down $10. Let's see what your beloved Apple is. Apple down $1.20. Weird.
I know, it's kind of, it's a little, I mean, you've had kind of the down move in those stocks, in the Mag 7s. They've been weak.
Yeah, they've been weak relative
I'm not
to the rest
shocked
of the market.
that, like, on a day where market's down big and you're searching for, you know, some cash, that you're, you know, the people that have wanted out of Microsoft, they're already out.
Yeah.
There was a pretty quick liquidation there.
Sure.
Now you got to go for your, you know, Cats and Goldman Sachs and, you know, some of the stuff that's at highs, right?
Yeah.
EWY, you've been, you know, YOLOing in that.
Let's take a look here. Instead of looking at high option.
Say
again.
So that the 1x3 that we did in the Qs.
Yes.
It's actually up 30 cents. And the Qs.
You did it at 870. It's trading around.
It had slightly short delta.
Yes.
But the Qs were at 190 or at 597. So they're down about 4 handles, which is big. Well, they're down about another, you know, 0.5%, 1%.
Right. You had a short delta trade, but short volatility trade.
It was short volatility and slightly short delta.
Yeah, it didn't have any long delta to it. I mean, even right now, it has a 1x3. It has 12 short deltas to it.
Yeah.
So it did have short delta to it. So your point you're making is it went lower. You have short delta.
The long option that's further out in time.
That's right.
Increase in volatility. So that option goes nowhere. Those short options kind of, you lose a little bit of value out of them, but they kind of stay bid.
That is
even into the downside move.
That is correct.
It's a vol. There's vol.
Definitely a vol play. Here's the S&P 500. I just put the S&P 500 list up here. These are 500 S&P stocks, obviously, and you can see here you've got 7, 8, 10 stocks out of 500 that are higher. Oh, this is a pretty broad-based sell-off. On the top of the leader would be AZO down 175. I mean, AutoZone untradeable from an option standpoint.
I think it had earnings this morning too.
It
Not
did.
that matters.
No, it traded down to 674 on the low. I think it opened around almost 3,700 right here. So it's been pretty steady for earnings. But the first stock that you look at here, SanDisk, which is also a hard one to trade, but Caterpillar down $39. That's what's hurting the Dow there too. MU down 31. A lot of stocks. And all I'm trying to say here is it's broad-based. Sell off. Obviously, even the S&P's down 160. Volatility 2470.
Oof.
Little early. Made a mistake.
I can blame you for that.
You can. You most certainly can. We
still got them. We got them. We got some ammo left.
Got some work to do now. Volatility 2475 on its highs.
Cool. Should we do it?
I'm ready. Yes. Let's go to a market measure here, sponsored by the SIBO.
What are the success rates of the top sector ETFs? We're going to be looking at a couple sector ETFs and looking at strangles in those. So a little bit different than what we typically look at, which is typically SPY. And so we've known that individual stocks generally have a consistent success rate similar to indices. So volatility is volatility, whether it's in SPY or Apple or anything else. You have relatively the same sort of expected win rates there. But additionally, their success rates are often higher than the theoretical expectations. So across the board, volatility is overstated. And so when volatility is high, it typically contracts, and that implied volatility is typically overstated. Today, we're going to examine the success rates across different sectors. And so the study is that we're going to analyze strangle performance from the top 5 holdings of the 5 most popular sector ETFs. So we're looking at XLE, XLK, XLF, XLV, which is healthcare, and the utilities, which is XLU. And we tested the success rates of selling 16 delta strangles with 45 days to go till expiration. We're also going to look at 30 delta strangles with 45 days to go till expiration. And just see, what's the best bang for your buck.
Sure. Let's do it.
And so first, these 5 sectors exhibit low to intermediate positive correlations. I mean, everything has some sort of positive correlation. Like even today, on a day where the oil's up 6% and E-minis are down, you have like an XOM, which is down a handful. Just kind of goes to tell you when volatility goes high, you can kind of throw out the correlations. Correlations is a low volatility environment situation. This sort of, everything is kind of highly correlated when volatility comes into play. But you can see across the board, all these sector ETFs, light to medium correlation.
Very good.
I would say.
Yeah, I mean, correlation subject to change.
Yes, very much so. So here are the top 5 largest holdings in each ETF. Their average correlation against each other is 0.29, which I consider to be very little, if not no correlation here, including the low to intermediate positive correlation. This makes them a good basket of underlying tests. So we're talking about the first basket is going to be XOM, NVIDIA, BRKB, UNH, NEE, and they're all 0.29% or 0.29 correlation. So there's really not a huge correlation across the board. And we're going to do different baskets here across from the highest weighting to the 5th highest weighting. And so that we found that all the ETFs and their top 5 stocks within these ETFs achieved a success rate higher than the theoretical 68%. This is on a 1 standard deviation strangle, and that's goes to basically everything we've ever done with volatility being overstated relative, implied volatility overstated relative to realized volatility. And their results here were pretty close to consistent. So you can see across the board, the ETFs, selling a 16 delta strangle, you expect there to be a 68% probability of success. You hit that mark, if not more, on all of these, 72% in technology, 77% in energy, et cetera. In the individual names, you can see it gets a little bit more volatile from side to side here. But you're basically in line with the ETFs themselves. Most of these underlyings, especially the top holdings, are reflected in those ETFs. So it's pretty consistent across the board.
Very good. You looking at any of these ETFs before we get this? I know you just did the financials a little bit, but do you look at any of the financial ETFs as a play here? As like a XLF or something like that?
Sure, we can get into some of those. I mean,
it's only down $1, but that doesn't tell the whole story. I mean, it's down from around 56. Ivy rank is now 53. That's about as high as it's been.
I think if you want to be more conservative with short premium, you go to those trades. The Goldman Sachs position, you do the strangle there, and you could see a 50-point face ripper. Like what I mean. I would be more comfortable with.
Or to the downside, right? So you're just mentioning something there.
Downside for sure.
So another way of getting bigger and smaller is when you go, like I said, maybe ramp up your positions when volatility is high the way it is right now. Another way to ramp up and get smaller would be to go into an ETF as opposed to an individual stock like a Goldman Sachs or anything else like that, right? You go into the ETFs, makes it a bigger strategy, more risk, in something that moves a little bit less. So you're kind of, you're hedging your overall bet on the trade. Good. Volatility just at its highs again, market tried to lift its head a little bit every time it's been getting slapped.
A little washout.
A little bit?
Yeah, that's what it feels like.
3% usually does.
Yeah. For a 30 delta strangle, we saw the similar pattern here. So all success rates were higher than the expected 58%. So when you're selling the 30 delta, you have about a 60% probability of success. And you can see the ETFs, that the ETFs, the implied volatility, typically overstated because if it was correctly stated, so to speak, it's always correct in the moment. There's no, that's just what the price is what it is. You would expect these numbers to be a lot lower. They are much higher than what implied volatility is saying. The same thing can be said for the stocks themselves. Volatility is still overstated in both ETFs and the individual names. That's kind of what we're getting at here.
Almost 1 million E-mini S&Ps have traded already by 9:30.
Is that a good sign for you? Is that good or bad? I mean, you expect it to be that way.
Yeah, of course. I don't think it's, I don't know if the size is unusual for an hour into the trading day here. Usually we get that kind of number near the end of the trading day. So volume is obviously high, but you would expect that across the board. The worst thing that I see right now for the market is just the way it's been stair-stepping down. Like if you weren't...
You want the big move. You want the flush.
You want 30, 40 handles up, 25, 30, 40 handles lower, up, down, trading. Right now, you've just been met with pressure. I think that's the worst thing for the market at the moment. Go ahead. I'm sorry to interrupt.
I'm with you. It's good.
And I'm wrong by 25 handles or so.
Yeah, we're okay.
I know, but still.
I'm not blaming you yet. I'm not coming for the house yet. Similar to our observations with the technology stocks, the technology ETFs yielded slightly lower success rates than other sectors. You have a lot of volatility in that sector specifically over the last couple of years. So the last thing that we're going to look at here is examining the relationship between the success rate and the IV or the premium level. So the premium divided by the underlying price. This tells you how much you're getting paid for the risk to put on in these trades. So we didn't find any strong relationship between this success rate and the underlying IV or the premium level. So the success rates for these ETFs are fairly consistent. There's no there's nothing more that you have to do than look at IV ranks tell you if volatility is high, the actual implied volatility, and then just the price of the underlying. There's no like special, okay, if it's, the stock is $300, I want to see, $7 of premium. If it's this much, there's nothing really special there. You just look at IV.
Correct.
Couple takeaways. Success rates for ETFs across different sectors and their main holdings are all higher than the theoretical suggested rates. This just tells you that implied volatility is typically overstated to realized. The success rates for these ETFs are slightly higher than that of SPY, but are consistent with low variance. That's because these have higher volatility. When you go to a sector ETF, it's going to generally have higher volatility than the market itself.
Good job. Good job out of you. Good job out of the whole team here. When you look at the trade that you've been putting on, like the JP Morgan trade that you just put on, which is volatility related and a little bit of delta risk to the trade. When you look at that trade as a standalone trade, there's going to be no probability of profit on it on the follow page. I'm getting the emails. Why is there no probability of profit on a trade like that? Because it's vol sensitive, meaning there's no way to dictate what vol is going to be in the future, especially on such a small.
And there's a variable, a time variable.
Variable time also. Just remember, it's a defined risk trade. That JP Morgan trade is a 1-to-1 trade. So it's a defined risk trade. Whatever you pay for it, that's your risk on the overall trade.
Yeah.
Now,
the 1x3 trade has risk to the upside.
1x3 trade has a lot of risk, especially on a outside the expected move to the upside on that, even though it's got a little bit of delta to it too. Volatility 24.30. I think it was just a little bit early. It sold off by about 60 cents now. Even the S&Ps are down 154 at this moment. I would think the even the S&Ps and the Nasdaq and the volatility itself market has reached its lows and volatility has reached its highs. But I've been wrong before.
You're calling lows. You can't call lows twice.
No, I'm right there. I'm right there. I'm back to where my number was when we were down around 140, 142. When I bought even the S&Ps are down 148.
Yeah, I think we play it
right now. Now this could be the one little pushback that we get, but volatility contracting by almost 80 cents now.
I sold puts in Meta. I sold the 575 puts in April. I just bought a little bit more Nasdaq, a little bit more E-minis. Short oil. Got a little bit of long delta in Goldman Sachs, JP Morgan, so kind of buying the dip there. Is there anything else that I think I should be looking at right this moment?
No, I think it's encouraging, although I didn't get a chance to ask Vecchio about it, that bonds have rallied 117.06. They're down from up from 116.17. Oil hasn't sold off at all here yet. That would be the next thing I think you would need for the market to catch itself a little bit of a bid.
What about some short-term SPY puts?
Now you're long where I am, which is about 10 handles. We're 10 handles lower now than where I bought the market.
I think you sell some little downside putties here, like some one standard deviation puts in SPY.
Probably rather trade those than trade the E-mini S&Ps like I have.
All right, we're gonna.
It's just so much easier when you're sitting here doing the show.
But I want to do them short term. I'm doing them in March.
You're doing it in March with 17 days to go. Now let's take a look at that.
We're keeping these small because, God forbid, we see these tested.
He can't help you right now.
Yeah, he left me a long time.
28%.
I'm still here.
28+% implied volatility in March. 26 in April. You've been making a lot of strategic plays, selling March vol higher than buying April vol. If you've noticed over the last couple of months, they've been about the same. So you've got a little bit of a vol differential. And now you're just going shorter term, which makes it a little bit more of a directional trade.
Directional trade in SPY. In Qs, I did that 1x3. So I'm already short 2 extra calls on the upside. So now short premium in the Nasdaq, which is of the group, the highest volatility.
You know what you're forgetting to give thanks to also is rolling at 21 days, because 21 days was Friday of last week when we had a nice little rally. Again, you might have a losing trade or a losing position when you rolled your positions, but at least you didn't get your face ripped off by this volatility expansion in the front month, the way we're getting it. Maybe you had, April, May or something like that, or all April, much less volatility expansion, even though it hurts just the same than you would in March. Let's take a quick 90-second break and come back. We got more Tasty Live. We got guys from the trade desk. I think we've got 30-year veteran, Marty, coming in the house.
No Q today.
Maybe no Q today. No. I had to bring in the big guns, the guys that have seen market moves like this. I don't know if Q has seen market moves like this. So we'll let him answer the questions at the trade desk. Take a quick 90-second break and come back. We got more Tasty Live after this. This is Tasty Live.
We built Tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move. Got the need for speed? No problem. At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade. Make your move.
Nikki, we are back, son. And you know what that means. Before we get to the trade desk, let's take a quick look at the market. Even the S&P's 67.38. I broke one of my own cardinal rules. Like, you know, when I kind of make a line in the sand and they go in the opposite direction that I need them to go, when they get back to my number, I lighten up by 50%, 75%, just 25%, just lighten up, do something. Because I figure that they're going to go in the opposite direction again because I was wrong, and that's exactly what they did. But I didn't do any of that.
You didn't do any of that. Hey, you're just so high T now. You know, you're just so like this now. I like it. It's good.
Somebody else who's high T. Let me give you my DDT.
I only teed you up on that because you said I'm because of the skinny picture.
Testosterone. Get your testosterone. Guys, and by guys, I mean those guys in the 50s and 60s like me. You got to get your testosterone. Somebody who's got high T.
Very, Very high tea.
My man Marte.
Now that you mention it, very high.
Very high. How high is it?
Feeling charged all of a sudden. I get in this room. The tea in this room.
The power, it corrupts you.
Wow.
Like
it'll make you sweat in here, right?
Marty, let's go back to another high tea time frame here. You were on the floor at the CME during the market crash. I mean,
87.
I don't think we have a market crash here yet, but it feels like it from all-time highs. Even the S&P's back to 67.35 or so. NASDAQ 24.4, about $100 off of its lows.
Right.
Still down 2 1/3%. Russell getting killed. Everything getting killed. Volatility up 16%. Gold, oil, oil higher, but gold, silver, no place to hide. What do you think about this market?
To your point, I thought this should have happened. I was looking at this yesterday, and I'm like,
you sound like us now.
I was looking at it, I'm like, well.
Yeah, but yesterday was the head fake, and that's why I'm suffering.
Let reality of what's going on in the world come in and affect everything. Don't let that ruin a day, right?
Yeah.
But I thought yesterday was going to kind of be like this, and then they kind of rallied. They didn't They had it higher for the day at one point. They came all the way back.
It was.
But this morning when I got up, it was down like
the S&P's at
we were at 6,900.
Yeah. This morning when I got up, I saw them as the SPOs were down 120 handles, and I'm like, all right, well, now there's gonna be follow through on it,
Yeah.
And then I also saw gold was down like $120 this morning when I got it.
That's kind of the
It's
weird.
down $230.
Yeah, now it's broken another $100 since I walked on the.
That one's got me a little confused because you kind of have the war on bid with oil and obviously the fear in the market, volatility higher, E-minis down. I would have thought gold and silver have both had an incredible run in the last week or so. So it's not a shock to see a pullback, but I was not expecting them to be, silver was down like 10% at one point today. I wasn't expecting that sort of move in the metals. I thought metals, because of the fear, would have stayed a little bit bid. Like maybe you see a 1.
They would have went back to their normal reaction.
Yeah, normal.
Instead of leading everything, which it did. And maybe that's what's going on with this now. Maybe, they're, I don't know if they can lead the E-minis, but they're reacting kind of in the same way. Although yesterday it was higher when the market was a little bit lower, I think.
Yeah.
In gold. But
It's more washouty. Like, because they're just selling everything. It was just kind of indiscriminate. I'm selling Bitcoin. I'm selling E-minis.
Goldman Sachs is down $40.
I'm selling single names. I'm just out. I'm out.
Right.
I'm out, which is usually a good sign.
Right.
Like that's at least in.
How busy is the trade desk? It's got to be real busy.
It's been busy. There was a lot of assignments and stuff this morning.
Because of the market movement last night.
Yeah, and I think that, you probably would be more prone to want to get out of your position or exercise your long puts if you think something's coming like this.
Yeah.
Or, obviously, that type of forethought, that's going to be more
That's got to be in
institutional than
shorter
I think.
dated options, though, right? Not
Not a ton.
Nobody's exercising out of the money 45 days.
Guys that had short put positions in gold and silver were.
Yeah,
they had
to
make some adjustments.
Sure. I wasn't talking
with gold and silver.
markets.
Those don't? I guess if you're does gold and silver? Do they have Monday, Wednesday options too? Yes, they do.
Yeah, they
gold does, sure.
Yeah, Wednesday options.
You can always make adjustments in your option positions in gold. I'm sure a lot of people were short puts and put spreads and things of that nature or nakeds. The futures are a whole different deal. There's really nothing you can. I don't know how you would. You could take off risk if you have a future on anyway. You're not gonna calendar spread it like to the next month out because I don't know. It was kind of intense with a lot of the gold and silver positions that I saw this morning, and everybody's like, "Are they raising
they've gotten
requirements?" Which isn't the case yet, I don't think.
Yeah.
I still think E-minis Merck hasn't really stepped in and done anything drastic yet. But we'll see. Today is to your point too, like 60, 680, I think.
Yep.
That's kind of been an
Vecchio was in
number.
here looking at 6,600.
Right.
Everybody looks at the same kind of things.
Yeah,
across the board.
As much as we'd like to think, we're not really reinventing the wheel. Even
Much
with
as we like to think, we really don't know anything. You could see my P&L so far today.
Right.
Right there. It's the only way you have to judge it.
Right. That's it. But yeah, it's been kind of busy. But usually, days like today are either you're getting all the action before 8:30, because that's when kind of the reality of what's going on in your account kind of sets in a little bit.
Yeah.
But it hasn't been anything. I haven't seen anything too crazy as of yet. But we'll see what's going on.
All right, beautiful. Let's get to your list, my friend.
Let's do it.
Yeah, because I got my man Glenn in here. I want to talk to him about the dollar. Dollar's rallying.
Let's talk to somebody
huge.
that's actually medium T, but super high intelligence, right? Medium though, not low T, but
Let me
medium
write that
T.
down because when I introduce him, medium
T, high intellect.
IQ.
Yeah.
Which is the spread you want.
Right.
Not when you're 50 years old like me and you.
Right.
All right, at number 20, we have SoFi at 31%. 19, we have Oracle, 99%. Look at that. We have SNDK, SanDisk at 71% at 18. 17, Spot, 32%. 16, D-Dog, 62%. 15, Meta, 29%. 14, Palantir at a 29%. 13, AMD, 44%. Number 12, TLT at a 19%. 11, TQQQ at 42%. 10, Google at 35%. Number 9, Netflix, 39%. Nice comeback on that stock since they I guess that deal wasn't.
They got $2 billion for walking away. That's a nice
there you go.
bag of change.
Number 8, IBIT. And now IBIT's perfect. That's at 60%. GLD at 80%. MU, Micron at 88 at 6. Top 5, SLV, probably to be expected, 77%. NVIDIA at number 4 to 28. Number 3, Amazon, 35%. And number 2, Microsoft at a 42. And at number 1, Tesla for a change at a 12.
Yeah, you say that tongue in cheek because it's always the top, right?
It's never been. Is it ever out of the top 3?
Yeah.
Ever?
Yeah. No, it's always there. It's,
all right, boys.
Down $16 in Tesla, by the way. Big 4% move there. Under 400 now to 386. This too is matching its November lows that we made from last year. Like the market is making those type of moves too.
What do you think? More follow through on these?
No, we called bottom.
You calling bottom?
We're calling bottom.
Yeah,
halfway back could be a good number.
I called bottom 10, 15 handles ago on the E-mini S&Ps. They're not listening. And volatility about 40, 50 cents.
Right, that's what us high T guys do. We
make it easy for the
for everybody else to come in and
make a couple of dollars before we make money.
Right. We'll sacrifice for everybody.
Yeah.
All right,
Let's just do an Amazon.
I got a little bit more long delta in Amazon, near 200-ish. I also just closed out that EWZ calendar spread where we lagged out of the shorts. We did the double calendar. We're like, you can't make any money in this.
Yep.
We actually did make a little bit on it, but it was about as good
huge move in EWZ.
as good as you could possibly get in that for that trade, and we made like $50 per contract, which is about double on it. We bought them for like 69, and made it go. But that was as good as it gets. We've been poo-pooing
waste of good energy.
We've been poo-pooing that for weeks now.
Well, he's a work in progress.
I know.
All right, let's take this man who has mid-T, high IQ. That's right. That's my man.
Oh, yeah.
Glenn, how are you?
Morning, sir.
Slightly offended, but we're okay.
Why?
I'm not actually offended. You know the worst part? I did a blood test not too long ago, and I'm medium T. Solid. I would, if I was spinning it, I'd say solid T.
Average.
But we're not pushing any.
You're a good sport, Glenn. You're a good sport. You're a good kid. You're a good kid. You really are.
Oh my God.
Thanks for having my boys.
Yes.
We got some people saying in the chat that their portfolios are looking a little low T today.
Yeah. Yes.
Low T.
I concur.
Okay.
I concur.
Yes. Yeah.
Glenn, what's going on with the dollar? Dollar is huge, up big.
Yeah.
That's what led the market higher. I mean, that was the spin.
Vindicated.
USA.
That was the spin 6 months ago. Now you've got the dollar so much higher, euro down a little over 1% and making new lows. British pound lower by, I think, 1% or more. just about 1% there, was lower too. That means the dollar's higher. Wouldn't that be bullish for the market? Explain.
Yeah, no, you're exactly right. This is on one side of the coin, this is a nice opportunity where I don't have to get on here and explain to you a driver that's like, Canadian PMI or something. You guys like, what is this guy talking about? Nobody cares at all. So at least the storylines moving the dollar today are, very broad headlines affecting all asset classes today. Yeah. But there's also a nuance that, in my mind, primarily is dictating the behavior today. And even though we're seeing a 2-day continuation in the dollar, there's still some of this, fake out, little head fake from yesterday playing through the narrative here. So yesterday, on the heels of the ongoing conflict now, yesterday we saw a pretty strong move for the dollar, mainly on safe haven demand. And that, I think, was slightly more expected. You saw, euro dollar down, Australian dollar down, but then we actually saw a reversal from a risk sentiment standpoint. Mm-hmm. We actually had Australian dollar end up on the day as equities came back throughout the U.S. session. Today, we're in a categorically different place. We've got huge moves across all major pairs. We got euro down a full percent. We've got Australian dollar down 1.5%. At its lows about an hour ago, we had that was near down 2% in one day, which is remarkable for currency pairs, especially major big liquidity hubs such as the Australian dollar. And so today, you think, what categorically has changed from yesterday to today, besides maybe a little bit more risk souring? But you also have, I think we broke through an important threshold when we think about rates and projecting overnight interest rates. That's playing through today. Because when you unpack, I look at my dashboard, we see, crude oil up a million and gold down. You start to think, well, what's going on? Is this, a normal kind of risk off move with gold down so much? But you start to get a nuance where this crude oil story is starting to bleed into the global inflation picture, starting to trickle down into, well, if this is going to go on for longer and we have these elevated crude oil prices, that plays through inflation, doesn't do anything good for growth. We really can't cut rates, can we? As soon as June. And so we saw kind of clearing a big hurdle from 50-50 rate cut expectations in June to now looking like 40-60 no cut in June. And so I think that's where the pressure is actually coming in today, not a pure safe haven demand like we saw yesterday. Today really starting to play through more fundamental currency movements in that overnight rate differentials between all these currencies, which is super interesting to see. And I think that doesn't spell well for gold if the U.S. dollar keeps rates higher for longer.
And if everybody else has to kind of keep rates higher /
exactly
higher.
Right.
Yeah.
And then you start when you're unpacking the actual currency rates, the exchange rates themselves, then you start to get the nuance of, okay, Europe was expected to stay flat this whole time anyway. And so now if our expectations change from us cutting to us staying as well, that you start to play through to the dollar's upside, whereas the Australian dollar, while moving more on this metals fall and risk sentiment souring, from a rate perspective, they're still set to hike rates. So a little less of that movement in that pair specifically. And then you go to, you can go all the way across the board and look at these emerging U.S. dollar pairs. And this is something I've said before, I think with you guys or maybe Mike and Jamal, is that, it's hard to play these emerging markets. But one tendency we do see time and time again is when global risk sentiment really sours, the magnitude of the moves back up in the U.S. dollar's favor. We've got against the South African rand. We've got dollar up 3%. Against the Mexican peso, we're up almost 2.5%. So
I'm almost a scratch.
So yeah, just the magnitude of these snapbacks to safe haven assets right here, and not gold playing through, particularly in these emerging markets. So we'll see how long this continues, but a ton of exaggerated ranges here today from a scalper's perspective. Pretty relentless up until an hour ago, where we really touched some new lows. Eurodollar touched lows it hasn't seen since November. Now we're snapping back up a little bit. So we'll see how the U.S. session plays out. For dollar bulls, this is definitely a reassuring sign over today, and on pace for one of its biggest weekly gains if it stopped here in a while. So
are you calling a stop to this?
I
don't make any calls. That'll only get you in trouble. Yeah. Let us do that. I just wanted some misery to have some company, as even the S&Ps just made new lows, or just about new lows, $10 off of their lows.
Yeah, you stink.
And that is, about 20 handles off of where I said the lows were going to be.
We're right there. All right.
You know what? This stair step is the hardest thing to trade, at least for me.
Yeah,
it is.
I was expecting to see more two-sided.
Me too.
I was expecting to see
the upside has been muted,
and you got it immediately, but it was
early,
but it wasn't to the magnet. That's where, man, psychologically,
some of them. We took 50 on the Nasdaq.
Yes,
good on you.
Which helped, but
because man, it was right when I was looking at it. It was like, ooh, I'd push this for another 10 points. Gone. And so, if you're quick enough, it's been a pretty, at least interesting day to scalp morning so far. But
now it's been
on the backdrop of
only true believers is all I can tell you. Misery loves company. I stay right there because I have to introduce these next people that are coming on, because we've got Liz and TP,
and it's electric. They're not live from the floor.
Okay,
but it's electric.
TP's electric. No matter where he is.
Yes.
We're going to take a quick 90-second break and come back. We've got more Tasty Live after this. What do we got coming up next, son?
We got Liz and TP.
We do have Liz and TP. We'll be back in that 90 seconds. You listen to Tasty Live. Peace. Even the S&P is down 155.
Ouchie.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome to TP and VLD Take 2 this week. TP, thanks for joining us. You look very, very, very handsome with your new haircut.
Oh, thank you. Thank you. Yeah, it's everybody. Liz always has an issue with her watch. So a lot of times she'll text me early in the morning, say, "Hey, TP, what time is it?" You can set your watch to this haircut. I just got to say. And that's what I did. I said, let me check the haircut to get Liz her accurate time. Anyway, all right.
Yes, you can. I like it. I like it, TP. The curve, the locks, the flow, it's all working for you.
Okay. This is going to be a little controversial internally. I know there's a lot of elevated emotions around this. But since Jenny's out of town and she's outside of striking distance, right?
She can't kick us under the table.
So I went to my hairdresser yesterday, my stylist, and she's a stylist. She's got all sorts of certifications. I have to see somebody like that because, I have an image to maintain.
Yeah,
right?
for sure.
I need a nice haircut. So anyway, so I said, hey, somebody said that my hair is red. And she looked at me like, what planet are you from?
Good.
She said,
you know what? We're traders. We're not hairstylists. I'm glad you brought it to a professional.
Oh, no. And she would know because she does all these colors. She said, no, people come in either A, with red hair, which you don't have, or the people come in thinking they have red hair and want to make it redder. And she's like, no. She says, maybe I have orange undertones. Maybe. Maybe, but it's not red. And so, Liz, as you've been saying, I think Frank Walsh is also on board with whole red.
Yeah, Frank and Jenny have teamed up on me multiple times.
Well, and see, I think it's a little flattering because I guess having red hair is something of a, it's like a status thing. I think people want it. Okay, whatever. I don't have it though. I'm sorry, I don't have it. Sorry, Jen, on your birthday. I'm sorry.
I know. Happy birthday, Jenny. But I've said this on the show before, and we're going to talk about Jenny's birthday in a second. But I've said this on the show before. I have 26 cousins. 20 of them are redheads. And I'm talking redheads. So I get every article sent to me by all of them. Oh, hold on, let me turn that off. Doctor's appointment. I get every article sent to me about how redheads are smarter, faster, stronger, have a better pain tolerance, because I'm one of the only blondes in our family.
So you have very low pain tolerance.
They claim I do. I don't think so.
Hey, all right. So
speaking of pain tolerance, how you doing in markets today?
What's that? I'm sorry.
Speaking of pain tolerance, how you doing with these markets today?
Well, I'm down a little bit today, or at least when I shut the platform down, I'm down a little bit. This is just a risk-off world right now. I think what's happening. Oh, by the way, we got to look at your MCL position, because I think we could take that put off if you didn't already.
We didn't. So let's pop in. I didn't take it off. Take a look at how much juice is still left in this put.
Yeah, but isn't it about half of what it was yesterday?
Yes, it is. Yesterday we weren't even at 50% yet. So let's take it off. You're right.
Yeah, I would, and I'm not. So here's it's not so much the why, but the what, right? And so oil is up 7-8% today. Why? Well, apparently Iraq is shutting down some of its bigger oil fields. Whatever. Okay, maybe that's it. But I think, very broadly, it's just sort of a little panic buying on the upside. Just like everybody is now afraid, or at least the story is, of inflation. That's really what's spooking people. That's why bonds are down today. If you look at ZB.
Oh yeah, they're all down today. Take a look. ZB is down 12 ticks. Hold on, I'll pull it up so for the class. Whoops, ZB.
ZN will do too, but ZB down 12 ticks. That's not a huge move, obviously, but it's relatively big for bonds. So what it is everybody's afraid of inflation now, or that's the story. And so they're hitting bonds. They're taking the starch out of the stocks. The S&Ps are down, $150 when I last checked them?
Yeah, so they're rallying a little bit, TP. I hate to say this. When we come on, because the European market's closed, we sometimes get a little bit of a rally during the show. SPOs are only down 124. So SPOs are down 124. They're picking up some steam. I just filmed my market mover segment, so it was kind of fun. I had, that's why, what a difference. That was 10 minutes ago I filmed it, and we got a big rally because SPOs were down almost, 2.5, and the small caps were down 3.5. We are for sure getting a wee bit of a rally on everything across the board.
Yeah, I'm thinking, and again, I'm not a technical person at all, but if you look at the SPX, I think 60, where are they now? I think 67, if they get into the 66 handle, in other words, 66.50 or whatever, I think then you're going to see a little bit more panic, maybe, just because there's a lot of open interest down there, a lot of people who might have to bail out who are weak longs. Stuff like that.
So take a look at this chart, though, TP. From your perspective, you and I have been trading for hundreds of years together. And when I look at this chart, it doesn't look as the down felt this morning. Oh, good, we're out of MCL. This does not.
Phil, nice.
Phil, it does not appear as this down move feels. Do you know what I'm saying? Like yesterday, it felt like it was a bigger move, and today feels like it's a bigger move. But it's not as bad if you kind of step back and take a look at this chart.
Right. And I think this is a good example of, I always say, I price things in percents, but I pay the bills in dollars. It's like I can't, pay my electric bill with percents. They don't know what that is. I need dollars. And the difference is that with a $6,800 index, a 2% price percent change is a $130 or $140 dollar change, right? And when we're trading and option prices, it's all the points, right? If I'm short the 6,700 puts, I don't care what percent change it is. I want it to stay away from 6,700.
Yeah, that's correct. You want it to stay away from. You do not want it to go through your strike.
So Liz and I look at dollar changes when it comes to actually trading. Yes, theory and all the option pricing models look at percentages. I get that. I get it. And percentages normalize things. And that's why, Liz, when you're looking at that chart, you say, look at the sell-off. It feels bigger than it actually is. Because I wouldn't say we're in a crash at all in the SPX right now. I wouldn't say we're not. It's not down 10% or whatever the metric is, whatever people want to talk about. But when you're actually trading this stuff and you see them down 150 points, then bouncing back up 30 points, those are big price swings.
It's so funny, TP, because we talk about this all the time on the show. You said feels like, and it's kind of like the weather. You're in Texas, so sometimes it can say it's 90 degrees, feels like 120. Right? Temperature in Texas is 90 degrees. The feels like temperature is 120. Is my guess. That's very similar to what's happening right here.
I don't know if there's an opposite of wind chill, but you're absolutely right. And so that's the SPX. And the dollar is again rallying on this. So I know we saw a little premium in 6E yesterday, right? Or 6E. You did
This is good. I mean, and we've got the 31-day option. I've got a broken wing an upside broken wing butterfly. So this is good. It's doing the job.
And I wouldn't necessarily take this off now. As I'm looking here, you're up 60% on the trade. Is that correct?
Well, that is correct because it's a broken wing, right? So we were saying I only took in a very little credit. I think I took in $50?
I don't remember.
Yeah.
Yes.
I mean, that's what's bizarre with those kicks. It's because I took in about $60 on that. So it's not, that percentage might be, once again, I don't know if that's 100% accurate, but because it's a broken wing butterfly, I do kind of want to leave it on. Wait, TP.
Fair enough. Because you don't have any risk to the upside, but the dollar is stronger here.
Can I manage two things that I just put on 10 minutes ago?
Yes.
Okay, so during my market mover segment, I put on a 0T SPX, very small put spread, because my whole point was, I said, TB, I think you like this. You got to tell me what movie this is from, okay?
Oh, no.
you got this. You got this. I think you got this, okay? Fear does not exist in this dojo, does it?
Is it Karate Kid?
Yes, you did it. It's Karate Kid. Okay. And it's the
Thank you.
But I was just saying, trades are managed at order entry, and what can you do on a day? Oh yeah, we got the bells. What can you do on a day like today? So I gotta clean this out before Jenny sees it or she'll kill me. So so I traded a 0DTE SPX put spread. I'm up 70% because I collected $1, very low risk. I'm closing.
Get out of it. Buy that thing back.
Yep, buying it back. And then the other thing that I did that Jenny is going to hate because she hates being long silver is I sold the 55 silver put and I made $30 in 10 minutes. I'm closing it.
Take it. Nice. Nice. Happy birthday, Jenny.
Those are your birthday presents.
Happy birthday, Jen. No, and that's what you got to do. And you have a hunch and you put on a relatively low risk trade. Silver, working on your
SPX. I mean, I'm going to pay 35 cents for it. I made 65. I only risked a little bit, and this is gone today. Could I leave it and get the extra?
And what, you did it 15 minutes ago?
Yeah.
No, it's, and I'm sorry, Liz, you are the most knowledgeable trader. You're as knowledgeable as anybody else out there. Do you know which way the S&Ps are going to go for the rest of the day? I don't know.
No, but upon talking through this, it was kind of fun because I think that segment's for different viewers. But I said, do you think? And I mean, nobody could answer me because I'm by myself at this juncture. I was like, do you think? It's fun because nobody can respond. SPX is going to go down another 46 points because that was the expected move. And my answer was, okay, I'll take my shot. It's already down 150. Do I think it's going to be down 200? I don't know.
Right. It's a rhetorical question. Yeah. Hey, we talked about the VIX yesterday. I want to show folks that same thing today.
Okay. So I put a very small baby trade in the VIX yesterday. We're up 25%.
In 42 days. But let's go back into those options and we can see.
Okay.
So just in the marches, let's do something. Let's go into the marches and let's do something. Let's let's sell the March 24 call. Let's just do the 24 strike. Buy the 24 put.
Okay. Oh yeah, we're doing that. Sorry.
Buy the 20. Yeah, there it is. And go to the Aprils now.
Okay, we'll do the opposite, right? I see what we're doing now. We're gonna.
Yep. Buy the 24 call. Sell the 24 put.
Ooh.
This is now a credit.
Yes.
Luke and I were talking about how cheap it was, or I was talking about how cheap it was at 20 cents, right? And how it had rallied up to, what did we say, 40 cents or something like that?
Yeah, it was yesterday when we placed the trade. It was 40 cents.
Yeah. Now it's a credit. Why? Why is this happening? Well, like we said yesterday, when the market starts puking, the front month VIX goes higher. So what's causing it to go from a 40-cent debit to a 60-cent credit? Where the front month, where the March is trading over the April. Here's where you can see it just plain as day. If you go up to the symbol section where it says VIX, in other words, let's type in a new symbol, slash, do slash. And Liz, I hate directing you like this.
No, do it. Do it.
VX.
Futures.
Yeah, H26.
Okay.
So remember, that is up $2.80, up 13.4%, up 13.2%. Okay, remember that.
Okay.
Now change the H to a K to make it the April future.
So VXK26. Okay. Up 13%. And this one's up
5%. Okay.
Dun, dun, dun.
So, and you can blame me for putting your short put spread in the Aprils because I thought it was relatively cheap, and it was relatively cheap. Now it's cheaper. Okay. But this is a perfect example of why when the market starts puking, when the blow pies, right? When it's dropping sharply, whatever it is, the panic goes into, it's reflected into the nearest VIX product there is. So the cash VIX, spot VIX, goes up the most.
Yeah.
Then the successive futures go up, but not as much. Okay. So what is the actual VIX up?
VIX, the actual VIX is 18%.
18%. Remember, the Marches were up 13 and the Aprils were up 5.
Yes.
This is a real life example of what we talk about, where the front month stuff, whatever stuff is in the VIX, gets jacked up first. In other words, it goes up first and fastest, and everything else afterwards is much more muted. So that's what we're seeing today.
Yeah, this is amazing. It's fun to look at. Did you ever hear the story about I'm trying to talk about Jenny as much as I can because it's her birthday. So we were talking, this was years and years ago, and she was in for a facial, and she had bought, and I knew what she had in her account because we talk about everything, right? She had bought some near-term VIX calls, okay? She had purchased near-term VIX calls, meaning like 4 days out.
Yep.
And then the market was crashing while she was in getting her facial. Do you know what I did as a friend? Like, the facial company has never heard this before. I called the place where she was and I said, patch me through. I need to talk to her immediately.
Patch me through to the chair.
Yes. I need to talk to her immediately because I know she has short-term VIX calls and this might be her only opportunity to take a profit.
100%. So it's, well, did she have a phone? Was that in cell phone days?
She did, but she had it turned off. That's why I had to call her.
No, well, see, that's just it. And the VIX is a big product. It's big and risky. It's expensive. It's $1,000 a point in the VIX futures.
Yeah.
So I like to have spreads here. Right. I like to do like you did yesterday, sold a put spread. That's that's how I typically trade the VIX.
Take a look at this. What we were looking at the other day, the June, they were the out of the monies for $1 are now $4. And they haven't closed them. They're still 129,000.
Yeah, they're up, presumably up some.
They're up millions of dollars.
Well, see, and okay, now look at this. Type in /VX. M26. Now those are the Junes.
And those are only up.
less than
Those are only up 3.92.
That's the way it is, and that just illustrates what we're talking about.
Yeah,
That's it.
I love it.
So one of the questions we had were defense stocks. And
You know what? I'm going to go to Fabio just so we can go back. Fabio, we love you. We wanted to start with this. TP and I sometimes get a little off the rails of the crazy train, but we're
sometimes.
but we're going to start now. So Fabio, happy Monday. Today is Tuesday. We put a pin in this last night. What do you think about defense stocks? PLTR, Lockheed Martin. I don't know what HII is, and other defense stocks. So what say you, TP?
Yeah, I mean, part of what's going on is all these, it's blasting all the hideouts of the mullahs over in Tehran and knocking out the missile sites and all that stuff. That's real life expensive.
Yes.
You shoot a missile off, you're going to make another one. And it's all this stuff needs to be replaced. And also, and I've never served, I've never been in the military, but the stuff is any equipment out there is really, really gets abused horribly, even just through normal use with the sand and the water. It just gets smashed around. So the stuff needs to be replaced, even though they're beefed up. So if this gets prolonged in any way, right? If the U.S. doesn't necessarily have boots on the ground, but is still shooting the occasional missile over into maybe Iran or somewhere, or if Israel is, or if Europe is, or if anybody is, they need to replace their stockpiles, right? Yeah. So what I did, and this I think is, and I think we've done. Maybe I did this with Jenny, but one of the things I like to do when I think about a sector, I like to create a little watch list. So could we just do that?
I think we did it. TP. I think you and I did it together.
Did we do a defense stock one?
We did. Defense stocks right here.
Right here. So Boeing is in there, RTX, ITA. We could add the ones if we go to the
we can add them.
List page.
I'm going to put PLTR on there only because I did not know it was a defense stock.
Yeah, I think the easiest way, you could just add it in there. You can actually just
add, right? There we go.
Yeah, add, and then HII he talked about. And then there's L3 Harris, which is LTH, I think, or LHT.
No, that's Lifetime Holdings.
Or L, is it?
Let's try LHT.
No. What's
We'll figure that one out.
We'll figure it out. But and then there's so you have General Dynamics, NOC, then LTH, or LMT, which is Lockheed Martin.
Lockheed Martin, yeah.
Lockheed Martin's another one. And here's what I like to do. Lockheed Martin. Let's just go with this. And if you open that up on an actual market watch page.
I'm going to do it here. So I'm going to go to
watch list. And so you go up here, defense stocks. There they are. What I like to do from here, first of all, I can see the IV rank of these products right down the middle, and I can sort them by IV rank. And what's interesting is that, first of all, they're all down a little bit today, but their IV ranks are all pretty strong. What I also like to do is add in the liquidity indicator. So if you go to the configuration button.
No, I don't have that in there yet. So I'm going to go to the configuration button.
Configuration button, and you scroll down to liquidity rating.
There we go.
See how easy that is?
Yep.
And so this is, and it's over probably on the right-hand side. There it is. The Palantir is the most liquid. Boeing is liquid, and Raytheon RTX is kind of liquid. I like SPY is the gold standard for liquidity. Has penny wide bid-ask spreads and piles of open interest. Okay,
the chat is telling us it's LHX is the one you were looking for.
LHX, thank you. L3 Harris.
There we go. I'll add that.
They make like night vision stuff and stuff like that.
Okay.
So of these symbols, and I don't know, and look, I don't know anything really about defense stocks other than if the shooting continues, they're probably going to go up in price. Maybe. And they're down today. Okay. So, they're yes, the sector might go higher, but they're going to be pulled down by the S&Ps.
But they did yesterday. I'm just going to say Raytheon because it's pretty liquid. Yesterday They bounced up though. So there was a pop on a lot of these. Mine is Boeing. Boeing was down yesterday, but this popped all the way up here and it's staying in that range.
Mm-hmm.
But so I just want to say the pullback is still high for where it's been.
So if you were, let's take a look at RTX and how we might trade it. Okay. So let's say you're bullish on this thing. I open up the April options, 45 days, just to start the process, right?
Yep.
A 40, and stop me if you disagree anywhere here, Liz. 45 or 54% IV rank, I'll look at some short spreads.
Yeah, short spread.
Short verticals.
I agree.
For $200, forget whatever. Most people don't. Okay, so I'm going to start and maybe the 90.95.
You think so? I just picked the expected move for the cycle. I'm selling $5 wide for 117. That's not bad.
It's not bad. I like to get a third of the width of the strikes. That's my target. But
so that's got to be a little bit more. So you could pull it up, but look. So there's a common sense slide here. If you're getting 125 for it pulled up or 117 for it down here, I like the 117.
So do I. It's basically 8-cent credit doesn't really make a difference. But the problem is with RTX, even the bid-ask spreads are really wide, 285 to 370. Just for the sake of argument, and this is exactly what I do when I look for trades. Go to the April or go to the Marches. Clear that out and see if they're any tighter in the Marches.
They're not. They're not.
No, this is...
Dude, I think the PLTR is going to be the most... I forget it's a defense stock, to be honest with you, but I understand that they all have that different liquidity. This had the highest stars, and it's got 27 million shares have traded. This is something I look at all the time, and this is something that is pretty liquid in market.
So this is why we would, and I certainly would, not necessarily trade RTX. That if I wanted exposure to defense stocks, like you just said, Liz, PLTR is a better trading choice.
Right.
I don't know if it's as good a defense stock. I don't know.
I did not know PLTR was a defense stock. Just like Boeing is like defense light to me. It's there, but it's not 100% defense.
Well, here's and again, Liz, what do I know, right? But Palantir collects data, and they put together gigantic databases to draw inferences about behavior. And I think so. What they'll do is I think the reason Palantir is a defense stock is they can help with targeting. So you have General Dierking, right? And she's going to launch a ballistic missile somewhere. Where do you
name? I like the name.
General Dierking. I do too.
It sounds
I
dramatic.
do too. General Dierking.
Huh?
But the point is, Palantir can take in a bunch of geographical data and merge it with a bunch of, human data. Like, we've been tracking so-and-so in Tehran for 3 weeks. We know where he is. And there's such a marriage now, and I'm not a huge fan of this, but there's such a marriage now between government and these private industry, like Palantir, for example, that it is a defense stock. So it probably powers a lot of the drone information, a lot of the targeting information. And that's just me guessing. Okay, I don't know.
Well, I think the chat agrees with you because somebody, and it was Adam was saying that with all the AI stuff, AMD and NVIDIA are technically defense stocks now too because of some of the things that they're doing.
Well, and I've seen, that's exactly right. And I've seen these cool videos where they'll have like, you look through a screen and it turns the battlefield, it outlines the battlefield, right? There's a soldier, there's a tank, there's a, whatever. And so it takes away all the noise, right? So if you're trying to kill somebody, it makes it easier. Those are expensive things. Those are, like very expensive things to outfit a soldier with. That's why we spend so much money on our defense budget. But the point is, that's all AI driven. In other words, I see this shape out in some dark, smoky battlefield. It takes AI to determine what that is. So that's Palantir.
Okay, I agree. Now, I think we should place a trade in TP because you are here and you are the smartest person in the room, even though you don't pretend like you are. You're gonna pick something. Let me go to my watch list. Why can't I see it? There we go. Watch list defense. We're back. Now my vote would be Palantir, but it's only got a 26 IVR. Let's go
then my vote's Palantir too. Let's see what we get. So let's open up Palantir, and this is. Again, it's if Liz just said, if General Deerking just said, TP, you got to trade Palantir. Okay.
Can I
no problem with that.
Can I ask a question about it too? It's a $150 stock, so I'm just gonna price some things out. So I'm gonna go to the expected move. I'm gonna go to the 120, and I just want to see how much money we're putting up. Oh, that's not bad. Okay, 120, $1,200, collecting 340 in premium, putting up $1,200. That's not a bad return on capital.
That's not bad. And so I understand if you have, let's say, a $5,000 account or something like that, it's going to be too expensive. $1,200 using up, a quarter of your capital. You may not want to do that. Okay. But to your point, Liz, this stock this short put has an 89% probability of making half of its $340 max profit. So it has an 89% probability of making $170 before expiration.
Yeah, that's pretty good.
It's relatively high. And then I have $9 of theta for $1,200. And this is what I talked about yesterday on a YouTube video I did, short puts versus short put verticals. Now, and I don't have my little calculator open, but now let's just, for the sake of argument, let's buy the 115 put against it and see what we get.
82 cents. Now, if you're defining your risk, I would almost bring it up a little bit because forever give me there's a gotcha. I would go with the one.
Yeah, right.
I would go 130, 125. So you're taking in something, but that's a good return on capital, TP.
Yeah, it has the same thing. It has about an 80% probability of making half its max profit. So it's a smaller trade. It has smaller profit, generates a lot less theta, but the buying power is also lower. Now, what's interesting is the theta got crushed. The theta is about 1/10 of what the short put
of what it was. Yeah, I'll go back to there. So we're all looking at this. The theta, this is 9 cents a day, which is a lot, right?
It is a lot. And the buying power requirement only dropped by about 70%.
Yeah.
Okay, so I would prefer actually here the naked short put.
I mean, I would too, and I think I always would prefer the naked put. A lot of times I'll prefer the naked put if you have the capital. There's some things I'll open up and the capital just isn't worth the risk for the naked put. Sometimes it's holding up a lot more capital than I would have expected to see. Here, this isn't bad.
We'll see here, and the thing is, this is why IV rank is a good place to start your analysis for finding a trade. But you also have to look at the number on the far right hand side, where it says April 17th, 2026 on the left hand side.
Yep.
Go to the right hand of that blue bar, and you see 63.2%.
Yep.
That is the IVX. That IVX number is the overall volatility for Palantir's April options. 63% is pretty high.
It is pretty high. And you know what people fail to realize here too, TP, is like kids these days have it all. Because then right next to that 63%, you plus and minus 20.13. That's the expected move for the cycle, given the implied volatility of PLTR of the April 17th. And you don't even have to do any math. Like you don't even have to go in and be like, what is 143.05 minus 20.13? It's all right here in this brown bar.
What we do for our kids, Liz.
Yeah, kids these days.
Unbelievable. So that's why if I wanted exposure to the defense industry, I'd sell this put in Palantir.
I'm doing it. So Palantir holds a special place in my heart as well, though. So that's why I didn't know it was a defense stock, and I'm always in Palantir. And I do have my son trading Palantir as well. He's got a small account, so he trades put spreads. I usually have puts or stock stock with strangles around it, just because PLTR is one of my.
Well, and this is why, and I think this brings up.
I didn't even know what they did, TP. I didn't know what they did.
See, this is, I go back to this. When you start trading, you see the world in a different way.
Yeah.
So you listen to the news, you listen to whatever, you read, you see what's happening. Oh, defense stocks.
I got this from a 7th grader. He loved it. A 7th grader told me to look at Palantir. I was like, if you're looking at Palantir, I'm getting long.
And if it's a good trading product, you trade it. If it's a bad trading product, you look for something else.
Correct.
It's as simple as that. We looked at RTX, didn't like it. And none of the other defense stocks really have great options in them. I don't care what you think about the defense industry or if it's going to go up or down or whatever. If it's not a good trading vehicle, if it's doesn't have tight bid-ask spreads and decent volatility, I don't care. My opinion about defense stocks doesn't mean anything. Liquidity does. Okay? So, yes. Is Palantir a defense stock? Sure, why not? But I don't care that it is or not. I like the metrics on that trade. That's more important.
So that's what I want to be pretty clear is that we as traders, now we're former floor traders, TP, we are not news reporters, right? My job isn't to upgrade or downgrade or decide what direction things are going. My job as a trader is to assess the trading that's in front of me and saying if it's a high probability trade in a liquid product. Because one of the questions was, if the host doesn't know what PLTR actually does, how does this show have any value to its audience? And I want to address that because I think that's a pretty important point. The whole point here is the trade setup, not what PLTR does.
You know who knows what PLTR does? The market knows what PLTR does.
Right. The market knows.
Look at the open. Which put is the 120? The 120s?
We sold the 120s.
12, almost 13,000 contracts of open interest on those 120 puts alone.
Today. And if you are trading a liquid market, so as ex-market makers, we've been in, TP, I know you were a bond trader.
I was just in one and a half products, 10 years and 30 years.
So you were in the 10-year and the 30-year bonds. That's where your expertise lies. I was on the SIBO floor in options, and I traded in every single pit there was. So if you're going to ask me what one of these did, there was a lot of times when I didn't know, but I could still price the option for you.
That wasn't your job. Your job wasn't to know what the company did. Your job was to fill paper.
Yes.
Okay?
And to understand where the volatility was, where things were trading, and to price it accordingly. And that's really what we do here.
Right. And so, yes, how can the host think about a trade in Palantir without knowing what the stock does? That's trading.
Correct.
Okay. It's a little like, how do I eat that tomato without knowing all the fertilizer and nutrients required in the soil to grow it?
Yes. We don't need to talk about
okay, if you do, that's great, but you don't really need it. What you need to know is whether the tomato is ripe or not. Okay. And, speaking for the two of us, and I'm going to go out on a limb here, Liz, that's our extent of tomato knowledge goes. Is it ripe or not? Okay. So if Liz sees a tomato and it's ripe, she eats it. If it's not, she doesn't get it.
Throws it over the shoulder.
Same thing with trading. Okay. How can we talk about Palantir if we don't know what it does? Easy. We just look at the metrics that are important to traders.
And you know what I want to add to this defense stock too, because we got this from Fazia the other day, and she told us what it was after we had already traded it, and we're making a little bit of money on it. Oh, we're filled
KTOS.
The KTOS. I did not know it was in defense, and we placed a trade in it. We're up 17% in 4 days.
Yeah. And I'm not saying Fazia doesn't know what KTOS does. Maybe she does.
No. She told us after the fact what KTOS did. She did know what KTOS was.
But it doesn't matter. Okay. Right. The metrics of the trade were good. And that's more valuable than knowing what the company does. Trading gives everything a different perspective.
I agree. Okay, TP. Now, I want to put that on our defense stock list, and we will do that. We've managed a couple things today. I just want to scroll through to see if anything needs to be, I'm going to actually just go P&L down here.
S&Ps are coming back, Ms. Thing.
I know.
Down to 111.
So this is what happened to us yesterday as well. During this show with TP and I, the SPOOs continued to rally from this point to unchanged at the end of the day.
Well, here's what it is. I challenged Liz, where do you think they're going to be at the end of the day? I said down 20. They got down 10 at one point, but
I saw
broke my heart. Liz was correct. Liz had a hot hand yesterday. They closed basically unchanged.
Yeah, but it's better to be lucky than smart. That's just a guess, and nobody can say where it's going at the end of the day. TP, I'm going to flip the cards over and ask you about natural gas. I've got 50% in natural gas. I think we should probably take it. It's $100. There's two things that we can do here. My markets aren't loading right away. It's a downside broken wing butterfly. Remember what we did in 6E yesterday to the upside? This is natural gas to the downside.
Yep.
So one can buy back, if I could get my markets in here, I don't know why it's so slow. One could buy back the 255 and just butterfly it off, or I can take my $100.
Could we just do a quick test with that NG? Type in IWM or something like that. Oh, there they come. Okay.
Hold on, and I'll go back to it, and then we'll go NG. That was very bizarre.
Sometimes you got to rattle the cage a little bit and to get the quotes in.
Okay, so I'm just going to show you a couple things that we can do. We collected 20 cents on here, okay? So I can buy back the 255. I'm sorry, sell out the 255 and buy the 265. And this is creating a symmetrical butterfly.
Mm-hmm.
And to do this, I collected 20 cents, and now I'm paying 11. So I will have locked in 90 cents or $90. Instead of closing it for 100, with the chance if natural gas comes back to make more.
So basically, you're just taking off your downside risk.
Taking off all the downside risk. So, but I will assess the situation here occasionally when I look at this. If I can take it off for $100, or I can butterfly it off, locking in $100, I'll butterfly it off.
So just for the sake of argument, what would happen if you rolled your 27 puts down to the 265s? How much credit do you take in there?
You don't. If I'm rolling it down, I'm paying 8 cents.
I'm sorry. Yeah, you're right.
No, but I like this TP. Then my butterfly's bigger.
You have a bigger, wider butterfly in case NG sells off. But you have. How much credit did you take in for
I took in here, I'm going to show you this. I took in 020, so 20 cents or $200. If I'm paying 008, I'm paying $80, locking in 1,200 instead of, or locking in 120 instead of 100, correct?
Yeah, yes.
Yes, I'm doing it this way, TP.
And you have you just have a wider butterfly.
Yes.
There's no better or worse here, folks. If you want to have less risk on, do the original idea, roll the 255s up to the 260.
Well, no, in this situation, I really don't have any risk on either. I have a butterfly locked in a credit.
You don't.
Even if I paid 9 cents for it, I have a wider butterfly that I locked in a credit for. Done and dusted, TP. I love it.
Film is thing. So the point is, this is where options provide a choice, right? And you just and sometimes it's fresh eyes. That's why I talk to. So you're talking about you're not a reporter, right? Just speaking for myself, I don't really have a Rolodex. Okay, my speed dial is Liz and or Jenny. Okay?
And your wife. Yes.
And my wife, yeah, she's number one, obviously, and she's most of the communications, but she's just downstairs anyway. So she just yells up the stairs to me. But the point is, I only talk to traders. Okay, I don't talk to people with news. And so this is how traders think. So if I have a trade, hey, I'll call Jenny, I'll call Liz. What do you think of this? What do you think of that? And it's not like it's something I didn't think, that I don't understand. It's just a fresh set of eyes. That's what happened here. That's all happened here.
I wanted to take the risk off the table and assess whether I could get close to that 100. And in my mind, I always think about rolling up the long, never thought about rolling down the short, and I'm glad you did it.
And it's not different, right? You obviously understood what I was talking about, and that's what you do when you become a trader. Oh, I can do this instead. Okay.
Well, and the chance of having a wider butterfly actually makes it a wider net to capture profit if natural gas goes down in the next 23 days.
Right.
Yeah,
Right.
great. I love it, TP. I learned a new trick today.
Yay!
I'm going to pop into Twitter if that's okay, and we're going to go top down because I want to see what we've got coming in. Oh, there we go. Oh, Florida 7. I love Florida 7. 2024 financial reports about 55% of Palantir's total revenue came from government customers. Just quoting.
Yeah. So like Florida 7 says, government customers is probably Department of Defense.
Yeah, that sounds about right. And then the man, the myth, the legend is coming.
The mighty Jack Tucker.
Jack Tucker, good morning, Liz and TP. With the move in the dollar with the conflict, use put ratio spread in 6E. Okay, so he's got a 6E. Let's take a look at what he's got. Very high probability, a 4-lot brought in $450. Let's take a look. So he's got the 13-14 put ratio.
Yeah, sure.
April 3rd. Okay, so let's get out of there. And then I'm going to go to 6E, right? We have a 6E position in, but that's okay. April 3rd, and he's got the 14-13. So buy 1, sell 2. That's not bad.
Yeah. So this has a slightly bullish bias to it. It's got a 6 delta. Okay. So it's not, Jack isn't taking a screamingly bullish stance on the euro dollar here. But if you think that we're going to sell off, but not too much, and Liz, can you please change either volume or open interest to the probability of expiring?
Sure, probability
or OTM percent.
OTM percent, there we go.
So what Jack is doing is selling an option that has an 89% probability of expiring worthless.
That's pretty good price. Taking in a credit.
That's pretty high, and he's taking in a credit to do it. So this is the type of trade, I like it. I mean, it is if ES continues to sell off, you have, and what, looking at that trade, what it is, if you're new to this kind of thing, this is a long put spread. It's long a 113, 114 put spread with an extra short 113 put. That's what it is. So
wait, TP, we've already got the upside on here. We've got the broken wing butterfly to the upside.
You could.
Would we want to do that same thing to the downside? I just wanted to see what we would collect. So here, I get a little thrown off with these credits. So I'm just going to go 80, okay?
Yep.
And we're going to bring this up and buy something here. How many?
Buy the 12 halves.
12 halves. So I'm only taking in 20.
That's a point away. But your max profit's $650 on that trade.
Yeah.
The futures, the currency futures are big products. They're like, 120,000 currency units or whatever they are. So it's a big P&L. But your buying power effect is only $42. You're not necessarily putting on more risk here combined with your upside broken wing butterfly.
You're not putting on much more risk, and you can kind of capture it.
Yeah, you could certainly do that.
Okay, my question.
You're kind of sitting in the middle.
You've kind of inspired me. So hold on one second. I feel like if I make it wider, then I have the ability to move when it goes my way down. So here you're collecting 50 cents. It's not much different than the original trade because he was only collecting 70. So here I'm collecting 50 instead of 70. My max loss is a little bit more though. So if you look at this, the max loss, I look at that versus the buying effect is about $1,100 versus here it's only $600.
You widened out the risk. That's all you did.
Yeah, I'm going to keep it similar because just symmetric in what we've got up there.
And so this is, and again, do we know anything about the euro dollar? No.
No.
Jack just pointed out something that was here's what it is, folks. It's show us something that's happening in the market. That's what I do with the cherry bombs and all that stuff. It's not newsy. It's not, I did this deep analysis into, China or whatever. I did a long put spread in FXI for the cherry bomb. The point is, it's all that stuff, all this talk is just context. It's just context. That's all it is, to get people's interest up and whatever. But when it comes to the nuts and bolts of trading, just show me the numbers.
You know what though, TP? What I love about our network and us as traders in general is, and I can hear Pete Molmat saying it because he's in that commercial. When you got skin in the game, you stay in the game. Because as traders, you and I both put our money where our mouth is. So I'm in PLTR, even though we don't know what it is. I'm in 6J. I'm in CD. I'm in all of these things, and we put our money where our mouth is. Versus I know a lot of other networks can't and don't. Well, they report things, but they can't necessarily be in them.
Well, I think that's a bit of a dodge. There might be, they might, have some legal, the lawyers might say, well, we don't want you doing this. And it's also, well, I don't want to be accused of trying to, talk up my position.
Oh, yeah, like talking your book, right.
Personally, who's listening to you? I guarantee that CalPERS, in other words, the California Pension Fund, that's probably the biggest pension fund in the world, isn't listening to you. And I'm not talking about you, I'm just talking about whoever is concerned about this before they buy Apple. Okay? If you have a short put spread in Apple, what you say, nobody's going to drive Apple up on your behalf. Okay.
No, not on trade small, trade often, because we're little small fries.
It's more important that Liz and I know what you feel when you lose money on a trade. Mm-hmm. I have losing trades all the time. I hate them. I've been doing this for 30 plus years. I hate them. I have them, that sucks. No, I hate having losing trades. But I know when you say, hey, TP, my Palantir put, it's in the money now. I know exactly how you feel.
How you feel it, right? You don't want it in the money, but that's where it's at. You should have seen Jack Tucker's, I think it was yesterday. He always does the recaps. Fantastic trader. You should probably, if anybody wants to, he's out here and they're following him. I'm going to go down here. I liked this. This is pretty fun. BJW is new to Twitter. Different approach today. One iron condor, $20 wide, 2 tranches of put spreads, $20 wide. Too early. He was selling the ES put spread an hour before the market opened. So that happens. Well, an hour before the market opened, we were down what? About right here. We were down about 90.
I thought we were down a little bit more.
Maybe 120.
Because I go in and out of sleep overnight, and I pick up my phone. Oh, what is Spoos doing?
I woke up this morning at 5 a.m. my time, and Spoos were down 143. And by 6 a.m., they were only down 120. And I was like, oh, we're going to rally today.
I thought I saw them before then. I think it was about 4 o'clock. Trust me, it's just because wake up.
I know.
They're down about 155.
Okay, he's down before me. Yeah.
I think.
Yeah.
So this was I've traded ES before. I've traded them overnight. It's a little hard. The markets aren't awesome necessarily, but you can certainly do it. And it's better than flipping through social media or whatever the kids do now.
Well, and I love that BJW is doing this because this is the product that the Spoos, Spoos futures is what I have my son doing because it doesn't fall in the pattern day trading rule because it's the future option. So it's small. I don't think it's as liquid as SPX, but it's, when your hands are tied, your hands are tied.
It's not. And the pricing is a little bit different, but it's the same idea. It's an S&P 500 product. So it has a couple of nuances versus the SPX or the SPY, for example. But the main thing, like you just said, Liz, because it's a futures option, it's under CFTC rules, not FINRA or SEC rules. It doesn't fall under pattern day trading.
That's true. And you can find whatever kind of risk parameters and what you can do. And it's similar, just a little bit less liquid. I got to get to this because this is amazing, Hibachi. Happy birthday to my birthday twin. Happy birthday, Hibachi.
Nice. Yeah, I'm not sure if I would ever see Jenny shoveling chocolate cake in her mouth like that. Maybe.
She eats like a bird. This is more.
You know way better than I do.
That's live footage of me. Oh, and then we've got the Polish Warrior coming in.
The VIX. Nice. Yeah, 20% overnight. Warrior, you never go broke taking small profits.
I know. I love it. And then TP, I know when the market has implied volatility up everywhere. I have a tendency to not trade earnings trades. What say you about this? I know we've got some big ones tomorrow. You know, you got AVGO, JD. We have a position in JD, Costco, Marvell coming up. But I have a tendency to kind of step back unless I've already got a position in it.
Yeah, I don't do a lot of earnings specific trades. I mean, look at Best Buy, BBY. It's up huge today.
That was up huge today. Why was that? Hold on, let me go to that. This is what we're going to look at.
Good numbers, I guess. They liked them.
I thought it was up more than that. Look at this. Yeah, so I had heard it was up more than that too. Best Buy was 60, 66, 89. That's a big move in Best Buy if you look at from that.
So that's okay. And here's the argument. Well, if the world is afraid of inflation, why is Best Buy going higher?
We don't know.
Right? And that's why isn't Best Buy like the standard for consumer discretionary income, purchases, buying TVs and gaming consoles and ovens. I don't know. Why is it up today? If you're so concerned about inflation, if that's real, why is Best Buy up? And so my point is this the time, if you want to get bullish exposure to the US market, now is the time to buy them.
It's pretty interesting. TP, this is the time in the show. It is 10:55. We have one sentence left. SPOOs are down 88 even right now, which is insane to me if you ask me that. Where do you think we're going to close today?
Okay, just to spite you, they're going to be down 50.
Shoot. Okay. They're going to be down 50.
Oh, you're bullish too?
No. I was going to say down 50. I was like, you know what? I think they're going to be down 110.
Fine. Well, considering my performance lately, I think I'm going to go with you, Liz. I'm going with the down 110. Hey, we also have to do something for our best friend ever.
I know, she's the best.
Do we have to sing the song?
We do. Ready? 5, 6, 7, 8. Happy birthday
to you. Happy birthday.
We're terrible at this.
To you. Happy birthday,
dear Jenny.
Happy birthday to you. Yay, many more. You know what I think? So, Liz, I think we might be better off with a spoken word version of that.
I think we
Happy birthday to you, Jenny. Happy birthday to you. Happy birthday, dear Jenny.
Happy birthday.
Happy birthday
to you. I like it. All right, TP. You have been a real joy to work with over the last 2 days. Hold on. You've got some writing to do right now.
Yeah, I got to write the cherry picks for tomorrow. And what I think I'm going to talk about, and writing the cherry picks usually they take a while. So this has been gelling in my head.
Yeah. It takes a better part of the day.
Yeah, so I'm going to look at the equally weighted S&P ETF. I think it's called RSP.
Okay.
Versus the cap weighted ETF SPY.
Okay, well, I'm on bated breath because I'm doing last call with the famous Tony Batista. So we will pull up your cherry picks and talk.
If I can get it done, I got to make sure I can get it done or you know what I can do is
just a teaser.
I can send it to you specifically.
Just text me a teaser. We'll take it from there. All right, TP, thank you very much for all your hard work. We appreciate everything you do. Everybody out there, remember to trade small, trade often. Laugh with us, learn with us, and watch TP and VLD. Thank you, TP.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And of course, Thomas Westwater, as it is Thomas Tuesday.
Thomas Tuesday.
How you guys doing?
Good, just a little tired from monitoring the situation, but yeah.
Mm-hmm.
How it goes.
It is a round-the-clock scenario for sure. Yesterday, we saw the market rebound completely, and then this morning, complete sell-off. But seeing a pretty swift reversal here from the lows in the E-minis and NASDAQ. E-minis down 90 points. This intraday range has been pretty wild. 170-point range here. Got as low as 67.18. We're about 80 points higher from that low print now. So we'll see what happens the rest of the day. But seeing some realized volatility, seeing some implied volatility. NASDAQ down 360. Bitcoin down 1,200. This is catching a bit as well. This was down a lot more than it is now. But the big news in terms of future movement is, of course, crude oil. Huge intraday range here. 7.5 point range in crude oil. Got as high as 77, sitting at 76 right now. And we're seeing the same story as we did yesterday. Heating oil, Brent, natty gas, and gasoline futures all up over 4%, with heating oil up 11%. Huge move there with this energy sector, and that is what we will be talking about today with Thomas. So I'm very intrigued to see what you have to say about that. Downside mover, silver, down 7%, gold down 4%. So we're seeing some interesting movement there, some kind of surprising movement there. I mean, I would imagine if the equity markets are selling off, that would be potentially one reason for gold and silver to rally higher, but not seeing that today.
Yeah, I mean, it's and I don't want to steal too much thunder from Thomas, but I mean, oil is the number one thing to look at right now. It's basically driving just about everything, and to get to your point about what's going on with gold and silver, it's driving that too because of what's going on with inflation expectations, yields, and dollars. So oddly enough, oil is our VIX right now. Oil is the thing that we need to be paying most attention to.
I really like that, saying oil is the VIX right now. That makes a lot of sense.
Yeah. Given everything that's happening overseas, this is going to be a direct result of a lot of that impact for sure, at least from the market standpoint. So we will keep an eye on it. We'll see what sort of trading opportunities we can get out of this thing. But we still have this iron condor on. We talked about this yesterday, but we put this on last week. This wide iron condor, the 60, 59, 79, 80. Glad we went higher in terms of strike selection on the upside. But the reason why we did was really just because we saw that recent rally in oil, and that gave us a lot of call skew on the upside and the ability to sell similar premium much further out of the money. And now we're realizing why that was priced in.
For sure, 100%. I mean, it was clear that it was pricing in a little bit more volatility without exactly knowing what was going to go on. Because again, this was, I don't know, last Thursday or something we put this trade on. Obviously, everything escalated over the weekend. And, look, we're never going to know every single thing that's going on down to the minute. I mean, this could have been in play late last week, and that's why we were seeing that. But this is one of the reasons we are so clued in to the markets, because we have learned over time that these type of things kind of clue us into some of the things that are happening worldwide. I don't know about you guys, but this is why I became so interested in markets, because you see things like this and it makes you wonder, what's going on? And sometimes it's a head fake. Sometimes it's like, oh, this is really priced in, and then the fade happens. But in this case, markets were absolutely right about some serious geopolitical risk.
Yeah, and that's what we're going to be talking about today, kind of like the paper geopolitical risk versus now in oil, we're seeing a tangible impact on the physical market, and that's, being baked in. So,
yeah, wild moves for sure. And we should expect to see this continue, given vol futures were in a pretty steep-ish backwardation, at least the steepest we've seen recently.
For sure.
There's about a point of backwardation between the first four contracts. And given the reversal today, we're still down, but strong rally from the lows, this vol curve is flattening out now. So still, flat curve tells you there's still uncertainty, and we should expect to see some craziness the rest of this week. I mean, as you can imagine. But just looking at SPX, putting this into context, when we normally have low implied volatility, we'll see a 50 or 60 point implied move for an entire week in SPX. Now we're seeing that daily. So 70 point move for tomorrow implied. That's pretty big. I think that's the biggest one I've seen in a couple weeks here, which shouldn't surprise anyone. But through the end of the week, 120 points. Through the end of next week, 200 points. So some real volatility being priced into these SPX markets. And we will see which direction they end up going. But expect some more volatility for the next week or two. That's
yeah,
for
man.
sure.
Keep an eye on these intraday ranges, particularly in futures. Obviously, SPX is not going to show all of that. But the futures, I mean, keep an eye on these intraday ranges because once those start getting bigger, things get wild. And you know what? I'll be honest with you. Yesterday's move and today's move, that's really not what you want to see. I mean, when we go down big like that, yeah, it's awesome when we come back. It's like, whoo, well, we have a crisis averted. Not so much, bro. I think this is something to pay attention to. We might be seeing more of these big moves. We could end up back down today or same thing tomorrow. But just these big intraday ranges, that's when things are starting to change.
Yeah. I haven't done this in a while, but this is an interesting time to consider these small one-day iron condors. So I basically was just doing the exact same thing, selling 5-point wide spreads, collecting $2. But with this implied volatility increase, now you have basically a 150-point range that you can cover with short options for tomorrow. So definitely an interesting time to start considering deploying these in a really small way. Mm-hmm. Just if there's any kind of chop or inside move, really, because this range covers 70 points in either direction just outside of it. So if you can pick up half of the width and we stay within that range more than half the time, it'll be a nice trade. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. I've got the referral program pinned to the top of the chat. You can check that out if you click on that link. But yeah, before we get to Thomas's slides here, I haven't done too much today other than closing the butterfly, so that 100-point wide butterfly to the downside. I looked this morning, I was able to get out for $9.10. So it was almost a double. Got $360 out of that as a hedge winner. And that's when we were down like 150 points. So timing was decent there. And then soybeans and corn both rallying today. And I closed both of those positions. So I had the 440, 450 call diagonal spread. That was a $150 winner. And then the soybeans 1200 calendar spread. That was a $120 winner. Just taking off risk here in these wild markets, especially when you have a nice win in an unrelated futures market. Or I should say, a futures market that's moving in the opposite direction of the rest of the market.
Mm-hmm. Mm-hmm. Are they up big, by the way? They are moving opposite direction?
Yeah.
Oh, yeah. Well, they're not chill now. Yeah, I closed out the GLD crab. I mean, look, the way this thing is moving around now, at the end of the day, I mean, I did this for further upside when gold was down before gold started really moving big to the upside again. And now it's pulling back. And honestly, given everything that's going on, I mean, I don't necessarily know that my short strike, my short two in March were at 465. And so the way that this is moving now, I don't really feel like waiting it out and seeing if this kind of lands around there. The way things are, it's just moving so much. I just decided to close. Maybe I'll redeploy another one. But considering that my short two and my one upside for the crab is in March, a little too volatile for the time being. So I closed for a slight gain on this. Same as you, close the SPX. I was holding on a little bit longer just to see what would happen, but close it for I don't remember what was my total gain, $270. So $8.30. And then app, this is one I ended up closing for a loss, but this is one that I had against a CRM trade that worked out well and a snow trade. So basically I kind of had this software sort of three-way trade going on. This was a short call spread in case the other two were long delta. Those worked out. This one didn't. It is what it is. Closing it. I mean, I'm just tired of dealing with it. It's actually kind of wide. I don't know if I ever really should have put this thing on, but those options are kind of wide and it was just kind of a pain. So closing it out.
Cool.
Good time to close out trades that you don't necessarily love. That aren't they could not necessarily be winners, but pick up some cash because we're about to go on a ride. We're about to go on a ride. Get on the roller coaster, man. It's about to happen.
Yeah.
Yeah, I took off. I had a long call spread on Meta. I took off just to get some risk out. And then a short call spread that I had too close on oil before volatility popped again and just took it off before we got too deep into a loss.
Like it. Why don't we pop over to the slides and we'll talk crude oil. Theoretical geopolitical now turns to tangible supply threat. What do you got for us today, Thomas?
Yeah, so I mean, of course, the situation in Iran, it's cascading. The Strait of Hormuz, which is 20% of the world's oil supply goes through there. There is 5 ships, I think, we're up to that were hit in some way by Houthis or, some proxy group. There's 300 ships waiting in docks, across the Gulf states to get out. And Iraq is now saying that their storage is almost full. So now they got to start winding down production. And Iraq is the second biggest OPEC producer. So this is a big supply threat. Before leading up to this, the oil prices were moving up in anticipation, but the things like your physical indicators, like the prompt spread, they weren't really moving too much. So if we go to the first slide, we kind of see how that's working compared to Operation Midnight Hammer, which is when we bombed the nuclear facilities last year.
If you could pop to the first slide, please. Thank you.
Yeah, so the top chart, just dual axis prompt spread versus the price of crude oil futures. Back in June, saw Operation Midnight Hammer. The prompt spread was rising before it. So, we were expecting this war between Israel and Iran to kick off. The Strait of Hormuz also had some disruptions, things like that. Now we have a much more acute rise in the prompt spread. So when this started Friday, the prompt spread didn't move too much, but now just in the past couple of days with the Strait actually being effectively closed, with Iraq saying they're going to stop production, now the prompt spread is very, very accelerated to the upside. And we see this with the Z-score down below, which is pretty much you're comparing to the past 30 days. And, that Z-score is above our whole chart there. So going all the way back to February 2025, it's just showing you the veracity of the move to the upside. So the prompt spread, we're trading around $1.10 right now. That's the highest going all the way back to July 2025. So when we were coming out of Operation Midnight Hammer.
So wait, that's $1.10. What's trading over?
I'm sorry, what's that?
The physical is trading over?
The prompt spread, so the near-term contract versus the next contract.
Oh, gotcha. Okay.
That spread, yeah. So $1.10 of backwardation.
Yes.
In there. And that's showing, people are taking crude now while they can get it, because you're expecting the supply coming out of the Strait to disappear. So there's a lot of the demand has moved forward, and everyone is trying to rush to get their crude oil. So, how do you trade this? I put on a short call spread yesterday, kind of figured maybe we'll have not a de-escalation, but just, not an escalation. And now it's appearing that, things are getting messier and messier as this goes on. Really depends what analyst you look at, but it seems like, now the U.S. is talking about backing U.S.-friendly proxy groups or regime, enemy proxy groups in Iran, supplying arms possibly to them, intelligence. When things like that happen, go back to the Afghan war with Russia, supporting the Mujahideen, then you get other players coming in and trying to support the other side, and it becomes a war between proxies. And then you get, the possibility of a protracted war. Then you get a power vacuum in Iran, and it could become a mess. So really betting on crude oil to go down is kind of a bet on the war ending. That's pretty essentially what it is. So, we've seen a bunch of cascading effects from the crude price going up. We've seen treasuries, just plummeting, the yields going higher. That's inflation fears, higher energy costs. And it's not just in crude oil. It's almost the whole energy complex, right? It's natural gas, the Dutch TTF futures surging. The U.S. prices kind of insulated, but that's because the regional market here is not really susceptible. We're a big exporter. We're not a big importer. So our market, we're seeing a little bit upside, but ultimately those higher energy prices in Europe could push up inflation, input costs there rise. Imports for products here also go up to bake that in. So, it's still connected with all these energy products going up. Then you're seeing the dollar rally. So this appears to be, it's a total war trade. The dollar's going up, yields are going up, crude oil is going up, natural gas is going up. So, the way I want to trade, I made the mistake getting my prices too close. There's a lot of volatility in crude oil right now. The IVR I think it's above 100 last time I checked, somewhere around there. So you could get pretty far out. I didn't take enough advantage of that high IV. I didn't push my prices out enough yesterday. So I want to try to take a shot again today on doing that. And, I'll probably go to 44 days out and go all the way, all the way out to somewhere around maybe 85, around there. And that seems to be where a lot of volume is concentrated in the options for the April 16th expiration is the 85 strike, 8,000 contracts compared to the 80, which is 6,000 contracts. You go up to 90, that's 1,000 contracts. So selling something right around 85 is what I'm going to do. Probably keep it pretty tight, just because, this could get crazy. We can't predict what a bunch of, interactions in the Middle East are going to happen. It could spiral more out of control. There's speculation out there that maybe China will take its shot to get into there. I think that's unlikely because then you get Article 5 in NATO and then you get World War III.
But that speculation is arising because they're largely affected by the Strait of Hormuz situation, right?
Yeah,
a lot of their crude comes through there.
Yeah. So I think the last time I saw China saying something is they might send ships to try to escort some of these tankers, do something like that. That'd be logistically very hard to do because there's 300 tankers already. China would only have to protect its ships, which, it's probably a good bulk of that because a lot of that crude from there does come through the Strait of Hormuz. You have to speculate on a lot of things right now to, play a directional move. But if you're doing the short call spread in oil, even if you get almost 10 points higher from here, you still have time if you're doing 44 days out for this conflict to kind of cool. And hopefully that's what does happen. But right now, like I said, that it's really hard to predict. You're trying to predict war, what's going to happen by trading crude. So, it is risky, but ultimately that's when you're trading anything, you're trading it on the prospect of something that's affecting its supply or demand, and at least when you're trading commodities. So what if the war ends though? What if they say they want to negotiate, we're going to do not a ceasefire, but like a pause. Those happen in conflicts. You could see the premium come out really quick if there's a chance to talk, if there's a pause, whether it be 72 hours, something like that. So I'm going to try to do this again. Of course, I'll be watching it. But like you said, the crude oil is pretty much the VIX right now. So you're judging the conflict based on the price of crude oil. If we go to the second slide, it's just kind of a comparison showing Operation Midnight Hammer versus Operation Epic Fury. The prompt spread is the left chart. So this is 30 days before. The prompt spread was already elevated. It lifted a little bit, but there was already supply, fears. We were coming out of that big backwardation from early last year. Now we have, we went from 22 cents backwardation to the time I ran this data, it was 92 cents, but now up to that $1.10 that we're at. You kind of see the same pattern in just the actual price of crude itself. So the reaction here to the physical market is definitely bigger than Operation Midnight Hammer. And of course, we choreographed a lot more that, hey, we're just going to send the B2s in, drop these bombs, get out of there. I did a few retaliations against regional bases, but really it was a lot more muted than people thought. So that premium came out of there really quickly. The premium is being baked in more and more as we get actual supply disruption fears. All these tankers that can't get in and out. There's a pipeline that Saudi Arabia could send over to the Red Sea to try to get out there. Iran could attack that too. So, even if they do that, it would take time, but that's susceptible to the war as well. So really this could be a situation where prices stay elevated. It's like, how high do they get if, things keep escalating there? It's probably in the 80s somewhere, I would assume. But on the other side, you have the fundamental market. We had a really huge crude stockpile build last week, the EIA data. There was no market downside reaction to that, which showed you that the geopolitical premium is controlling the price right now. So it doesn't matter what the EIA reports, the API, this week, you probably don't even have to look at it because everything is being controlled by what's happening in the Middle East. So the bet is you're betting on what happens in the war, not the actual oil price fundamentals itself.
Well said.
Yeah.
Well said. Yeah, I think if you're placing new positions, like you said, are you sticking with the K or the J contract? Or are you going to the K contract further out in time?
The K contract, yeah. Okay. I think duration's your friend here. You know, the more time this goes on, of course, the more time it has to escalate. I don't think we're past that, you know, that point yet. But the more time it has to de-escalate. So that's also, you know.
Especially if you're selling a call spread.
Right. Yeah.
So you have the
volatility comes down, everything kind of works in your favor. Even if prices stay the same and volatility comes down, you know, while there's a ceasefire or something, that gives you an opportunity to get out of your position before things escalate again, if that could happen.
I like it. Yeah, the April 16th cycle, 44 days out. The 85 strike is what you were referencing. Lots of open interest there, like you mentioned, 30,000 open contracts. But yeah, the risk profile looks fair here. I mean, you're up around the 35 delta-ish inside the expected move. But I actually got a question about this via email. Like when you have call skew in these environments, like you're seeing here, at which point does like selling a call spread or buying an option reduce your credit received? And really, it's all of these strikes until you get much further out where the call skew is less pronounced. But even up here at the 100 strike, if you look at the net change, these options have gained a ton of value, relatively speaking. And these options are, you know, the probability of getting up here is very low. So if you're selling a spread, I think you keep your risk in check, like Thomas said, and maybe start layering into some of these positions and see if you can get higher than the 85 strike if this thing continues. Because when you have those upper tier strikes, it becomes more of an implied volatility play than the actual product going there, unless you have, you know, a continuation of this and the price just skyrockets. But that's why we would stay defined risk in this case, especially trading the straight up crude contract. MCL, also a possibility. MCL is more digestible in terms of risk. And you have similar contracts here. You have 3 options contracts in the J contract going 14 days out, and then just 1 for the April contract. But just having 1 actually helps the liquidity because everyone goes here, as opposed to the dispersion in the big crude contract. But this could be interesting too. And this could allow you to get wider and have a higher probability of success here. But like we said, like the premium is way up here. So you're kind of at the mercy of the call skew if you are going wider in MCL. So I kind of like the idea of sticking with a smaller spread in the main contract so that you don't have as much skew that's hindering you.
Do you guys feel like these like lifetime events are getting closer and closer together? COVID, you know, multiple Russia, Ukraine, Iran twice now. It's like,
yeah, I saw something about millennials and everything they've seen. They've
Yeah.
7 market crashes, COVID, multiple wars, and it's like.
Is that the one with what's his name, the Joker? Like, yeah. I saw it too. I tell you too, like the market reacts differently. I mean, again, I expected more of this yesterday. I think we all kind of did. I was a little surprised that it was shrugged off so easily. So yeah, I mean, these things are getting closer, and as a result, the market is kind of unsure how to, I don't want to say price them, but to react to them. I mean, it's kind of interesting to see that.
Yeah. OVX : CGI. This is the crude oil USO VIX index. So like we said, like this is spiking like crazy. And this is why you have crude oil at 100 IV rank, MCL, same story. So premium here is definitely high. And interestingly enough, like let's say you have a long crude contract and you've ridden this higher, either a big contract or a small contract. I would be looking at kind of pairing this off with a collar because you can get a lot of premiums. Like we're at 75. Let's say you're long micro crude. Because there's so much call skew here, you could buy a put contract 5 points lower and use that premium to sell a call contract. As you can see, I'm still scrolling for the same premium. You can go pretty high here. You could pay a small debit and get into a 5-point downside protection and 10-point upside profit potential. So you basically verticalize your risk if you had a long crude contract. And you can see here, you're protected below 70 and you still have another 10 points of the upside where your contract can profit. So interesting dynamic as we get call skew infused into this product, but yeah, it's going to be wild to see what happens with this.
Oh, yeah.
What do you make of silver and gold selling off? Is it more just people flocking to the energy sector?
I think that could be part of it. I think this is a pretty like as the risk off move gets like pure, like the war trade. Yeah. I think you're looking more for dollars. You're looking for something that's just more protective versus some of those gold, and then silver has like kind of a growth aspect onto it too. So silver down 7% today. It makes sense if there's growth implications, higher inflation, treasuries diving. It makes sense to me that gold and silver are going to take a hit on those. So you're going to have stronger dollar for longer if you have higher inflation for longer. So when the war started, gold, it looked like really good. Like get into this safe haven asset, this hard asset that's usually protective in times of turbulence. But yeah, just the higher dollar, the move we've seen in treasuries, it doesn't surprise me too much that gold is now selling off.
Yeah, seeing in the TastyFX market, seeing a lot of intraday movements, some big moves here, a lot close to 1%, which is kind of wild. But yeah, the US dollar is certainly benefiting from what's going on here, at least in terms of relative strength. And we're seeing this come in a lot of these positions. Like the dollar franc that's just been beaten up is reversing very quickly above this upper bound in this Bollinger Band here. And it got even higher earlier today. So yeah, seeing some dollar strength in all the craziness, but seeing a calm here during this lunch hour. We've been fluttering around the same level for the last 20 minutes.
68 hundo futures.
That's true.
I think we're still in an environment where it's really enticing to try to buy the dip in equities.
Yes.
I think you're going to see a lot of this where we hit a bottom, kind of retrace throughout the day. Then overnight, reality sets back in, like bombs are still dropping, market opens again, and boom, you're like,
Yeah.
Yeah, you're not wrong. And you're seeing it like Microsoft, we've been saying this for weeks, that Microsoft, if there's one opportunity in a Mag 7 stock, like Microsoft's probably it. If you're trying to buy the dip. And Microsoft is one of the only ones green today after bottoming out around 380-ish, sitting at 400 now. So you
actually, that's a good point. What are the stocks that they have hated for a while? Like the big stocks like that. There's been plenty of those big stocks that they've hated. I bet those are the things that people are going to start to run to.
That's where you have to go, I think. I'm in CRM on that view. I should have gotten into Microsoft too, but they're already being down so much that they're going to be insulated just by that alone, I think.
Exactly.
Yeah, that's a good point. But yeah, some other ones moving to the upside. Of course, we're seeing a ton to the downside, especially the chip names, the high-flying tech stocks that we've seen.
Intuit is up $11 a day. Intuit's up 5 days in a row. What?
It's crazy.
They hated this stock. They hated this stock at $350.
Not anymore.
Hilarious.
Not anymore. Well, thank you, Thomas. We are in crude oil. Similar idea. Upside short call spread at 79.80. If you're entering in now, you can, of course, go significantly higher. Just keep your eye on your total risk. And I do like Thomas's point of having more time on your side kind of benefits you in this very particular situation, because if things de-escalate, you will see volatility get smashed in crude oil. You could see the price come down. And both of those things, of course, are good for a short call spread. Where in the near term, if you're in the 14-day cycle, which is the J contract, the latest options expiration you can trade this J contract, you could still see some really crazy turbulence over the next couple weeks as things shake out. But over time, going into middle of April, I would hope that we have some resolution by then. All right, popping over to the YouTube chat now. Let's see what the peeps have for us. Sup, dudes? Sup?
Sup.
Sup, sup. Microsoft call spread here. Like that 400 level, flow high the last couple of weeks, 425 strike. Sell the March and buy the April 17th for $5. So call calendar spread, it looks like you're looking at. 425 March, April. Let's see. Yeah, I don't mind it. I am already in Microsoft in a bunch of different positions, but yeah, no change to implied volatility, no change to time. You could be looking at $200 or more if you get a rally up to 425, and it's a cheap way to get some positive delta here in these turbulent times for sure, and still reducing cost basis. So 3 times the amount of time in your long option, you're picking up 260 relative to 780. So the ratio isn't that crazy, but yeah, you could definitely get into something like this if this is what you're looking to do. But I'm already long Microsoft, aggressively long. We have a bunch of business. I have a leftover long call from earnings gone wrong a month ago. I have a 450 calendar spread, so a very similar idea. Long April, short March, just a little bit higher. And then Jamal's trade, which is working out well, the 380, 370 put spread to finance the 15-point wide 425, 440 call spread in May. So that one is a longer term one with the same idea that, sub 400 Microsoft just doesn't feel right given the valuation of everything else. Steve got some leaps when it was around 400. Yeah.
Nice.
That's one way to do it too.
Yes, it is.
The volatility curve turned into backwardation. Yes, it did this morning. We are probably floating around flat. Yeah, slight backwardation here, 20 cents, but 10, 20 cents is nothing. It's basically flat. We're looking for a point between each of these contracts or more, and that's when you have real fear priced into the market here in the vol futures. Let's see.
This is such a fascinating day because, we've been talking about for weeks now with this 6,800 to 7,000 channel, how there really hasn't been any possibility of break upwards or downwards because of the bifurcation we've seen, right? We could talk about those days where the software and tech was down and these consumer staples and XLP and Walmart and Costco, et cetera, was up, and then vice versa on the other days. This is the first day that I can think of in the last several weeks where most of that stuff is down, and that's why we're having such a volatile day like we've had. You haven't seen Walmart and Nvidia down on the same days.
Yeah, and it's interesting because even XLE is down today. With the crude move up so much, even XLE is getting hit. So, that says something, I think.
That's why I don't really like XLE.
Yeah.
As we're sitting here, and I'm going to get on that soapbox, that's why I don't like it, because sometimes it acts like an oil name, and sometimes it acts like a stock.
Yeah.
Even though, whatever, ETF, but like a stock, right? And so that's why I think I think a lot of us enjoy just having the direct exposure of whether it's MCL or CL options, et cetera, because then you're actually trading oil.
Yeah, good point. And right now, if you're trading USO,
right,
you're okay. You're obviously seeing a nice gain here to the upside, but just be mindful of USO and UNG. USO and UNG both are funds that use futures contracts to create the fund. So what that means is if crude oil, which is currently in backwardation, that will help prop up USO's price and keep it up. Because as they rebalance, selling out of the near-term contracts, buying the further dated contracts. They're selling out of a higher price and they're buying a lower price so they can get more. They can get more momentum, I guess is a way to put it, where you can buy more of the same contract that's further out in time with a finite amount of funds. But natural gas is the opposite. Natural gas, you're dealing with contango all the way through. So when you're selling out of this near-term contract, buying the next contract, you have less traction with that transaction, because if you assume finite funds, you're selling out of a cheaper one, you're buying a more expensive one. You can't possibly have more of the same this next dated contract. So what that means is you'll see a product like UNG underperform relative to expectation over time, and that's exactly what you're seeing here. So UNG, not going to be great as a long-term trading vehicle. I mean, day to day, sure, you can see these things are moving around. USO, though, in this backwardated market, you can clearly see that USO is propped up pretty nicely here and moving healthily with the move in crude oil as well.
As it gets back to, that's why it's important what Thomas was talking about, that prompt spread. And anytime you're worried about it, wondering about any of these things, just take a look at the holdings. Like USO, for example, right now tells you that it's largely about 11,000 of the April futures, and then it's like 3,000 of the May futures. So that right there tells you how it's being priced.
Interesting question here. Question for one of yous. If people want to play volatility, why not use SIBO or CME options? IV and IVR is high in both. They both tend to spike with VIX. Why not sell puts or strangles in SIBO? Interesting.
How do they mean that? Which way? Oh, the actual stocks?
Actual stocks, yeah.
Oh. Well, SIBO stock is probably up today, which it is. Usually is on days like this.
Markets just aren't.
Yeah, they're not that great.
They're just not that liquid. Doesn't mean you can't trade it. I just think, like, given the situation, there's still going to be more liquid markets and more active markets to trade what you're trying to trade. There's nothing wrong with it if that's what you want to do. CME flat today.
I mean, that's kind of a real interesting derivative trade, if you will.
Yeah, literally.
Yeah.
But yeah, markets aren't too liquid in here, which is really the first answer to the question. How about a short put in EWY?
Already got it.
South Korea sold off today, rallying from the lows.
Big time sold off.
Sitting at 130. Thomas, what do you think about these markets here?
South Korea, I don't usually trade this. I don't think I've ever traded EWY, to be honest. I was on the Asia desk back in the day, but that was more, we traded currencies. So yeah, EWY. I know Korea, there's people saying a tail risk of a conflict there when the U.S. is distracted. Same thing with China and Taiwan. I don't think that's too true. But these Asian markets have sold off hard.
Yeah.
Until today, it might still be the best performing stock market out there. And as you know, I sold a strangle in here. God, how long ago? I sold it 10, 12 days ago on the 20th. So short the 120 put, short the 160 call. I figure why not? It's an ETF. It's high vol. It's been fun.
Yeah.
This thing's active. I mean, there's a lot of volume trading in this right now, option-wise, a whole lot, stock-wise as well.
Yeah. And 100 IV rank, 65% IV. Like, this is the environment. If you're selling a strangle or selling premium, like, this is the environment you're waiting for, really. 65% in an ETF is not low. And you can see this here, like picking up $9 if you entered this in today, the 120, 160, picking up $9 on $1,400 in buying power. Very efficient return on capital potential. Markets are a little wide, but I mean, you can get away with it, especially if you're staying in this trade and picking up dollars every time you roll. So, like it.
Dollars.
Uno Shark did a covered call in EWI this morning, and it's already a nice winner. Yeah, that's another way to do it. Just pair it with stock, take advantage of the premium with stock. In that same lens, like I would also consider call ratios against stock. You can do like a 140, 150, pick up $150 and double your delta between 140 and 150. Always in play with 100 shares of stock. Similar story, just more aggressive to the upside if you're looking for a reversal. Let's see.
Speaking of reversal.
Yeah. Catching a bid here. I've been buying Leap puts at the money. Good or bad idea? Good idea if it sells off. I don't like Leap puts because the markets drift higher over time. Like, yes, you can get into a Leap put, and then in days like today, this morning, like if you're selling on that big sell-off, then that's a nice trade. But if you're not, and you're waiting for some kind of multiple, like you're basically waiting for 10% sell-offs in the markets, which are tough to come by. But it's up to you. A lot of chatter today in the chat. We appreciate y'all. You can go so far out in CL right now, 85 even seems tight. Yeah. You can go higher. It's just tougher to do with defined risk to pick up decent premium relative to risk. But if you're undefined, yeah, you can. The world is your oyster. You can go way, like all these options are trading for the same amount. Similar amount.
It's probably a good time to talk about a fun trade I did yesterday on last call when Nick and I were on. I looked at the March 9th, which was 7 days out at the time. I bought the 77.80 call spread because it does feel like, at least it felt like yesterday, guess I've been slightly right, that we could be looking at 80. So I bought that call spread for, I mean, I looked at it like maybe 40 minutes earlier in the trading day. It was like, I don't know, 2 p.m. our time, and it was like 39 cents. And I was thinking about buying it. I actually talked to Vecchio, and we were like messaging back and forth, but somehow he didn't hear me. I was like, what do you think about this? He didn't say anything. I was like, you know what? I think this might be going on 80. We could see. So I decided to buy that call spread, but on top of that, I sold an MCL contract. And so it's kind of like having somewhat of a interesting straddle, if you will, whereby if we do de-escalate, right, we could see very quickly this could fall. And so it's just a matter of, can I monetize that? Can I monetize that if we fall? Can I monetize that future to the downsides? Can I make more than what this call spread would lose, which in this case is basically $500. So I sold it at 72 yesterday, MCL. So obviously down to 67 is an area. To the upside, if we do get to 80, I'll be out $750. But depending on how this spread works, again, I don't expect to fully make it, but the max value is 2,600, right? So there's that. We got about 5 days to see how this thing plays out. We'll see what happens.
I like it.
I couldn't resist it. It looked like a little interesting, fun trade. We'll see what happens. It's moving around enough, so we'll see.
Yeah, we've done that before too. Like if you have a long micro contract, you could sell a spread to like the opposite scenario where you're buying micro crude, selling the call spread in crude to get more premium and give yourself kind of a dynamic trade. Because if you sell, let's say you're long a micro crude contract and you sell this spread for $700, there's no strike where you're collecting $700 in micro crude. But this is a defined risk spread where if crude goes crazy to the upside, you can offset your max loss by just being long the micro contract, because this is still a defined risk trade where your micro crude continues to gain above 80 if you get there. So definitely some interesting stuff too.
And so in my thought process is that in the quick medium to like quick near term, this could possibly go to 80.
Yeah.
Right. I mean, we always think about how these things could end up. I feel like more likely, I am going to have to consider getting out of this spread before MCL falls enough to monetize that call spread. I feel like that's what's going to end up happening. We'll see. but I'm prepared for all those scenarios.
Yeah.
I wish it would just make it easier for me and it would just run, but we'll see. Or just fall, right? Like I want it to move big either way. We'll see.
How about an 85-90 call ratio in micro crude?
I don't know about that.
80.
It depends on what you get for.
5.90. Yeah. I assume you're going to April. 85.90. So many crazy strikes in this thing. Yeah, I mean, it's...
I guess it looks good.
Picking up a lot more premium than I thought you would. But, yeah, 85.90. You have a little bit of a kicker here. Not too crazy, though. Like, I would almost rather give up some of this premium and make it much wider. Go to, like, the 85.95. Pick up 80 cents. Now you have way more upside protection, and you've got a bigger tent here to be profitable. But 44 days, lots can happen there. What is this trading for in the 14-day? 85.90. I guess this works too. Yeah. In the near term, you could use, if you're using this, same story. I would just give up all the credit and make a wider spread.
I agree.
Because this one you can actually, if you get the rally and you get closer to expiration, you can make all this value, or a lot of it.
I agree. I think if you're going to do something like that with a little unprotected upside, it's probably almost better to widen it out and go a little closer versus going further out. You want to go further out, go Thomas's route, go a little more risk defined.
Yeah. Bearish trade on USO. Short call spread gives so little credit. Is a put diagonal better? It's definitely on the table. So if let's just set one up, see what we can get here. Yeah, like a 90-80 long April short March, picking up or paying $6 for a 10-point wide spread. It's a solid return. But same story here. I think I would go further out in time, because if you look at this, like what is the difference if you're buying the 90 across these expirations? These are all, like, why would I buy the 45-day for $8 when I can buy the 107-day for $9? I would always just buy the extra time for $1 more. That way, if you're wrong too, you have a lot more implication that your out of the money put would hold on to extrinsic value. I think October. I mean, even October, you can go as far out as you want, but I would go to June personally. Buy the 90, and then that allows you to sell the 80 in April, or 75 in April. Now you're cooking here. 15-point wide, put diagonal spread for $7. You could see a strong return if this thing rolls over.
Yeah.
I'll get into this. 90.75 for $7. We'll send it. 100 days is a long time for oil to just have 1 day of sell-off. Decent sell-off. But again, USO being in, or the crude oil futures being in backwardation will help USO stay propped up. So keep that in mind. 80-120 USO strangle.
USO strangles are not cheap right now.
Nope. I do like going to the highest strike.
Yes.
It's one of my favorite little hacks, because you see the activity go to the highest strike and you see that premium kind of flatten out relative to the strikes below it. But yeah, $5 for this strangle, but putting up $2,700, sort of expensive for the price of this product. Very expensive for the price of this product. Let's see. We got any last second ones here? do you ever mix calendars with ratio spreads, like selling a 45-day ratio spread and buying the 90-day? I was just filled on USO. No, I don't really mix them.
Neither do
You
I.
can give us an example. If you're like overlapping strikes, that would be interesting. Maybe that's what you're talking about, like buying a 90-day option and then selling a 45-day ratio where the short options are the same as the 90-day option. But let us know. All right, I think that's it. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Lots to talk about. Lots of craziness going on. Be careful with your risk in the crude oil markets, energy markets, basically all markets. There's definitely some stuff going on in terms of equities rallying. Microsoft, Costco, handful of other tech stocks. So there are some interesting ones that are always interesting to pay attention to, especially on a day like today where the rest of the market's selling off. Then you have these singular names that are not participating. We'll see what happens the rest of the day. Thanks for tuning in. If you've got, again, any further questions, you can find us on Twitter. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace. Later.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Let's make this quick. I got to get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm going to go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Grow a strong community with Tastytrade's referral program. When your friend joins Tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
But they kinda like it when I'm feeling myself. Just
Just to look at me, I don't gotta level up, but they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up, but they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up, but they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda.
You gotta level up. Just look at me. You gotta level up. But they kinda like it when
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit of an expansion in volatility. That might be a little bit of an understatement, but we'll see where we're at by the end of the day. We got a lot of things to talk about, a lot of things to touch on. We got the metals, the indices, and a lot of other individual underlyings. Before we get into everything, Brother Gus, how we doing today?
Doing good.
Yeah.
Doing good. Yeah. Interesting market action today. Feels like we might just do the same thing as yesterday. Like
It's starting to feel like that.
Yeah, where we open much lower, then we move through red to green. We're just like 2 hours behind pace from where we were yesterday. Not going to be flipping green while we're on air here, but I wouldn't be surprised to see us close today green as I watch SPY collapse in another 0.5% right there. Not 0.5%, I guess. 0.05%, 5 points, if you will, in the finance world. But yeah, I'm feeling good. I got a lot bleeding, but I also am excited to do a little bit of buying here now that we have something of a legitimate dip that's presented itself. I wish I would have started firing earlier this morning, but I was uncertain enough this morning that I wasn't like, surely we're at war, right? We must string together a few red days sometime.
I mean, you would think so,
but as I say all the time, the market cares not for frivolous things like war.
Of course. And I mean, not to mention, I thought we would have gotten a sustained bid above maybe 25. Haven't looked at VIX in like the last 20 minutes, so I'm not sure where VIX is standing now, but it's looking like the market is about to take all-time high, or not all-time highs, the day's highs on the indices. So we'll see what we get here. We can go ahead and jump into the Tastytrade platform as we dive into some things, do a little tour of the market. As for volatility sitting at 23, 24 right now. I mean, we almost scratched 30 on VIX. Are you kind of getting excited about the expansion and volatility that we're seeing here? I don't know if we're doing too much in VIX right now, but we're getting a little bit of a shakeup since it's been a little bit quiet over the last month or two. We haven't seen this type of movement yet.
I am. I've lamented about the boring market that we've seen over the past few months numerous times, and I never mind a little bit of expansion and volatility. Like you said, tried to test 30 this morning. Maybe tested 29 would be a more apt descriptor, but we did get a nice little pop. Collapsing since, but holding strong at 24 here. And again, it feels I'm having deja vu here from yesterday, where it's like, VIX open way higher, it starts to collapse a little bit. We got the broader market looking like it wants to flip green. It just feels like we're doing the same thing that we did yesterday, but just staying about 2 hours behind like clock time of these things that were happening yesterday.
I'm gonna be a little disappointed if volatility doesn't cluster a little bit more, just because even when we're looking over here on the indices, I felt like VIX hasn't really given us too much. And I mean, we're still kind of trading within that massive range since like the end of October. So I will be a little bit disappointed if we don't see the continued expansion and volatility, because I don't want to stay back within this range. And I think if we start to target, not that we're going to shift gears here completely on the market. I mean, I have no idea, but I want to see more juice kicked into the market before we start grinding higher again, like we typically do on these indices. So we'll see what we get over here on VIX.
Sure. What's going on, everybody in chat? Ranch, Jarrett, JT, Big Deal, Nice Boy, Darker, Rodrigo, Stan. Good to see all of you. Happy you're here. Yes, Netflix is still holding strong, Jared. We have a tiny bit of pullback going on today, but we are by no means giving back these gains. Just a slightly lower open, and then it's begun to work higher. It looks on pace to flip green before the rest of the market. Nice boy saying, "Whole world being reminded that oil is the most important resource on Earth after oxygen and carbon." LOL. If we're getting deep in the chemistry bag, I would say hydrogen is fairly important as well.
Actually,
selling quite a few Palantir puts, says Jared. Yeah, Palantir I know has been on a nice little run. Got some analyst upgrades. Yeah, they are one of the few green assets that we have going on in the market today. Palantir. Look, I was on the soapbox about Palantir for a long time. It's since honed the PE ratio into about 200, and I think that's fair. So I'm done with the Palantir is overvalued. We're trying to price in 20 years into the future spiel. This is fine. 200 is fine. That's what Tesla trades at. That's a reasonable thing. I believe that you can hold a forward-looking PE of 200. It was just when it was 400 or 500 that it was a little bit too crazy for me. But since the stagnation, since the drawdown, we're looking okay. So I'll put a pin in the Palantir complaints for now, and inevitably in 2 months when it's back at all-time highs, I will start doing it again.
You're gonna spin the block.
You guys all get a break. 60-day break for me complaining about Palantir. This might be a fair price for Palantir.
A little bit of a bid in Palantir from over the last few weeks. I know I keep forgetting the CEO's name. Alex Karp, I think it was.
Yeah.
I've been seeing a little bit more content about him, so it's kind of interesting to see who's driving some of these companies. He seems like a very cold-blooded, cutthroat kind of guy in terms of leadership. So
very, very esoteric.
Very much
Lots of speculation that he may hit the slopes from time to time.
Okay.
If
I don't.
you will.
I mean, even the hair, he got the whole like crazy Einstein look kind of going.
Yes.
Like, so.
I mean, yes, it's he's just sort of like it's just
yeah.
We got SBF at home,
Right. There we go.
Basically that
100%.
that type of situation.
100%. No, not too much going on in the portfolio. We had a couple scalps on MNQ. We had a decent one this morning, and then we gave back about 60% of it on trying to get the bottom of the move that we got bottom ticked out of. So that's kind of how the cookie crumbled for the micro NASDAQ. We weren't doing too much in there. GLD, this one was a tough one. Once we got the pullback in the overall market, I just took off those short deltas in gold and silver, or gold and SLV, because it's leaning a little too bullish. And then gold, it was such an unexpected pullback. So I was like, I'm going to use this as a get out of free jail card, take off some of those short deltas, and see where the metals will end up today. And the metals have been surprising. Have those caught you off guard at all?
Well, I mean, I wouldn't say caught me off guard. I didn't necessarily. Well, yes. I guess I would actually say yes. I would expect that in times of uncertainty like this, and especially with the propensity that the market has had to prop up these metals as of late and wanting to chase down these all-time highs, that we actually would have seen things move the opposite direction. Being short silver, I'm a happy camper, but when I put this silver position
we got a nice
on,
pullback.
I said that we very well might go up and test 100 on SLV before we start to get the pullback, and that just hasn't come to fruition at all. I pretty much just top ticked it, which was hilarious. I was not trying to time this perfectly. I gave myself plenty of room, and now I'm wishing I had given myself a little bit less room. But those actually, just since I've been sitting here speaking, have flipped green for me for the first time. My 77.75 short call verticals I have going on SLV. So yeah, I mean, I'm happy as a trader. I am surprised, though, objectively, that in times of uncertainty like this, we're not seeing a little bit more momentum.
Yeah.
But holistically, I just go back to what I've said before. Like, what actually along this entire gargantuan run up is the fair price for silver? I don't know, but it will settle wherever it's supposed to be sometime.
No, it really has been. It's been a tricky trade. It's been difficult, but I'm going to use the word tricky today, especially just seeing the metals slide again 2 consecutive days overnight. So this morning, whenever we saw the metals begin to slide even more, I took off my call that I had bought yesterday, because I was like, you know what? I don't want to be too overly bullish on the metals, especially at these price points. So this morning, coming into the gate, I had taken off this call on SLV. So we were down about $172 on that. I was like, if we slide a little bit more, the max loss is going to be around $450. So I was like, you know what? Let me go ahead and manage this risk. We got more long and short deltas on in these metals. So now I'm kind of just leaning on those out of the money put spreads a little bit more, giving myself a little bit more breathing room, and then at the same time let data be able to cook in my favor. So that's kind of how the cookie's crumbling on these metals positions. We bought some QQQ puts yesterday. We had taken one off right before the close, just to cover a little bit of that risk. And then with the gap down this morning, that certainly helped, especially cover some of the losses from the SLV call that we bought. So we can net some profits out of that one, and really just focusing on balancing this portfolio. I don't want to get too overzealous trading the indices at the same time alongside the metals. So we'll be going to be patient, but we did get on more long delta overall. Put on a put spread today on GLD, and then we also put on a put spread on SLV. And we will let the naked options hang out by themselves for a little bit before we touch those again. And then outside of that, we had the semiconductor space. Those have been taking a little bit more of an aggressive pullback. Finally, it's been like an insane melt up on the semiconductor space and another get out of jail free card. Like, I'll take it. I'm not out of it yet. This position has been cooking. I've been adjusting, trying to get out. It's not a very, the markets haven't been super tight on this one to get out, but that semiconductor space finally taking a pullback. So we're going to try and take that one off here soon, redeploy the capital elsewhere. And it seems like the metals and the indices are still going to be the talk of the town. I mean, these things are offering a lot of volatility. We can look at all of these individual underlyings, but man, I mean, oil, metals, and the indices alone providing so much opportunity. And to Jared's point, talking about how the market is pulling back so aggressively, then we see that expansion and volatility, and then we start trading back within the same range we were just trading in. So I see the point you're making too, Jared. That is nice because now we're still trading at the same levels, but now we get to take advantage of the elevated volatility that we didn't just have. So touche on that one. But that's all we got over here in the portfolio. No other individual underlyings that really stand out on my end. Anything else you have over there that's caught your mind for the most part?
Yeah, I'm just pulling up the Tasty Fast Movers watch list here. I noticed Philip Morris right at the top, having a really, really bad day today. I might take this opportunity to get long. Wow. I'm pleased with the exit that I got on my Philip Morris longs. I talked about that position a few times on air. I bought those, I don't know, like something like 180 days ago, held them for about 100 days and got out for 200 or 300% gain on this big run up from December into, pretty much 3 days ago.
Yeah.
I exited those in the middle of February, so I've been out for a little while. To be specific, February 12th was my exit. So not a perfect top tick on the exit, but I was content with those profits and went ahead and took off a little bit of risk. Taking again right now, this is tempting to me to get back involved. I think I might try to catch this falling knife. The soldiers need their cigarettes, right? So like, is that fair logic? This is just one where, and it was the same logic that I employed when I got long at the first time. When you have a company that is predicated on people being addicted to your product, that's a pretty good business model in a pure capitalistic context, morals aside. So I feel that with this big pronounced sell-off that we're getting for 4 days and maybe a little bit of a bottom coming in now in this 175 range, this might be a good time to try to attack this again. I'm not going to go undefined risk as I did before, just because we're at much higher relative levels. You can see when I was buying this thing back in late November, early December, we're way down. We're not looking at that type of level anymore, but I will do something to find risk here, and maybe just look for the short-term pullback. Let me go 30 DTE. I know there's going to be good premium on the put side, so do old reliable short put vertical here, and then if I just straddle the moneyness like this, 175, 180 feels pretty good. 180 feels like a reasonable level. This is 1-to-1 risk. See if I can't get a good fill on this one. But we will fire that off. Some Philip Morris.
There you go.
Did get a good fill, 5 cents below the mid. So
nice.
Pleased with that. We are long some Philip Morris once again.
Nice. We got the gap down, extended move to the downside today. It's a pretty solid entry. I own a lot of tobacco stocks for dividends because their business model is limited to how long addicted people last. Got to be careful when dividends come if options open.
Yes. I own a lot of tobacco stocks for their dividends because their business model is limited to how long addicted people last. That's true. However, they are holistically kind of rotating into products that people live a little bit longer while using. Jared, to your point, Nagas, this ain't World War II. Soldiers don't smoke. They run on Monsters and Zyn pouches. Before I read the end of that, I was going to say, you're right, they don't smoke, but they use the hell out of some Zyns. I'll tell you what. And Zyn is also just Philip Morris. So it all feeds in. Philip Morris is an integral part of the war machine. It has been for some time. So I'm happy to get long some Philip Morris. Not really on that line of logic. This is more just a pure price trade to me. Feels like this sell-off has become a little bit too pronounced. This is a strong company that I don't think is going anywhere. 30 days is a little bit aggressive with that expiration, but I would be shocked to see us log too many more down days in a row here with how pronounced this sell-off has been. It has to have gone a little bit too far, is my opinion.
Yeah, absolutely. Go ahead and check out this high options volume watch list before we shift gears to trading view and some other crypto products.
Yes, we do. Yeah, we are just steadily climbing back towards green here. I see. Who was that? Oh, Andres saying this up move is ridiculous. I'm getting destroyed. Yeah, we are just churning back.
No, I mean, what an insane rally. I wasn't even comfortable enough to put on more long delta at the bottom of the move. I wanted some lower prices before I did that. So, I mean, it's one of those markets too where if you don't make your decision within that time window, you're gonna miss it. It's like either take the risk or miss the chance, and that's really how this market environment has felt, especially today. It's like if you don't make the decision, the market's gonna make it for you. It's gonna leave and do whatever it wants to do. They pay fantastic dividends.
They do. Philip Morris, he's talking about still. Got a small account. Almost half of it is betting on staying below 67.80. Oh boy. Well. We're not there right now.
Oh boy. No, we can go ahead and jump over to the TradingView platform, and we can go ahead and take a look at some of this price action. Yesterday, I got to say, we were able to catch a banger to the downside yesterday before the market closed. Yesterday was pretty difficult. It was one of those times where it was like, all right, we can't get chopped up too much. The market was very indecisive yesterday. Oh man, there we go. The market was pretty indecisive yesterday, but we got a lot of action near our value area high. So we took a few stabs, and I thought we were going to end the day on a red note, but we got one more opportunity with some really solid risk to reward. And we got just a massive flush just about 30 minutes later. So the market finally showing some direction to the downside. Yesterday, that was the first like real pullback that we had gotten in the market. I mean, I could almost kick myself for not having on a runner, but with the buying power and the margin required for some of the futures contracts, it's about $2,500. You don't know how the margins are going to increase or decrease overnight depending on the risk. So we just took off all three contracts, but we did buy a couple puts on QQQ before the close. And because we were able to buy them towards a high, that's what made us a little bit more comfortable to swing those over onto today. So it's kind of frustrating sometimes when the market makes the large moves overnight, or the market will make the largest of moves either to the upside or downside when the market's closed. But having on some of those puts or some of those other positions, allowed us to still take advantage of some of these directional moves.
The world is ending. How can you not be bullish on cigarettes? But yeah, no, absolutely agree. So you don't. Okay, so you're out of your shorts now.
Yeah, just swinging those from yesterday.
I thought maybe you were. Thought maybe there was still one runner there. Sometimes it's hard to count the execution marks.
Yeah,
and see exactly what's going on.
No, this one from here yesterday. You can see.
Yeah, I see.
I mean, I feel like a lot of the times we get so hung up on like win rate and win rate and win rate. But I mean, even here yesterday, I mean, this might be like a 10% win rate yesterday, right? This might be like a 10% win rate. And we were able to still squeeze out, $550, bucks on this move just by being patient. So I really think if anybody else is scalping the NASDAQ market, the ES market, whatever you're scalping, I think really paying attention to that risk to reward is going to be your best friend for sure. For sure. Then come to today. The market opens up outside of balance. We have that shift overnight. Would have been nice if these moves come during intraday so that we could, take advantage of them. We looked for a short here in the morning. Wasn't trying to be too aggressive. The bias was a little bit bearish just because we were already trading below this level of value here. So we took a short here, snagged about 50 points to the downside. This consolidation was very difficult to hold through. So it would have been nice to catch a bigger piece of the downside. But again, this type of action, whenever it's like directionally choppy, can be so difficult to trade as a scalper if you're looking to hold for a bigger piece of the move. If you're just looking for a little swing to the swing low or a swing to the swing high, you can capture that. And that's what we did for the first trade. But holding larger pieces of the move can be pretty difficult, especially after gapping down and selling off even more. It almost feels like you start to get short into the hole. So that's how the cookie crumbled there. We tried to get long a couple more times today. We barely got stopped out for maybe $20, $40, whatever it was. And then, of course, we rally right after. So, that's just how it happens sometimes. And I mean, something going back that we could have done was just sell the out of the money call spread. Like, just sell the out of the money put spread, because now I don't have to time the bottom. If we zoom out on a higher time frame, if we zoom out on a higher time frame, because all these moves are relative. But if we zoom out and we can find where the chart went, go to the 30-minute over here. If we zoom out, this is a pretty substantial pullback, relative to what we've seen. So instead of trying to time the bottom next time, what I can look to do is at least just get on the put spread, get on some long delta, because I don't have to be on point with the entry for that directional move. So it was a tough one today. It was a little bit frustrating, actually. That's what it was today.
For sure.
It was a little frustrating.
Hindsight's always 20.
It was frustrating, yeah.
It's the way it goes.
Yeah. What about you, though? What else standing out on your end for you, brother?
What? Oh, was that a bull put spread? Yes, Andrew. On Philip Morris, I assume is what you're asking. Yes, I am 30 DTE. Where to go? Too many positions. One moment.
There you go. Is that pullback?
I am 30 DTE. April 2nd expiration. I'm long the 175, short the 180 on Philip Morris. Cigarette.
Smoking that PM pack. Smoking that Philip
PM pack.
PM pack.
Smoking on Philip. Any opinions on Broadcom? They have earnings this week, says Nice Boy. AVGO. I'm pretty much perpetually bullish AVGO, and I really couldn't tell you why. Like there's no real firm product of theirs that I love or anything. I just it's an emotional thing, which, as you know, you should always trade with your emotions. But I have emotional ties to Broadcom. They don't get the love that they should for being as big as they are. I don't know why they're not talked about with the Mag 7 companies of the world. Hashtag put Broadcom in the Mag 7. I've been on this, but I don't know. I mean, holistically, I think that this looks like a pretty good buy spot for them. This is pretty good technical resistance in this 300 to 310 range. We've filled this gap from back in September now all the way. That gap was from 308 up to 332. So from a technical perspective, not too much to be worried about. There actually is an upside gap if that's your thing, from 382 to 394 from back in December. But obviously, as it pertains to earnings, it's not really so much of a technical play. I'm not going to trade it into earnings, but I'm pretty allergic to earnings in general. If I were going to get involved with Broadcom, I feel that I would have to get long at these levels. But again, macro environment is a little bit scary. These giant companies tend to move with the market, or perhaps vice versa. So not too in love with it ahead of earnings, but if you made me trade Broadcom, I would feel compelled to get long here off these levels. It's been as high as $100 above its current level just in December. So we're not far off of those highs. Pretty pronounced run down to these levels, and then we found some good stability. There's good resistance here at 317 and 325 above that. So I would have to get long.
I love it. All-time high on SPX. It's looking like we might get that. More so going to be.
Yeah, we got a new high a day. Oh, yeah, we do.
It's looking like we're trying at least.
We're creeping. We're creeping. I'm telling you.
We are creeping, guys. Can we accept into this level of value or not?
Rick, RCI Hospitality mentioned talking tobacco stocks. Rick up almost 6% today. Maybe time to look at the boost stocks too. I see. Not that Rick is a boost stock. What are some boost stocks? Anheuser-Busch is public. What's that? Bud. Yes, Bud. BUD. How about this? How about this for a run? Oh, you're looking at the shorter term time frame. Yeah. No, not having such a great day today. But if we zoom out a little bit, quite the run since the beginning of December for Anheuser-Busch. We are way up.
Go to the daily.
Yeah. There we go. There you go. This thing's looking like silver.
This thing's rallying as we head into a recession. Who said that? No, I'm just kidding.
Hey, if we're headed into a recession, beer,
that's what I'm saying. I think that's what I'm saying. I think that's. I don't know. That might be the.
Who said that? Could be the movie. Yeah, I don't. Who said that? Not me. But people spend on the smaller luxuries as the bigger luxuries become unaffordable. It's the Victoria's Secret effect. You'll hear people throw around sometimes. Is that as the larger luxury goods become unaffordable, people rotate into the smaller pleasures of life, such as Budweiser.
I'm curious, what are your thoughts on full porting iron condors at 68.50? Since we seem to be stuck there, I'll let you get that one.
I don't think full porting anything is ever an advisable strategy. If you mean, I assume you mean like in a slightly longer term context, not like in a 0-day context. 68.50. I mean, we have really been stuck there. I mean, the more like proper middle of the range that we've been stuck in is closer to 6,900, I would say. 6,850 is trending towards the bottom quartile of this range that we've been bound in since the beginning of December. But yeah, I wouldn't say you should ever full port anything. I do think iron condors around 6,850 or 6,900 could be a strong idea, though. Obviously, you'd probably get a better premium at 6,900 from the levels that we're at now if you give yourself enough time. But in times of uncertainty like this, it's always a little bit sketchier. We could, there could very easily be news break tomorrow that sends us, for the rest of the week down, testing 6,500 before we catch another bounce. Because, while I'm always sitting here and complaining that we're not making new all-time highs and directional trading is hard, at the same time, that means that we're not really getting any substantiated pullbacks either. Channeling is channeling for both directions. So,
no, I know,
always risk involved. But 6,850, 6,900. For a little smaller than your full port, perhaps could be a good idea.
Yeah, no, I know. I know. It was a funny comment. You're joking, JT.
No, I'm completely joking. I would never full port anything.
No, I mean, I know we just got about a minute left here. This will be interesting here. So we'll see later if I post some losses or some gains, because depending on what happens around this value area low, maybe we take part of it. If we do have more downside, it'll be attractive, right? Like if we start to get, it's not to guess, we're not going to just automatically short this level. But if we started to get a lot of weakness here, this would be attractive just because we've made so many higher highs and so many higher lows throughout the entire day. So if that was there, the short would be attractive down to these swing lows. But will we get it? I mean, I have no idea. But I do know if we accept back into this level of value, hands will be completely off the wheel, and we'll let the other positions in the portfolio do the cooking.
Yeah, I forgot about how many boost stocks there are. Grumpy Mike rattling off a bunch of them right now. STZ obviously is kind of the king as far as market cap goes in that regard. But TAP, one of my favorite tickers. SAM, another one of my favorite tickers for Boston Beer. ABEV, DEO, and PEO. I can't even say I'm familiar with.
DEO.
DEO. How do you pronounce this? I don't want to make a fool of myself. But if you're looking to get long boost stocks, this DEO looks pretty attractive from a technical perspective. That said, I do not know what the company is.
Quickly, before we hop off here, let's just see if crypto is still alive. It's looking like we're still trading in the range from yesterday, but we haven't given the gains back from the highs that we touched yesterday, not completely at least. Yeah, Jesus, take the wheel, please. Go ahead and take this wheel from us, and we'll be some backseat drivers. But no, we are running out of time here. Anything else top of mind, brother, before we hop for the day?
No, I don't have anything else. Beer and cigarettes.
Beer and cigarettes
is the moral of the story today.
Beer and cigarettes. Is Dare still a thing?
I don't think Dare is still a thing.
No, I remember that they had told us. They said a single drop of nicotine on your tongue, it's highly addictive. You instantly addicted. Come to find out, that's not true. But I mean, I see why they were teaching us.
Yeah, they were trying to scare you off of it.
Yeah, they were. You're right. I didn't realize that till later on.
Yeah, it's slightly more gradual than that, but it is quick.
Yeah.
Quick.
Oh, absolutely. But I took it literally.
Yeah,
like I took it literally when I first heard that. Anyways. All good on your end?
Yep, all good.
Cool. Jared, Grumpy Mike, Stan, JT, everybody else, thank you for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we will see you guys next time. Peace.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
We built Tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tastytrade's referral program. When your friend joins Tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tastytrade.
I got a good feeling. I got a good feeling. I got a good feeling. I got a good
We're back. It's still Tuesday, March 3rd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, these markets are as feral as a producer who hasn't seen other people in weeks. I suppose we should get into it. How are you today?
I'm doing great. Yeah, let's get into it. There's so much to cover. We got a lot to talk about.
That's a little inside joke there for the production booth. Folks, if you're watching on the platform, come over to YouTube. Tell us what you're trading, what you think of this intraday reversal so far. Stocks are no longer in the gutter the way that they once were. While we may be running out of gas, both metaphorically and literally, as concerns around the Strait of Hormuz pile up, it's a market that is finding some relief now that Europe is closed. Jamal, we're going to talk about the echoes of 2022 here a bit on Futures Power Hour today. Before we get there, of course, I do want to do a brief spotlight section, if we're allowed to do that, to see how this has all impacted Fed rate cut odds. Right now, the market is telling us that it's probably not going to help in terms of the near-term path. I say that because over the course of this particular episode, we've seen treasury yields rise alongside oil prices. Inflation expectations have gone through the roof. Gas prices nationwide, Jamal, are up about 60%. 60%. Oh, gosh.
Yeah.
60 cents. 60 cents. I stand correct. 60 cents over the past week from about, $2.50 and changed up to $3.11 today, according to AAA.
Yeah.
So while we may look through a temporary supply shock, as a lot of people were saying the Fed should do in 22, remember team transitory? We can't dismiss the fact that in the short run, the hopes of a rate cut may be fading if oil prices are going to stay up here for some time.
No doubt. I mean, let's just go back to flashback to late last week. That 10-year yield, I mean, that was under 4%, about 3.9, a little over. And we come in yesterday in a huge move to the upside. And that move is slightly continued. It was obviously a little bit higher earlier today, but this is the thing right here, right? I mean, now everybody, I shouldn't say everybody, it's something to think about as far as the U.S. should be worried about inflation. But yeah, I guess a lot of countries are going to have an inflation issue when you're talking about something that is monitored globally like oil. And so this is definitely the story. I don't see how we could cut rates into this situation now. And this is one of the things that the administration has been all about, right? The idea of cutting rates, keeping oil low. All that has changed in this current situation that we find ourselves in.
Well, one of the bigger catalysts that we had earlier today, of course, is what President Trump said about the insurance for the Strait of Hormuz, which seems like a throwaway comment for, dare I say, the uninitiated in the oil trading space. But even if the Strait isn't mined, even if the IRGC isn't putting any vessels out there, right? Let's say that we've destroyed their entire Navy, for example. If they're firing ballistic missiles through the area, ships just aren't going to transit. They're going to need insurance in case something happens. No carrier is going to take that kind of risk. And in recent days, what have we seen? Insurance has fallen by the wayside because who wants to insure a ship that's about to get hit with a ballistic missile? Not exactly in an actuary's table for desired outcomes. So Trump here today said that the administration is reportedly considering providing or assisting in obtaining insurance for oil tankers to allow the spice to continue to flow, Jamal. And I think that's really important because if ultimately the U.S. government is willing to bear the financial, did I say U.S. government? I meant U.S. taxpayer is willing to bear the financial burden of these ships transiting the Strait of Hormuz, then a sustained global supply shock becomes that much less likely. It's a catalyst that we can't dismiss here as we move into the second half of the session with ES now at 68.27. That's more than 100 points off this morning's low.
Yeah, Chris, look, this is a very potentially scary environment with the likelihood that if you pour a little bit of gasoline on this, no pun intended, this could all blow up in our faces. And
we're pro pun here on Futures Power Hour, Jamal.
And
do as you may.
And I got to tell you again, I mean, the like I said, the biggest thing to pay attention to is oil. Thomas liked it earlier when I said it on OTCL, but this is how I feel right now. Oil has become your VIX, and it's the thing that I think we have to watch right now because again, it's controlling inflation expectations. It's also controlling how the market is receiving everything. That said, I mean, look, there's a lot of different opportunities here. I will say the most interesting thing right now is as we're watching markets go up, we are still once again basically right back in the channel, 6,800 to 7,000. We're inching right back into it, and so that kind of gives you a little bit of pause to not worry about how bad things can get. It's amazing that the market has shrugged this off, but even still, we're getting some big ranges here now. When you look at yesterday, the big move that we had, and yeah, we finished up on the day, but huge range. Who knows where this is going to end up overall, but another big range here. It's even bigger, obviously, as you look at the futures. And so I think that in itself begets a little bit more volatility. We have no idea how long this is going to last. I know the administration was saying about 4 to 5 weeks, but we really don't know, right? There are no boots on the ground. I think if we have a situation where there's boots on the ground, obviously this is going to really escalate to some degree. So, dude, I mean, I don't want to say chart patterns are out the window, but it's a little
Boots
hard.
on the ground, Jamal. I hate that you just used that phrase.
I know.
I think I'm gonna get a nosebleed. Honestly, I think I'm gonna get a nosebleed.
I mean, this is one of those times where, look, I don't know how many people were. I can only talk about how I'm going to trade this thing right now. I had long deltas, whether it was SPX or a couple of different things, short puts and some financial names coming into this, a super bull trade. That being short put spread, long call spread in Microsoft. So I've had some long deltas. I'm taking this move right now as an opportunity to possibly get short some things, whether it's, you could do it either futures options, whether it's NQ or ES. I'm looking at SPYs and Qs right now. Anytime you see these major indices get an IVR above 30, it's good selling opportunities, however you want to sell it. I'm choosing to sell upside call spreads, risk defined versus selling downside. Because again, I got long deltas and spades. I think this is a good opportunity to sell a little bit of upside because I think we're about to oscillate back and forth day over day here until this whole thing is resolved, which could be some time.
Could be some time. If I may harp on this insurance issue a little bit here, because as part of the exercise of trying to figure this out, yesterday on the show we were talking about, is this like a Iraq 2003 situation? S&P down 5.2% from peak to trough as we get ready for the Iraq war and ultimately go into it. Within 16 days, we've recovered those losses. And at the end of 2003, you can turn back the clock and look to the March 2003 lows as the lows for the rest of the year because the market finishes up 26% in 2003. Or is it a 2022 situation, right, where you do have a prolonged energy shock that makes its way through the global economy, in part because of pipelines being hit, but really self-imposed thanks to the sanctions that the US and the EU levy on Russia. So this insurance issue, if the transit in the Strait of Hormuz is going to be materially disrupted for a number of days, weeks, or months, right? And we've done 2 TC reports, Jamal, which for those that haven't watched those yet, I'd encourage you to check out our morning video series where we delve into a thematic topic of the day and go into it for like 3 or 4 or 5 minutes there to explain it in a little bit more detail. Today, of course, we were talking about more of the Iran issue. Looking at some of the numbers here, the Gulf states have about 340 to 350 million barrels worth of onshore storage. They have about 50 million barrels of floating storage right now that's accessible in the Asian corridor. Given the current run rates of their production and how much that they can move over land through existing pipelines, this gives the Gulf states about 24 to 30 days before a closed Strait of Hormuz becomes a problem, right? And why would it become a problem? Because if they have nowhere to put this oil that they're taking out of the ground, we've used the onshore, it's going through the pipelines at capacity, it's on the offshore floating storage that's in the Asia corridor, you have to start to shut down wells. And when you shut down wells aren't something like turning the water on and off at your faucet at home. The shutdowns, depending upon how long they last and the condition of the infrastructure, it could take days, it could take weeks or months to restart a well. So shutting down production is a very significant step that would, even if on day 24 the wells shut down and then the war ends, those wells aren't turning back on day 25. So there is kind of a window here where ships being able to transit the Strait of Hormuz to make sure that the inventory storage that they have doesn't get filled up and production shuts down, that's critical. Mm-hmm. This insurance effort by the Trump administration today is part and parcel to perhaps one of the more encouraging things that have occurred to help bulls get some chutzpah back and push away the fears and the narrative that a global supply chain issue is about to emerge and wreak havoc on the global economy. Obviously, nothing's for certain. Just because the insurance is out there doesn't mean that ships are going to take the risk.
Yeah.
But if the insurance is available and ships start transiting again, we can cut the tail off the most extreme worst outcome for the global economy because of whatever Strait of Hormuz closure there would be. And I think that is a That's probably a major reason we look at these charts. The Russell was down over 3% earlier. It's now only down 1.2%, which, hey, for me, that's fine. Bouncing at its 50-day moving average again, but it saves me a headache of a conversation I was going to have with myself later on today about closing positions. So
I don't think you're the only one in that boat. I think a lot of us were close to that boat this morning.
Yeah, I can imagine people getting shaken out. The lows yesterday broken, the lows from February were broken, and here we are today back above the 50-day moving average once again. So let's follow this insurance story. It's the most important story in the market right now, obviously outside of the news flow. You said oil is the VIX. I couldn't have said it better myself. I'm going to go to that 5-minute chart. We see oil sliding off the highs substantially and oil vol starting to come in off the day's highs. That's the key here. So what else do you have to look for right now as a trader besides waking up and saying, honey, what's CL trading at?
That's really what it is. I mean, that's what it boils down to. I went and got gas this morning, BT dubs, but I don't know how much that matters because my car only has 15 miles per gallon anyway. Anyway, it is definitely...
my luck?
What?
I still have the text message. So Saturday morning, my brother comes over to help me build some furniture for my son's room because we're finally getting ready to get him out of like the bassinet crib at our bedroom into his own bedroom.
Mm-hmm.
And I have an automatic monitoring system on my oil and propane and, heating oil tanks. And so like these guys just show up. I don't have to schedule it. And so my brother sends me a text message on Saturday morning. You're getting an oil delivery right now. And I'm in the car and I'm looking at this and it's like, I'm listening to the news about these missiles hitting Tehran. It's like, boy, I know they lock up those prices like a week before they make the delivery. So like best trade I've made all week.
Yeah, really. That's funny. Yeah, it's paying attention to oil right now is definitely a must because we've seen it. Yesterday, oil was trading around 72s. I actually made a trade in oil, and I know we're all over the place, but I actually love the fact that we are. I made a trade in oil yesterday, long the 77.80 call spread, now 6 days out, and short MCL at 72. And for me, that signifies the amount of swings I expect there to be over the next couple of weeks, not just with oil, but with equities too. And I think that's kind of what you're seeing. I mean, as things started to lighten up today with oil, we saw equities bounce. I think a lot of it had to do with the European close. Like you said, you could almost just put those charts up and see minute by minute as we started to go up once Europe closed. It seems like we probably stalled out here, but nevertheless, I mean, for the S&P 500, we're still back within the channel. For NASDAQ, not as much luck. We're not above 25K, but we're still not at, scary lows, as you will. And all that being said, look, we could be down a whole lot worse given this geopolitical situation. This is not like some of the rest. This is not like Venezuela. This is not like some of the other things we've seen. I think there's real fear here. And I think that's what you've seen in a lot of different asset classes, which we'll discuss today.
We will see it. So volatility is coming in. I think the 5-minute chart is a good place to look because as we make our way through the morning hour, incidentally, when I was on with Tony and Nick this morning on Let Me Explain, that's where equity market volatility peaks shortly thereafter. 44.9 on the IVR for the NASDAQ. We're currently in at 34.4. Volatility is the guide for your typical Tasty trader, Jamal. And I think if we're going to continue to use that as our lodestar in these trying times, as it were, then volatility is giving you a fairly decent signal right now, which is not to say that this kerfuffle is over by any stretch of the imagination. Although boots on the ground as nauseating, headache-inducing.
You said it.
Blood nose. Okay. As troubling as that may be, right? We do need to ground ourselves in the reality that boots on the ground in Iraq didn't mean the stock market didn't rally. I mean, there are still Russian boots on the ground in Ukraine right now. Israel bombed Gaza into obliteration for years, and the stock market went up. So once the risk is benchmarked, things begin to change and evolve. And so you wake up this morning, and I'm looking at overnight. 6 o'clock in the morning, silver's down 8%. I'm seeing news that Qatari LNG facilities are being shut down, that Cypriot fields in the Eastern Mediterranean are being hit. I mean, it's just a whole the energy infrastructure is going up, and so no insurers are offering anyone the ability to transit safely. If that is taken off the table, if money is a non-issue, and the U.S. Navy is going to provide safe passage, then really what's the global economic risk? There's going to be humanitarian issues. There's going to be political fallout, dissolution of a country. Kurdistan maybe rises up. Who knows? I don't know what dominoes will fall, Jamal. I don't think anyone really does with a straight face.
Right.
But if the oil can keep going, then like that is the Iran risk. Venezuela didn't create significant ramifications to the market because there was no significant economic outcome that would be negatively weighing on the overall sentiment. So can't dismiss today's move higher. We're not out of the woods just yet. The last 2 days are part and parcel for what we should expect. A lot of time in the blender, a lot of two-way trading.
So as someone who is largely not only macro based, but you love to look at trends and follow a trend. If a chart is looking really strong, you're going to the upside. I mean, you're not getting either one of those, right now. Honestly, you're not really getting a chart that looks strong or a chart that you really want to fade like 100%. What do you do here?
I've been maintaining my exposure coming into this week, directionally neutral NES with a sprinkling of long MES, long Russell. The volatility is high. We're sitting close to the midpoint of 3-month or 6-month ranges, depending upon the chart that you're looking at. And so yesterday, dispersion trading is still very much the name of the game, as was the case in the second half of February. And if you've had the ability to sell a little bit of vol today or this morning, right? S&P was near the midpoint of its 6-month range. If you got to sell some vol this morning, you're probably feeling pretty good about it. And I don't think there's a reason to get off that horse, quite frankly. Like 45 days, it was looking hairy this morning, Jamal, but 6,600, 6,550, 7,150, 7,200. We could still put this on. We're pretty close to the midpoint of that range. It's basically a 1-for-1. Obviously, given the vol, it's less than a 50% probability of profit. But the bet that we're making is that we're not going to clear the January highs or the November lows anytime soon.
Yeah, exactly. I am like you. I have exposure that I maintain long. Like I said, it's via SPX actually. But one of the things I think you can do here, and I'm literally doing it as we speak. If I've seemed distracted, that's exactly why, because I've sold call spreads, and I think you can do this whether it's an ES or Qs or however you want to do it. I'm choosing to do it in some ETFs, but I think you can sell call spreads against, like you said, some of those highs. So for S&P 500, obviously it's 7,000. And SPY, I did 700 and 710 call spread short. Qs, well, that's different, but let's just call NASDAQ. It can be 25.5 essentially, if you will. And for, the Russell 2000, it's, 2,700 essentially? I mean, you can do it against essentially those highs that we have yet to really breach over the last several months. I think if you're long, I think into this rally here, with vol being elevated, I think you can sell call spreads against those highs because we really haven't touched them too much. Now, if the de-escalation comes, that's probably the catalyst to push us above. But I don't know about you guys. I'm prepared for the long side. It's the short side that's the hard one to reconcile with.
The Russell here is such a funny chart. If we were to get rid of the candlesticks and just go to like line graphs, you would just look at this and say, oh, it's still bouncing around its 50-day moving average. No problem. That's why that closing number to me matters so much and why I was feeling really uncomfortable this morning. Now, Russell, we're still holding at the 50. And that's a very long lower wick, Jamal. That's a 3% plus down move. That's now just 1.1% to the downside. So we may have been having a very different conversation. The show was 4 hours earlier in the day, but it's not. Right? And to that point, though, right? If this is what the market's giving us, we're diminishing the odds of a significant supply chain risk for the global economy. It doesn't mean that this is over. It doesn't mean that the market's going to go back up in a straight line, but it does put a cushion under things. And so for a Russell today, we may have learned some stuff right now, Jamal, about what levels we should be operating around. If there are bottom pickers out there, right, you didn't want to get in earlier. Who knows what the news is? Is this news really happening? The low of 25.50 here in the Russell is probably the place you can operate around. And just thinking about 45 in, 21 out, we will just need to do a quick spot check because it is technically in the M6 contract for that expiry cycle. That low is 2568.9. 2568.9. We'll go 2550, 2500 here, Jamal, on a short call spread, or excuse me, short put spread. There is a very typical tasty 3-to-1 risk to reward, risking 3 to make 1 on north of a 60% probability of profit. The short put spread isn't necessarily something where we need the market to go up. We just need it to stabilize. And there is an argument to be made that you got your stability catalyst today. So I'm in capital preservation mode still. But that doesn't mean that we should ignore mechanics. I'm going to do this. I think that we can't look a gift horse in the mouth. Maybe we can get filled on a position here. It's not getting filled right away, Jamal, which means it's probably going to be a good one.
There you go. You feel good
about it. But I have directional neutral. I want to start to look at the vol as it's coming in. This is the time to take those shots if what Trump is saying is true, because the insurance thing is a really big deal, which is why we've talked about it in the Tasty Report the past 2 days.
I mean, this is the time to take those shots because, like as you started off the convo, volatility is elevated, and we really don't get these too often. You really don't get the situations where you get IVRs in the mid-30s for these majors. I just think you have to take these opportunities when they come.
We're not there quite yet, but in the NASDAQ, we're getting pretty close to the midpoint of the recent trading range, going back to the highs that we have here in October to the lows in November. That's basically where the market fell from in recent sessions, back to midpoints of February and here at the end of the month, right around 25,400 or so. You know, if we get a rally up into there and you're looking at an IVR north of 30 still, it again becomes a place where thinking about that directionally neutral selling vol just as kind of like a foundational level strategy before you start getting in there with maybe directional beta, it becomes something to take a look at. Because after the Iran issue, Jamal, I recall us discussing private credit and the AI apocalypse last week.
Yeah. How fast things have changed.
Yeah,
how fast things have changed.
Josh brought up a really interesting idea here because there was an Amazon data center that was hit in the UAE. At what point, because we already have the negative sentiment for AI, but if this episode were to continue, do you think that the markets could start to embrace a narrative that some of these companies now have AI debt that's geopolitically exposed, capital intensive, rate sensitive, and now it's getting literally bombed? Do you think that could become a factor in the NASDAQ trading?
Well, it depends. Do they have insurance on these centers? Because that sounds like an old trick that I know the La Cosa Nostra used to use on the regular. Maybe that's something that ends up happening. I'm not sure. But it could end up becoming a topic of discussion. I mean, it really could be something that is particularly around earnings, right? If this were to end up happening and things were to escalate and you all of a sudden hearing about AI data centers getting bombed, I mean, that could be something that affects the NASDAQ for sure. Especially these big names. I mean, they're the ones that control the NASDAQ.
How long could this conflict last? I think that's the question that a lot of people are asking themselves right now,
100%.
which is a question that I am going to attempt to answer. So we talk about the Gulf oil production constraints, given the onshore storage, the floating storage, and really you have a 25 to 30-day window before you have to shut down wells. That happens to line up with the current rate of production for munitions in the United States. We talked about this on yesterday's show, but right now, the conservative estimate saying if we just run this full bore, we have issues in the supply chain and getting more supplies to our armada out there in the Gulf. What are we working with? 24 to 30 days as well. So I think over the next week or two, if we're expecting any immediate off-ramp, right? We're expecting any sort of immediate off-ramp, day to day, the headlines are going to be really messy. I mean, if I'm going to be trading short term, which I rarely do, and I find myself even less inclined to do so right now, but if I'm scalping in this market, this is not a market where I'm scalping and holding going out to the NASDAQ and buying the one DTE and then going to sleep with that position on. It's the kind of market where I'm buying and trading in and out of that position. And if I have to close my book for the day, I do that because I don't want to wake up in the morning and look at what I just saw right now, right? Silver was down 10%, now it's down 5%. Stocks are down 3%, now they're down 1%, right? You don't want to get caught in that kind of move. So you do have to change your approach in how you go about this market. Operating outside of that 30-day window, though, Jamal, ceasefire, de-escalation, temporary pause. I mean, I see a 38 DTE. I see a 45 DTE here in ES and NQ. That's where I think if we're looking to sell the vol, those are probably the safer places to do it. And it just so happens to line up with the typical 45 and 21 out tasty methodology.
Yeah, I mean, I think that's exactly where you want to make your bet right now because volatility is elevated. If the de-escalation happens, it will happen. It will certainly see volatility recede very swiftly.
Right. And you get a day or two of relief.
Yeah.
And then, where were we prior to this cropping up? The market was contending with private equity, private credit issues, contending with AI in the seasonal window. That's kind of ugly.
I got to say,
So,
one of the interesting things today that I noticed is the amount of names that the market just have not loved, right, in recent weeks and months are actually getting love today. CRM, Microsoft, Intuit. Those are the names that are starting to get bought as we've come off this low. That's really fascinating to see, particularly on a day where we were down big, which, again, the main reason we're down is not only because of things escalating and seeing oil go as high as it did. But this was probably the first day in recent memory where you had not only tech names down, but consumer staple names down. And oddly enough, some oil stocks were down today. Exxon and Chevron were actually down earlier today. So when you had that, we finally had somewhat of a sell just about everything along with gold and silver. And that's why it was so scary this morning. That has really changed in the matter of a couple of hours here.
Yeah, Schlumberger is down. The refiners ETF is down. You can go over to XLE, that's off by 0.8, or XOP, which is now just back to flat on the session. Software getting some love, up 2.2% here. The Mag 7, those are only down less than 0.5% and starting to look a little bit more like maybe a double bottom down here. Jamal?
Yeah, they ran straight to the names that they have not liked for a while. The CRMs, the IBMs, the Microsofts of the world. That's kind of an interesting thing to see on a day like today, isn't it, Chris? I mean, when you looked at the heat map early this morning, not only were those names down, but finance was down, and so was oil names, and so was consumer staples, which have been the main ones saving the market on the down days more recently. All that stuff was down, and we've seen a complete reversal of a lot of that. But these names that the market has not loved are actually getting a lot of love today.
They're getting a lot of love today. The sector rotation isn't that bad, particularly as we go into the second half of the session and consider this broader market rebound, which, all things considered, 24 of the 25 sector ETFs that we cover here on Futures Power Hour are red. So let's not go further than that for a quick second. But this is not the sea of red that now only 23. This isn't the sea of red that it once was. It's not everything red, and it's not everything down, more than 1% or so. 14 of the 15 are down less than 1% right now. So 14 of the 25 are down less than 1% right now. That's a good sign. Mm-hmm. What's leading the way on the rebound up? The banks, real estate, retail. These aren't names that, if we were really too worried about the state of the economy and long-term problems for energy, they wouldn't be bouncing this way, particularly a name like retail, Jamal. Because where do we get our clothing from? Where do we get all of our knickknacks from? We don't make that stuff here in America. It has to go on ships, which use oil as fuel to get across the ocean. So if we were looking at a dramatic material rise in input costs, wouldn't we think that something like the retail ETF would be struggling a little bit more? And sure enough, it's not. And yeah, I'm talking my book a bit here, being long some stock. But that is a healthy rebound now off the trend line from the lows that we had last April, that we had going into November, December. So the uptrend's still in place. We can't overreact to the headlines we're seeing. But the insurance one is a big one. And I don't want to dismiss that. Trump may have saved the market.
Guess we'll see, huh? I just like the idea that, again, already having some long deltas coming into this and being a little trouble earlier today when we were down, the ability to sell. Again, I could have done this yesterday, but vol is a lot higher today than it was yesterday. So the ability to sell some upside against some of those longs, it's a nice opportunity because I just don't think this oscillation back and forth is over yet in the market.
No, not yet. And I mean, listen, Trump comes out later today and they go, "Oh, that's great about the insurance." He's like, "Insurance, barely know her." And you're like, "What?" And the market's right back down to the lows. So
entirely possible.
This is a headline-driven market.
Oh yeah.
Capped risk. I think. I mean, Jamal, during these times, you can't go undefined directional beta. I mean, you can, just not a good way to extend your time horizon as a trader long term. Bonds off the lows, which is another interesting development because there was a point today when stocks were selling down that bonds started to bounce back as if to go, okay, we're tapping out on the crude oil risk and inflation. We're actually more concerned about the other issues now. But with oil coming off here, Jamal, bonds have been afforded the ability to kind of reset the table. We got right back down to the swing low that we had here on the 20th. Dare we say a flag support level in the recent consolidation, as is often the case when you are in a flag and you fail, consolidation yields have returned to the other side, which we get back down to that swing level and then we bounce. I don't know if there's anything to do here yet. I'm still leaning long a little bit, but I suppose that's a bet that oil's coming off. So I guess I'm technically hoping oil comes down more, but that's, neither here nor there. Do you think the bond market is offering you anything with a 15 IVR, given the 3-point trading range we've seen over the past 2 days? Do you think the 15 IVR is enough compensation to look to sell some of that vol?
I don't think so, especially right now. I mean, there's so many other things you could sell vol in that are way better. But I mean, I think we're on opposite sides on this. I'm actually long a put spread in here because we've seen bonds at these levels. We've seen them recede plenty of times over the last several months, although this time is different. Obviously, there's a lot going on here. But I guess, my play here is sort of the idea that this is going to hang around for a little bit, or oil is going to hang at these levels, which is going to lead to a little more of the inflation fears, which I'm hoping that in this case, at least for my trade, that we see bonds pull back some. And we have. But again, it is the ebb and flow of the whole entire ecosystem of all of this trade. So it's one of the few times where I actually feel halfway okay with the bond position that I have on, right? I mean, we've seen so many different head fakes in both directions in this bond trade. So yeah, I'm playing for the downside. Who knows how this is all going to play out? Because again, this is really not even almost up to bonds anymore. It's up to oil, like we've said. I think directional is really the way here right now. This is one of the few times you're actually getting bigger moves. I don't see how you could really sell vol that much in here, although who knows? Probably ends up working if you do, I guess. But I'm just not that interested in selling vol right now. I'd rather play direction.
Interesting. Well, if you're looking for the vol play, first off, for those out there, we often bring up the difference between ZN and ZB. ZN is the more approachable product for the typical retail trader, half the overnight buying requirement, half the tick value. It also so happens to be the product with the higher IVR right now, Jamal.
It does, yeah.
So 30.3 versus the 15 in ZB, there might be something a little bit more to work with here than elsewhere. I am leaning long here still. The gambit that we made last week, which looked really good up front, not so the past 2 days, was thinking that the recent swing low here from late February would hold, which is why we did the 113, 112 short put spread. And for now, it's holding up. Although if I wanted to unload it here, I'm eating a little bit of a loss. So I'm going to hold it still. I have today's low to work with. If oil was weighing so heavily on notes and bonds that its trek up to 77, 78 provoked notes and bonds to come back in, if I'm going to operate around this theory that President Trump is a man of his word and the U.S. government, U.S. taxpayer, is going to be providing insurance for these shippers, then the oil will continue to flow. The supply risk is clipped. We don't need to worry about the ever upward spiral of inflation expectations serving as a, rock tied around the long end of the curve's feet. So I'm content with the headline to stay in my net long delta here. I need a little bit more though. But would I put it on again? That is always the frequent question. Absolutely. Given the price action off of that 112, 113 area, that's the area where the market should be holding up. And that's what it did. So in terms of this being the support region, I do kind of feel vindicated there where we jump back into our 1 month and 50-day averages and we've immediately bounced. So as long as we hold that envelope, the 1 month, 50-day, that's the place with which we can operate on the long side around in this 10-year market.
Yeah, to be fair, I mean, I was totally talking my book for ZB as far as volatility, but ZN is definitely the place to sell vol if you want to. I mean, it's probably worth doing an iron condor in here. I think you can get some pretty decent prices. And the vol is actually high enough where you could do it.
It is. It's the only place right now, it feels like, in the curve where it's high enough to do it. I talk about a zone, Jamal, resistance, support. 112, 113 seems to be like the price is right. So if we were to do it again here, if we wanted to put this on fresh today, it's actually a better risk to reward than when I put it on. It's basically risking 4 to make 5.
Yeah.
We'll call it risking 3 to make 2, I think would be a better way to put it. Even so, 67% probability of profit. A minute or two ago, didn't we just look at the Russell and say the short put spread, which was a 3-to-1 at a 62% probability of profit? That was fine. So at 67%, I can get a better than a 3-to-1. I can get a 3-to-2. Yeah, this is a trade I would take again. The risk to reward is absolutely there. And the price action today vindicates keeping on long deltas vis-a-vis a short put spread as such, in my view.
I hear you.
Let's go over to the troubling parts of the market. The metals picture yesterday was ugly. We said on the show, metals painting a picture. What was the picture? Gold up, copper and silver down. That's not fun. It got worse. Silver was off 10% earlier, so maybe the worst is over. But we are looking at a market that's down 6.2%. Maybe, just maybe last week, Jamal, the market not letting me get in on the long silver side for 4 days was, it was doing its buddy a favor. It knows I've been a cheerleader for a long time. It's trying to keep me out of trouble, but I couldn't stay away. So now I'm back in more trouble. Or am I? I'm going to make the case here that we are at the place where the market had just better find support. The uptrend off the lows in January and February, the most recent swing low prior to the market breaking out. If 79.5 doesn't stick in silver, sayonara. But it has, so we endure.
I gotta say, man, I mean, this is the most you've seen these metals perturbed by the dollar since basically the big washout around the end of January, beginning of February. We haven't seen that much. I mean, we've seen plenty of times where the dollar's made a strong move and they were still strong. So it tells you the kind of dynamics that are at play here right now with this geopolitical risk. All bets are off the table. I mean, things change in a heartbeat, and you saw it start yesterday, like you said, and then again today to see this continuation to the downside with this strong move in the dollar, which again we'll get to more later about the dollar. But it's been interesting to watch this turnaround here. The ratio, gold silver ratio, still in the 60s. Obviously, because of the way that this has happened, it's not like we did see some outperformance from gold yesterday, not so much today because of the velocity of these moves. But I don't know. I'm kind of. I am not sure what I would want to do here. I've looked at these so much. I'm not sure what I want to do here with futures. I've made my bed mostly in silver via SLV, short vol. I don't know, man. I'm not sure what's next. This is one of those times where it's a little cloudy, and I'm kind of glad I don't have anything, so I can just kind of stay from the sidelines and watch what happens with this pattern. Because again, right now it's not even so much about the pattern of gold and silver, but obviously everything else revolving around this whole situation. So, I mean, it's unique. You just don't see an environment where you're talking about potential war, and yet forget silver. The fact that gold is negative, right? Like, it's just unique. But you also, historically, you probably would remember this more than I do. The idea of worries of inflation all of a sudden, right? creating an environment where we're not going to have anywhere close to a rate cut, which is probably typically the case in a situation where you're worried about a war, and seeing how it affects gold. I mean, this is just, there's so many different things going on here.
Trying to rationalize gold's move this morning. First off, if we're going to have a closure of the strait for an extended period of time and input costs are going to go through the roof, then you're going to have to just raise cash. So gold getting sold down this morning with everything else as the equity markets are bleeding. The South Korean Kospi is off 12%, right? I mean, it's if it's not nailed to the floor, you're getting rid of it. While this was going on this morning, I was looking through some data on oil price shocks, how the S&P 500 responds to oil shocks historically, how gold responds to both oil and S&P 500 shocks, and trying to figure out where maybe base case scenarios should lie. The correlation with the S&P 500 I have during history of oil shocks gives you a negative 0.5 correlation between the two, whereas gold's correlation during a period of oil shock is plus 0.4 with oil. So we could take our percent change in S&P over a given period times negative 0.5, our percent change in oil over a given period, multiply it by 0.4, and get a presumed percentage change in gold given history. So we'll call it, let's say if history is any guide, S&P falls 8% from high to low, oil goes up 25%. Gold should be up around 14% in such a scenario. But that would be the math, how that typically has worked out. Oil shock, S&P down, oil up, gold up as the dust settles, which is a nice narrative. And I can make a model with any sort of inputs and any sort of factors, Jamal, with any sort of coefficient to make myself sleep better at night. But the chart is the only thing that matters at the end of the day. 5,100 is the line in the sand. It's holding. So gold and silver teeter on the edge of edges right now. But the conditions that yielded why we were long, technically they have dissipated in a material way, at least in the gold market.
Yeah, that's the thing. I couldn't agree more. That's the thing. That's why I say right now I'm not exactly sure how to view them. Again, no real position for me outside of, SLV shortfall. But I think that is the thing to keep in mind, how the conditions have changed. And so I think you got to look at it a little bit differently.
The good news is for those bulls out there looking for a reason to hang their hat still a little bit high, we do have vol that's been bouncing back over the past few days. IVRs at the start of the month coming in were 59.63 yesterday, 59.65 today. The range is 73 to 80. The vol structure slowly but surely expanding is a welcome development, as it is in silver, which both over the past week, gold and silver have been feeling, that expansion of volatility, so to speak, ever so slightly. I'm just going to give myself very clean levels. Usually it's something like Danger Will Robinson or everything's fine. You know what? If silver's back above 86.5 in the next 24 hours, I'm going to feel a lot better about things. If we find ourselves trading below 79.5, 80 or so, I'm going to feel worse about things. Don't want to be long silver for trading in this part of the chart. We'll feel fine trading long silver if we're in this part of the chart. I'm going to do the kiss simple, Jamal. I'm keeping it simple, stupid, as I look in the mirror. There's no reason to get too fancy around this. Just trust the price action.
Oddly enough, that's the thing. It's almost like you got to tighten your ranges, even though these ranges are widening out. Likely, right? This is the biggest intraday range I think we've had in a while in silver and gold. And so you definitely have to, I think the idea of keeping your ranges tighter, even though they're widening out, is probably a smart idea to do.
Is there something that we could do that's fun here and make a case that the low's in? Not without squinting and really lying to ourselves. So we're not even going to entertain that. Copper today, again, you talk about there being a negative growth impetus. Copper still sluggish alongside gold. Jamal, yesterday we were talking about desire to find new long exposure in copper, potentially, depending upon what happens with the oil situation, because Iran's biggest customer is China. 40% of the 76% of oil that flows through the Strait of Hormuz is going to China itself. China's also the world's largest consumer of copper. So if they're going to face any sort of growth slowdown due to an economic supply shock, thanks to a lack of energy availability, one would easily envision that copper is going to be consumed by China at a lower level than previously anticipated. To that end, if we do see oil continue to flow, does copper get hit that hard? I would like to look to sell a put spread a little bit lower from here. A 5556 again at 55 DTE. We're not there quite yet. We're not in the neighborhood of where I find the risk to reward acceptable. But in terms of thinking about a low that could hold, we do have those swing levels on the chart to pay attention to, where we really haven't dipped too far below the 5-6 area going back to the start of this year. So I'm just going to be patient here. I don't need any more long delta on the metal side at this present moment. Yeah, you should see this box of Tums here, Jamal. Today has not been fun for the old ulcers, but we got to keep it on the watch list because the volatility is high enough and the levels are firm enough for right now that we're getting close to a place where we might be able to put on something equivalent to a 1-to-1 risk to reward. Right now, it's closer to a 2-to-1. Patience is going to be worthwhile, I hope.
It's vol, but you still want to be directional. I can tell.
I do.
You do.
See if it gets filled.
Immediate.
Not immediate.
Wear it.
It's going to be a good one.
Wear it.
It's going to be a good one. Don't worry
Wear
about
it
it.
like a brand new scarf.
Yeah, it's those ones that get filled immediately. You're like, okay, this is not going to be a mediocre trade. It's going to be one that I remember forever for a good reason or for a bad reason.
This is the joke we have all over the network. I think the people know at this point. We say it on every show.
There's a reason. Jamal, oil prices here still at 4.5%, but well off the highs of the day. You can see the very moment on the chart when President Trump announced this morning that we potentially get the U.S. government backstopping insurance for these shippers. That comes around 11:40 a.m. Eastern time. And oil opened up that candle 76.50. It hit a low of 75.47, $1.17 range in 1 minute. And we've continued to trade lower from there. We're at 74.39 right now. We talk about oil vol stabilizing. The high for the day is up near 105, so it's off marginally at a 103.2. Jamal, have you thought about monetizing any longs that you have here? I'm still sitting long the 70.71. I could peel it off for a few $100 right now. Maybe feeling a little greedy because of losses elsewhere. So want to let this run a little bit. What say you? I'm at 14 DTE on a 70.71 call spread.
Well, about your call spread? I mean,
do I take profit and let everything else work?
I mean, why not keep it on? Depending on how the book is, without knowing how completely your book is positioned, why not keep it on just because of the ebb and flow and who knows how this is all going to really end up? Again, it's starting to feel like we could be seeing $80 oil. This is one of the reasons why I put on the trade that I put on yesterday with just 6 days ago. At this point, that 77.80 call spread, also along with the short MCL at 72.5, it's just feeling like you're going to have an ebb and flow here for sure. And so why not? I should also say, I have on an April Iron Condor. I put that on late last week. My short strikes are 60, the 60 put and the 79 call with $1 wide. Specifically, I went further upside, and Mike Butler's in this trade with me. We went further upside because there was so much upside skew late last week heading into this situation over the weekend. So I'm kind of glad I'm up there on that short call spread, 79.80. But that being said, I think there's room to also do something in the near term, like you have in 14-day, like I had put on yesterday, because I feel like oil is going to move that much. I just think the headlines, like you said, there's so much headline risk right now. And so as a result, I think things are going to move around a good bit. So I'm not taking it off today. Maybe, later in the week. I mean, we're only on Tuesday, right? We'll see how the rest of this week holds up. By the way, we haven't even once mentioned, which you will at the end of the show probably, maybe, that we have a jobs report later this week, right? That was supposed to be the big catalyst this week, but no. oil and this situation Iran is taking center stage.
There was a much stupider, more naive version of myself last week that was saying things like, who knows if there's going to be a jobs report because of the government shutdown. It was canceled last, like as if that, who cares at this point? Yeah. The Fed's not doing anything in March or May. And then are we going to get a Fed? Oh, that's so fun, Jamal. We're almost a month away from being able to say next meeting is going to be Powell's last meeting.
Yeah.
Will it be Powell's last meeting? I think that he's going to be Fed chair until January.
Yeah? Why?
Next year. I just don't think that he's leaving.
When you say it like that, it makes you think of Wolf of Wall Street.
I think Bob Weir from the Grateful Dead just died, and so Dead & Co. is not necessarily touring the way that they planned on touring, and so Powell has nothing better to do with his time than continue on as Fed chair. That's like 70% serious.
You know what? I'm not leaving.
Speaking of not leaving, while it's here, oil vol, Jamal, if we went out to the 1 standard deviation move, 44 days to expiration, CLK6 contract, $93. We could sell the 92.93 call spread right now at an 83% probability of profit, risking 7 to make 1. We could get pull this in a little bit or widen it out. We could tinker with it a number of ways, but do you think that we're going to see $90 oil in the next month and a half? If your answer is no, the market has a setup for you. I have my directionally neutral fading oil vol trade on right now, so there's nothing more for me to do here at present time. But if I were to do it again today, do I think that the June highs and the recent lows, this is not the right strike, the recent lows may hold? Yes. That is still in the neighborhood of a 2-to-1. It is still a 50% probability of profit, still trading around the charts. So, Jamal, I think that we can take advantage of the oil vol while it's here, 101 IVR, off 4 points from its highs. Think about a way to operate where we're not calling the top. We're just saying that maybe things stabilize and volatility comes in and the benefit of theta burn. We ride out the headlines. We're not worried about oil going up or down today or tomorrow. We just need to get through this 24 to 30-day window.
You know what I like too, though? I like selling that call spread, but honestly, I don't think it hurts you to have some downside calls, basically turn into an iron condor as well. I think you can sell some of these call side strikes very comfortably right now. I mean, downside strikes. You can sell some of the call strikes as well, the call side, call spreads very comfortably, but I think you can also sell downside. Like I'm looking at a call spread, the 61.62 in April, 61.62 put spread, and the 90.91 call spread. I mean, and again, you can do 64, 63. It doesn't really matter. But I was looking at April, but I'm sure it probably still works here too. Just the fact that there is so much upside, but there is so much uncertainty, and who knows where this is going. I don't know. I don't know if we're going to be at 90 a few weeks from now. Again, the timeline is 4 to 5 weeks, but who knows, man? Like, again, this really could escalate. If it does, we will definitely see upwards of 80, maybe even 90, and so I think there's nothing wrong with adding a put spread to that right now, because again, I think at least there's a floor, right? I mean, there's definitely somewhat of a floor in oil, and I don't know how much further it goes than 65 in a swift action way. So I think you can sell, somewhere between 64 and 63 or 62 and 61 to the downside, along with selling upside to at least kind of offset if there is a huge move.
Gas maybe giving a tell as well. Qatar, one of the world's largest producers of LNG, alongside the United States and Australia, and about 20% of the world's LNG goes through the Strait of Hormuz, akin to the crude oil flow. This is a 5-minute chart of natural gas. Natural gas is the honey badger. It does not follow fundamentals, technicals, quantitative, astrology, you name something. Pick an ism out of the hat, Jamal, to figure out how you analyze markets. I'll tell you, though, using my technical analysis here, I see that the swing lows that we had all morning long that were holding up as support have been broken. And vol, which spiked up this morning, has been starting to fade once again. So if gas calms down, which is a bigger problem in Europe than it is here, we saw the European natural gas prices settled higher by 36% today.
Wow.
At one point this morning, they were up 97% from Friday's close.
Wow.
It's a different scope and scale of a problem than we're facing here. But the energy prices staying up is really one of the driving reasons that the dollar is doing well. We've energy vol in control of this scenario. We'll keep an eye on that. But as we wind down the session, the energy story matters more to the dollar than people may be giving it credit for. When energy prices go up dramatically, a lot of these energy markets are denominated in US dollars. So we have that on one hand. And then you sprinkle in higher US yields coming in on the other, and all of a sudden the dollar looks relatively more appealing than its counterparts. So for foreigners, for people like in the UK, for example, or in Asia, South Korea or Japan, given what just happened in their markets, is an excellent example of this. When their currencies go down in value, they also are facing a problem where the cost of their inputs are going up denominated in another currency. And so you look at the Kospi today down 12%, 13% from Friday's close to where it ultimately settles today. That's a really ugly move, in part because it's a double tap on both ends. So with gas prices cooling off, right, and treasury yields falling, that has the reverse effect as the session goes on. The dollar is off a little bit here. It's not quite near its session highs. You could see the pound has bounced this morning. You could see that the euro, as bad as it was this morning, begins to bounce, right?
Yep.
At the yen. All of these are happening right around that 10:30, 10:40 Eastern hour. That's when the dollar buying stops. It's alongside oil buying halting. The rally cuts itself off. So there's really, we talk about energy being involved. You say all that traders need to do is watch oil right now. It is the VIX of the market. It's impacting rates. It's impacting currency. It's impacting equities. If you're not an oil man or woman, you should be. That's the only thing that matters right now, no matter what you're trading. So energy vol is the name of the game, Jamal. You said it perfectly at the start of the show. I think that's where we can end the show here today. Dr. Jim's not on, so they told me that we can run over, much to the chagrin of James, our lovely producer. But do you have anything going on in the currency space before we close this out and go to a quick VOD?
Yeah, I've been long dollar in the TastyFX account. Actually, I was long in a multitude of ways. I mean, it was I was long. I was short the euro, and I was long dollar CAD. I was. There's a bunch of different ways that I had it on, and mostly is because I always felt that the one biggest risk is to my portfolio, the regular portfolio, was that, and so that has worked out well recently. Flipped a couple of those positions, given the moves that we saw today. We'll see how it pans out, but I mean, this has been the biggest thing, oddly enough, going on. Whether it was with oil and dollar and yields, these are the drivers right now of the market that we currently find ourselves in for equities, and so I think those are the things you have to watch the most and keep aware of your exposure to any one of those or the equity market. Make sure you're aligned correctly, because these are the things that are moving the equity market right now.
Well, tomorrow on the calendar, what's next? Tomorrow there is ISM services. That is something that matters here. And U.S. consumer confidence has been bouncing back in recent months, particularly post-government shutdown. I know we're in another one right now, but hey, the survey's conducted and the data's gathered prior to the Iranian strikes. Does it matter? We'll find out. Jamal, you and I are done here for today, though. We'll be back in a little bit. We do have Dr. J coming up next, video on demand, I believe, if it's Dr. J. But video on demand is up next, which is great. So people have time to go get a drink, beverage. Tune back in. 90 more minutes. Expect a wild close, folks. We'll catch you as the day goes on. You're watching Tasty Live.
Nicky, we are back, son, and you know what that means. The voice of reason is in the room. Let me explain with Chris Vecchio. Chris, Explain this to me. Even the S&P is down 2%, NASDAQ down 2%.
Help!
Russell down 3.5%, Dow down 2%, volatility 23.45. I say the low is in right here. What say you?
From your lips to God's ears.
Yes.
Oh no! If we're smoking hopium, then I gotta revise my call here a little bit. Then we gotta have. So is there pain in the streets?
There's pain in my streets, at least. Not the least because the streets are closed again because of snow. And so the kids are home from school, which is just delightful. I think my daughter's been to school 8 times in the past month because of holidays and whatnot. Anyway, good to see our tax dollars at play. No, I'm not going to lie. I'm getting cooked out here today with gold and silver right now. It is a broad liquidation type of move in this market, so I'm having no fun here. Whatever little long oil exposure and long deltas in gas that I have going on for me is not enough to offset the pain otherwise. So the question, Tony, that you asked, though, is are the lows in? I don't believe in technical analysis on the VIX. I say that all the time because the VIX is a non-stationary time series, and thus you can't apply technical analysis to it. However, recent cycle highs in the VIX, if we were to think about where it's petered out on advances, have come in that 24 to 25 area.
Yeah.
If we look back to October, November. So further material escalation would have to be required from here. But, in terms of that material escalation coming, there are signs that it has happened and is happening. Iran is striking Qatari and other facilities, UAE facilities, Bahrainian facilities, even those that are not even within the constraints of the Strait of Hormuz. So it's not like they're just trying to pinch that particular global choke point. They're trying to destroy Gulf energy infrastructure in totality. So a market here today pricing in much higher physical supply risk overall. Europe and Asia to me are really the big tells. You could look to EWY, Tony, on the platform, which is the South Korea ETF for the Kospi. That's fallen out of bed here, I think 12% in today's session. And so when you have a lot of
now.
go ahead.
Yeah.
13% now in today's session.
Right, but they were closed on Monday, right? The market, the Korean market was closed on Monday, I believe. That's what I've read.
Oh, so it's a little 2 for 1.
Yeah.
Everything that I read. They have all leveraged products.
Yeah, they got a lot of leverage.
It's up a gazillion percent, like 150%, even after this move down today. It's a 2x, 3x leveraged gambling type product. This is why I think the market's actually near its lows. You've got gold and silver, which I'm looking at as...
That's another leverage. There's a lot of leverage.
Yeah, as another, as like a meme stock type run up that we've had, and two-sided action, meme stock like, not like market type. I'm just going old school now.
Yeah.
And as even the S&Ps make new lows and volatility is right near the highs here, you're getting no rotation anywhere, but you're getting a 10% move in things that are, I don't know, Bitcoin-like. You know what I mean? Meme stock-like.
Yeah.
And you're getting a smaller move. We're down near the lows, making new lows maybe in all the equity prices. I think the flight to quality is actually to the equity markets. I don't know. That's my thinking. When you have Europe, when you have our market basically unchanged, now down for the year, and across the world up 10%, something's got to give.
Yeah,
and I would imagine to be that 10% up move than our market. That's the way I'm looking at it.
Mag 7's only down 1.5% today compared to everything else. So, if we want to dust off a 2022 playbook, right? I know as human beings, we like to tell ourselves stories to help make sense of the world. And so I think a lot of people in the past few days have been looking at, is this an Iraq 2003 type of market reaction, or is it going to be more of like a 2022 type of reaction? Because while war came in both of those scenarios, the S&P 500 fell about 5.2% in March 23 when we invaded Iraq and Saddam fell. But the pace of that war and the framing of the war, I think, allowed the market to think that it was going to end quickly. So within 16 days, the S&P 500 had erased its losses. And in 2003, the market was up 26%, a little bit more than that over the course of the year. 2022 is a different story, of course. We know that small cap and mid cap stocks got hit hard. You have your rising oil and energy prices, which feed directly into inputs, and the Fed is having a hike rate. So whatever moats that some of these companies had were quickly deteriorated. And the Mag 7 companies with their tens or hundreds of billions of dollars of cash on their balance sheets were better suited to withstand those pressures. So just early days here in this 2-day, now day 4 of the war, but 2 days with the market opened. We shouldn't ignore the fact that some of these cross-sector flows, people are running to the big cap tech names on a relative basis as a flight to quality. And that's more of a 2022 type of reaction than a 2003 type of reaction here. So not loving what I'm seeing right now. The best laid plans of mice and men often go awry. And my plans were to start getting long stocks here in early March. We may have to wait a little bit for that, Nick. Maybe 6,600 in ES.
Oh, we're right there. We're 100 points. That's one day. It's 100 points off from there. But I think what you're pointing out about the Mag 7s, the Mag 7s over the last like 4 or 5 months have gone nowhere or lower, right? So we've had Microsoft is down, let's call it 25%. Meta is down 25%. Amazon hasn't moved in 4 years. Google's at highs. NVIDIA is kind of at the lower end of where it's been trading. It's at like 175-ish. It's down about, we'll call it 15, 20% from the highs. Apple has been kind of near the higher end of the range. So netting out, I'd say about, if you took the Mag 7s, what are we down? 15% from the highs-ish?
Yeah.
If you got people rushing to buy those right now, that's a good sign for the markets bottoming out, is it not? Because you've had them wash out. Market's gone basically nowhere. You've had everything kind of catch up or go parabolic. You have the Caterpillars of the world that are up 5x, and Microsoft is down 25%. So that nets out to a scratch. If you get Microsoft to bounce back to highs and some of those stocks come down 20, 30, 40%, we're probably at higher E-mini prices, are we not? Net.
Yeah. I mean, look at software, for example, on a day like today. If this was truly the the world's ending, don't we think software would have caught a little bit of a down leg too? And it's off 1.5%, but that's not the 2% the Nasdaq's down. So some of the stuff that we've been looking for to stabilize prior to the Iranian strikes, it's continuing to hold up, which comports with the view that late February, early March is a period that tends to be of difficulty for the broader market. It's when the volatility tends to rise, and then you get your market bottoming out by around March 10th. So seasonally speaking, those seasonal traders, which I wish I was trading along the seasonality a little bit more, obviously, because I haven't been. And if I was, I wouldn't be in the blender like I am today. But the seasonal traders, they've had a pretty good run of things because you anticipate higher vol and lower equity prices over the next week or two. But, the sentiment here, I think, is the most important thing to take away from all of this. On one hand, the market's reaction to the Citrini report and the way that we're trading today shows that a lot of people still are levered long, even in a name like silver, where the CME has raised margins a bunch of times. On the other hand, the AAII bull-bear spread has moved to a place where, because of the dramatic shift in bearishness over the past 3 months, it is in washout territory for sentiment. So, the news flow matters most. Energy and energy vol are the tail wagging the dog. If there's any sort of break in the news flow that allows oil to break lower or gas to break lower, the market's going to stabilize, I think, very quickly. And then we start to look more like 2003 and less like 2022.
Well, you're the one that told me oil's at 2023 levels. I mean, we haven't seen these numbers since 2023. So you're my Taiwanese Korean source. That's what I named you. You're my
just told everyone.
Just the source. We should just call him the source.
The source. Yeah. So wouldn't that play to your irrational exuberance in oil? The narrative?
Rational exuberance? It feels like it's pretty rational given everything going on right now.
Yeah, but it hasn't been a face.
That's the buy the news. You got to sell the news.
No, you buy the rumor.
Have to sell the news.
Yes, but go ahead.
Let's get a day where we don't have an incremental new high in oil fall. I think would be a good stepping stone. Because
that's
over the past
point.
few days, even yesterday when oil prices came in, we did see a new daily high in IVR. And today we're at 102.9 right now, which is, again, the highest that we've seen in the IVR since last June. So as long as those continue to climb, and I think that's actually noteworthy, right? When you get through 100 in IVR, Nick, I mean, what is that telling us? It's like going below zero. We're now 2.6% above the highest reading that we've seen over the past year. So oil vol has eclipsed the June episode. That tells you that it's not the same type of conflict. But once that breaks, then we're going to get the green light. And so today is not the day. We have the new incremental high. The low in IVR for oil is 76.32. So just as a exercise here, let's say at some point in the session news breaks and IVRs are back in the 80s or 70s, that may be an intraday signal that we have something to work with, taking a shot at a more significant swing low in equities there, Tony.
So question for you. If we close down 2% or more on the day across the board on the equities, I mean, the Russell's down 3.5%. Is that bullish, bearish, doesn't mean anything, or is it better that we close down 1% across the board? Is that bullish, bearish, or neutral? Just asking hypotheticals to you.
I'd like to see the market close like down 1% as opposed to 2%. I feel like this is one of those questions when I'm talking to Ilya, I'm like, Ilya, stocks just closed at an all-time high today. And he's like, yeah, but not like the absolute all. If you're down, you're down. Okay. Yeah. Like I'm not going to, it's bad news if you're a bull, but in terms of the shape of a recovery, you know, if all of a sudden it's 2 o'clock, 3 o'clock, 4 o'clock, and the market's 50, 60, 70 points off the low in the S, it just gives a different flavor to how the day went out. And, you know, right now oil is sitting at 77, up over 8%. So it's not like we're looking at that swing occurring at this very moment in time. And IVR just hit a new high for the day at 103.1. So, you know, the ticks continue. There's no reason to fade it and play hero ball until oil vol breaks.
The move in oil, though, I mean, it's been a big move.
And market volatility's hung out there too, right? Yeah, I mean, just under 24 now, 23.90 on the high.
The oil move is big. It's not like an explosion big. We're not at 100. We're not at 120. Like,
no.
Does that kind of tell? Does that give you the thought that maybe like this was kind of already in the cards? Like we were positioned for this move in oil. We were positioned for this move in equities to some regard because, you know, 2% move it's a decent move, but, you know, it's a paper cut in the grand scale of the market. I mean, we're given a couple weeks here and we've gone basically nowhere for 6 months. You know, these aren't big moves here. Doesn't it kind of give you the air that this whole thing is kind of, we've already hedged for this? Like we all knew this was coming, right?
We had to have known this was coming.
Not to this.
Tony, we moved two carriers.
Not to the magnitude of this move back and forth the way that we've been. I mean, we've gotten the ick multiple times. We've gotten the ick multiple times on this show, only to be 15 minutes later have a rally of 100 handles on the E-mini S&Ps. I mean, just yesterday you were 6,900. I mean, I know you say we're only 150 handles lower than that, but that's in a 1-day move, not in a 5-day move. I mean, ES, just to give you an idea, looking at like the expected move, it's only 48 handles, which I think at this time right now, which I think is relatively low the way we've been moving. Now, we've only moved 20 some odd handles for the day, top to bottom. I know we're down 2%, but from the opening, we moved about 20 handles.
Yeah.
So are we perfectly priced here, down 145?
Well, I mean, Tony, let's just go back to like 6 months ago. If I told you in the start of, before the end of the first quarter, Trump will have captured Nicolas Maduro and killed the Ayatollah, how far off of the highs do you think the S&P 500 will be?
I think we would be making new highs.
No, I mean, I think people would say like 48 hours after the Ayatollah, you know, the market's open after the Ayatollah's killed, how much lower are we? And you're like, okay, well, the straits effectively closed. Insurance companies are no longer offering war insurance, so only 2%.
Right. But that's the spin. That's the spin that you don't hear. Like you hear that the strait is closed, and they don't say it's because insurance. You think the strait is closed, and the public thinks it's because, you know, it's unsafe. And obviously, if insurance companies stop their pay. This is the thing about insurance companies. This is why I should hate insurance companies more than anything else. I mean, when you need the insurance, they're not going to be there for you. When you don't need the insurance, they're willing to take your money.
Yeah.
You have to look at this as an opportunity, and I think it's an opportunity slapping you in the face. Now, I don't know if we're 1%, 2%, 5% eventually off the lows, but I'm nibbling on the long side.
And you should be trading. It's not like it's...
You should be trading it.
It's not like it's like all,
There's been no
all or
opportunity.
nothing.
There's been no opportunity one way or the other right now because we've been in a pretty tight 20-ish. You actually bought the lows and sold the highs on the NASDAQ move that we had this morning. Other than that, we've been sitting within 10 handles.
Yeah, but this has been...
If you're putting in tight stops, you're going to get chopped up too.
Oh, you're going to get chopped up. And I mean, it's position sizing, but you have to be you have to take the opportunities as they come. Yesterday we took off some long delta in Palantir. It was up like $8-9. It was up $2 or $3 more this morning.
Yep.
But you're getting these huge moves in both directions where if you're scalping, if you're trading options, when you have a VIX of 25, 26, you're going to have stuff moving around. You got to be a little nimble here. The story.
Yeah, and you know what? I think just sticking to the longer term data here in terms of what we know works best in these scenarios, we trot this out every few months whenever there's a big vol expansion.
Sure.
But I recall our what strategy fits best slides that we've shared on air before when measuring what the average daily return when the VIX is between certain levels. And for example, when the VIX is between 20 and 30, according to the data since 2005, long ES returns minus 0.04% a day, whereas a short strangle returns plus 0.14% per day. And so I know that these are scary times. Two things to add on to what you said, Nick, about this being a scalping environment. For someone like me I've looked at my own trading performance. I'm a garbage scalper. My mindset right now is capital preservation, right? It doesn't need to be to trade as much and make as much money as possible in the volatility. It's because I know these are choppy waters that I don't do well in. But two, if I am going to jump into these waters, we have history to guide us for what we can do to keep our head above water and to not be emotional about what we're seeing on our charts. And that is the typical Tasty kind of trading, not my cowboy gold out of the money calls like ES is going through the moon, see you in 3 months. But it's more of that typical Tasty trade methodology where we look to sell the vol with enough duration so that we can weather the storm, and the data supports that.
And to your point, just to reiterate that, the reason why that is and that the long E-minis is not as fruitful as the short vol is because the mean reversion in vol is typically faster than the price reversion. We are so used to having these V bottoms where in a week we're back at all-time highs. A lot of the time you chop around for a little bit and you grind higher over weeks and months and a significant amount of time, whereas volatility is back to where it was in a week or two. And that's why those kind of stats, when you get this high volatility, that's why we're looking at those opportunities.
I don't know, 1-by-2 put ratio spreads, my bread and butter seem to be bid crazy. Things in SPY that I was doing for $3, $4 the other day are around $7 now. So they've doubled in price just in SPY. Now, if you're staggering in there, I think with volatility at 24, it's a gift. You want to do both sides? Do both sides.
Yeah.
But it's a gift here, in my opinion.
And you know what? Looking at that ball in the face, we were talking about this yesterday on Futures Power Hour and Overtime. Just the 6-month trading range. You're effectively at the midpoint. Lows near 65.82, highs up at 70.40 in the ES H6 contract. If you want to be directionally neutral with a 38.40 IVR here in ES right now, there's really not a better place to do it. You just got to give yourself the time to ride out whatever unfortunate and unsettling headlines we see here. But let's look to the future. Let's say the sell-off continues. Let's say, Nick, we get another 3% between friends, 2% between friends over here to get down to 6,600. That's where I start to take a swing with a little bit more conviction, because that is a 6-month range low. And I have faith in my fellow retail brethren that they will try to be dip buyers at 6-month range lows.
We're getting hurt here a little bit. The retail dip buyers. Ow. Ooh.
Yeah, I have losing trades on here. Yeah, 100%.
Yeah. But I'm with you.
Capital preservation, gentlemen.
Even you,
that's the name of the game,
who had positive P&L for a quick moment in the overall portfolio here, is now with volatility creeping up almost 15%, is starting to hurt your portfolio too, and you nibble a little bit. Some of the trade, just to go back to like your diamond trade that you put on, just to see how much that's moved. You did it at like $10 and change. It's $11 and change now.
And diamonds haven't really moved in.
Diamonds haven't moved at all, but volatility has.
Yep.
Good job out of you, Mr. Vecchio. Thank you for explaining some things that are unexplainable to us and their opinions. So trade what's in front of you and trade in your size, right? Don't ramp up, but you can ramp up the strategy. If you're not used to doing a naked option, maybe today's the time to do a naked option. If you're used to doing $5 spreads, maybe today's the time to do $10 wide spreads. Incrementally make your trades more risky by doing it in a sophisticated way, meaning just expanding on what you normally do. to take advantage of some of this volatility and also putting on more risk. We like to ramp up when volatility is high. We like to kind of pare it down when volatility is low. If you've never done a diagonal spread, well, vol dispersion between front month and back month has never been higher recently over the last 6 months or so. So if you're looking at doing that type of spread, do that type of spread. Today would be the day.
That's not a very liquid underlying there.
GS. Yeah, and stay liquid.
I sold some puts in Goldman Sachs here.
And stay in liquid products. Don't do as we do as we say. Goldman Sachs.
I was looking at what was moving the Dow, and it's one of the biggest movers.
Down $25 off its lows of 826 to 835. Good job out of you, Mr. Vecchio. We're gonna take a quick 90-second break and come back. We got more Tasty Live coming up here with. We're going to do a market measure and talk about the markets in between there as we do this market measure. Thank you so much, Mr. Vecchio. Oh, Vecchio, don't go anywhere at 2:30 Central Standard Time today because I'm going to be on the show with Liz doing Last Call.
Oh.
Yeah, you got to bring in the big guns.
Heavy firepower.
Heavy firepower.
Wow.
Wow.
Beautiful.
We'll be back in 90 seconds. We got more Tasty Live after this. Nikki, we are back, son. Mama said there'd be days like this. You know that, right?
Mm-hmm. Yeah, no, this is done. You should expect to have some downside moves occasionally.
Expect the unexpected today. And we have been, well, we both talked about how we were going to chop around. It didn't look like it was going to be one of those V bottoms today. I actually thought we'd be a little bit stronger than where we are right now, down 146, just a few handles off of the lows on the E-mini S&Ps. NASDAQ hanging out here at 24,500, actually just making some lows right now. Russell is the weakest of the group, down 3.5%, and the Dow down 1,160 or so. Volatility up $3.28 and staying bid across the board here. Even the E-mini S&Ps rallied by 10 handles. Volatility has not come in, might be a little bit early. In our calls here. Bonds down 10. I meant to ask Vecchio if he thought bonds had to rally for the market to catch a bid. I don't know what his answer is. Maybe if he's listening, he can write into me and ask him that. What'd you just do in JP Morgan?
Got a little long delta, did diagonal spread.
Gotcha.
Some of these banking stocks have just got, I mean, obviously it's the move in bonds is going to reflect in those, but they're down 10, 15, 20%. You know, they seem like they've kind of had a little bit of a spanking here.
JP Morgan down around $4. Let's see what's going on. Even the S&Ps make a new low here, down a $1.50. Let's see what the buckers are. We can't look at volatility. That's going to be a bucker. USO, that's going to be oil. Obviously, with oil higher, that's a bucker. BBY, which had earnings, Best Buy. Somebody wrote it to me. What is Best Buy? Up $3.60.
What is Best Buy?
Yeah, big box store. I'm just teasing. Like, you know, the Target up $3.50. And then there's really basically nothing here on this high option volume list. When you go to the downside, obviously it's going to be numerous. MDB, which was MongoDB for earnings. You can't really trade it. Markets are too wide. And their gold down $30 to 450, 460 right now. Goldman Sachs down 29, TSM down 21. A lot of stocks being taken out to the woodshed. Meta, which was up before, is down $10. Let's see what your beloved Apple is. Apple down $1.20. Weird.
I know it's kind of it's a little. I mean, you've had kind of the down move in those stocks in the Mag 7s. They've been weak.
Yeah, they've been weak relative.
I'm not
to the rest
shocked
of the market.
that like on a day where market's down big and you're searching for some cash that you're the people that have wanted out of Microsoft, they're already out.
Yeah,
there was a pretty quick liquidation there.
Sure.
Now you got to go for your CATs and Goldman Sachs and some of the stuff that's at highs, right?
Yeah.
EWY.
Yeah,
You've been YOLOing in that.
Let's take a look here. Instead of looking at high option.
Say
again.
So that the 1x3 that we did in the Qs.
Yes.
It's actually up 30 cents. And the Qs.
You did it at 870. It's trading around.
It had slightly short delta.
Yes.
But the Qs were at 190 or at 597. So they're down about 4 handles, which is big. Well, they're down about another, 0.5%, 1%.
Right. You had a short delta trade, but short volatility trade.
It was short volatility and slightly short delta.
Yeah, it didn't have any long delta to it. I mean, even right now, it has a 1x3. It has 12 short deltas to it.
Yeah.
So it did have short delta to it. So your point you're making is it went lower. You have short delta.
The long option that's further out in time.
That's right.
Increase in volatility. So that option goes nowhere. Those short options you lose a little bit of value out of them, but they kind of stay bid.
That is
even into the downside move.
That is correct.
It's a vol. There's vol.
Definitely a vol play. Here's the S&P 500. I just put the S&P 500 list up here. These are 500 S&P stocks, obviously, and you can see here you've got 7, 8, 10 stocks out of 500 that are higher. Oh, this is a pretty broad-based sell-off. On the top of the leader would be AZO. Down 175. I mean, AutoZone untradeable from an option standpoint.
I think it had earnings this morning too.
Not
that matters.
No, it traded down to 674 on the low. I think it opened around almost 3,700 right here. So it's been pretty steady for earnings. But the first stock that you look at here, SanDisk, which is also a hard one to trade, but Caterpillar down $39. That's what's hurting the Dow there too. MU down 31. A lot of stocks. And all I'm trying to say here is it's broad-based. Sell off. Obviously, even the S&P's down 160. Volatility 2470. Oof. Ooh, little early.
Made
a mistake.
I can blame you for that.
You can. You most certainly can. We
still got them. We got them. We got some ammo left.
Got some work to do now. Volatility 2475 on its highs.
Cool. Should we do it?
I'm ready. Yes. Let's go to a market measure here, sponsored by the SIBO.
What are the success rates of the top sector ETFs? We're going to be looking at a couple sector ETFs and looking at strangles in those. So a little bit different than what we typically look at, which is typically SPY. And so we've known that individual stocks generally have a consistent success rate similar to indices. So volatility is volatility, whether it's in SPY or Apple or anything else. You have relatively the same sort of expected win rates there. But additionally, their success rates are often higher than the theoretical expectations. So across the board, volatility is overstated. And so when volatility is high, it typically contracts, and that implied volatility is typically overstated. Today, we are going to examine the success rates across different sectors. And so the study is that we're going to analyze strangle performance from the top 5 holdings of the 5 most popular sector ETFs. So we're looking at XLE, XLK, XLF, XLV, which is healthcare, and the utilities, which is XLU. And we tested the success rates of selling 16 Delta strangles with 45 days to go till expiration. We're also going to look at 30 Delta strangles with 45 days to go till expiration. And just see, what's the best bang for your buck.
Sure. Let's do it.
And so first, these 5 sectors exhibit low to intermediate positive correlations. I mean, everything has some sort of positive correlation. Like even today, on a day where the oil's up 6% and E-minis are down, you have like an XOM, which is down a handful. Just kind of goes to tell you when volatility goes high, you can kind of throw out the correlations. Correlations is a low volatility environment situation. This sort of, everything is kind of highly correlated when volatility comes into play. But you can see across the board, all these sector ETFs, light to medium correlation.
Very good.
I would say.
Yeah, I mean, correlation subject to change.
Yes, very much. So here are the top 5 largest holdings in each ETF. Their average correlation against each other is 0.29, which I consider to be very little, if not no correlation here, including the low to intermediate positive correlation. This makes them a good basket of underlying tests. So we're talking about the first basket is going to be XOM, NVIDIA, BRKB, UNH, NEE, and they're all 0.29% or 0.29 correlation. So there's really not a huge correlation across the board. And we're going to do different baskets here across from the highest weighting to the fifth highest weighting. And so that we found that all the ETFs and their top 5 stocks within these ETFs achieved a success rate higher than the theoretical 68%. This is on a 1 standard deviation strangle, and that's goes to basically everything we've ever done with volatility being overstated relative, implied volatility overstated relative to realized volatility. And their results here were pretty close to consistent. So you can see across the board, the ETFs, selling a 16 delta strangle, you expect there to be a 68% probability of success. You hit that mark, if not more, on all of these, 72% in technology, 77% in energy, et cetera. In the individual names, you can see it gets a little bit more volatile from side to side here. But you're basically in line with the ETFs themselves. Most of these underlyings, especially the top holdings, are reflected in those ETFs. So it's pretty consistent across the board.
Very good. You looking at any of these ETFs before we get this? I know you just did the financials a little bit, but do you look at any of the financial ETFs as a play here? As like a XLF or something like that?
Sure, we can get into some of those. I mean,
it's only down $1, but that doesn't tell the whole story. I mean, it's down from around 56. Ivy rank is now 53. That's about as high as it's been.
I think if you want to be more conservative with short premium, you go to those trades. The Goldman Sachs position, you do the strangle there, and you could see a 50-point face ripper. Like what I mean? I would be more comfortable with.
Or to the downside, right? So you're just mentioning something there.
Downside for sure.
So another way of getting bigger and smaller is when you go, like I said, maybe ramp up your positions when volatility is high the way it is right now. Another way to ramp up and get smaller would be to go into an ETF as opposed to an individual stock like a Goldman Sachs or anything else like that, right? You go into the ETFs, makes it a bigger strategy, more risk in something that moves a little bit less. So you're kind of, you're hedging your overall bet on the trade. Good. Volatility just at its highs again. Market tried to lift its head a little bit every time it's been getting slapped.
A little washout.
A little bit.
Yeah, that's what it feels like.
3% usually does.
Yeah. For a 30 delta strangle, we saw the similar pattern here. So all success rates were higher than the expected 58%. So when you're selling the 30 delta, you have about a 60% probability of success. And you can see the ETFs, that the ETFs, the implied volatility, typically overstated because if it was correctly stated, so to speak, it's always correct in the moment. There's no, that's just what the price that is what it is. You would expect these numbers to be a lot lower. They are much higher than what implied volatility is saying. The same thing can be said for the stocks themselves. Volatility is still overstated in both ETFs and the individual names. That's kind of what we're getting at here.
Almost 1 million E-mini S&Ps have traded already by 9:30.
Is that a good sign for you? Is that good or bad? I mean, you expect it to be that way.
Yeah, of course. I don't think it's, I don't know if the size is, obviously the size is unusual for an hour into the trading day here. Usually we get that kind of number near the end of the trading day. So volume is obviously high, but you would expect that across the board. The worst thing that I see right now for the market is just the way it's been stair-stepping down. Like if you weren't...
You want the big move. You want the flush.
You want 30, 40 handles up, 25, 30, 40 handles lower, up, down, trading. Right now, you've just been met with pressure. I think that's the worst thing for the market at the moment. Go ahead. I'm sorry to interrupt.
I'm with you. It's good.
And I'm wrong by 25 handles or so.
Yeah, we're okay.
I know, but still.
I'm not blaming you yet. I'm not coming for the house yet. Similar to our observations with the technology stocks, the technology ETFs yielded slightly lower success rates than other sectors. You have a lot of volatility in that sector specifically over the last couple of years. So the last thing that we're going to look at here is examining the relationship between the success rate and the IV or the premium level. So the premium divided by the underlying price. This tells you how much you're getting paid for the risk to put on in these trades. Mm-hmm. So we didn't find any strong relationship between this success rate and the underlying IV or the premium level. So the success rates for these ETFs are fairly consistent. There's no there's nothing more that you have to do than look at IV ranks tell you if volatility is high, the actual implied volatility, and then just the price of the underlying. There's no like special, okay, if it's, the stock is $300, I want to see, $7 of premium. If it's this much, there's nothing really special there. You just look at IV.
Correct.
Couple takeaways. Success rates for ETFs across different sectors and their main holdings are all higher than the theoretical suggested rates. This just tells you that implied volatility is typically overstated to realized. The success rates for these ETFs are slightly higher than that of SPY, but are consistent with low variance. That's because these have higher volatility. When you go to a sector ETF, it's going to generally have higher volatility than the market itself.
Good job. Good job out of you. Good job out of the whole team here. When you look at the trade that you've been putting on, like the JP Morgan trade that you just put on, which is volatility related and a little bit of delta risk to the trade. When you look at that trade as a standalone trade, there's going to be no probability of profit on it on the follow page. I'm getting the emails. Why is there no probability of profit on a trade like that? Because it's vol sensitive, meaning there's no way to dictate what vol is going to be in the future, especially on such a small.
And there's a variable, a time variable.
Variable time also. Just remember, it's a defined risk trade. That JP Morgan trade is a 1-to-1 trade. Yeah. So it's a defined risk trade. Whatever you pay for it, that's your risk on the overall trade.
Yeah.
Now,
the 1x3 trade has risk to the upside.
1x3 trade has a lot of risk, especially on a outside the expected move to the upside on that, even though it's got a little bit of delta to it too. Volatility 24.30. I think it was just a little bit early. It sold off by about 60 cents now. Even the S&Ps are down 154 at this moment. I would think the even the S&Ps and the Nasdaq and the volatility itself market has reached its lows and volatility has reached its highs. But I've been wrong before.
You're calling lows again? You can't call lows twice.
No, I'm right there. I'm right there. I'm back to where my number was when we were down around 140, 142. When I bought even the S&Ps, are down 148.
Yeah, I think we play it
right now. Now, this could be the one little pushback that we get, but volatility contracting by almost 80 cents now.
I sold puts in Meta. I sold the 575 puts in April.
Mm-hmm.
I just bought a little bit more Nasdaq, a little bit more E-minis. Short oil. Got a little bit of long delta in Goldman Sachs, JP Morgan, so kind of buying the dip there. Is there anything else that I think I should be looking at right this moment?
No, I think it's encouraging, although I didn't get a chance to ask Vecchio about it, that bonds have rallied 117.06. They're down from up from 116.17. Oil hasn't sold off at all here yet. That would be the next thing I think you would need for the market to catch itself a little bit of a bid.
What about some short-term SPY puts?
Now you're long where I am, which is about 10 handles. We're 10 handles lower now than where I bought the market.
Do you think you sell some little downside putties here, like some one standard deviation puts in SPY?
Probably rather trade those than trade the E-mini S&Ps like I have.
All right, we're gonna.
It's just so much easier when you're sitting here doing the show.
But I want to do them short term. I'm doing them in March.
You're doing it in March with 17 days to go. Mm-hmm. Now let's take a look at that.
We're keeping these small because, God forbid, we see these tested.
He can't help you right now.
Yeah, he left me a long time.
28%.
I'm still here.
28+% implied volatility in March. 26 in April. You've been making a lot of strategic plays, selling March vol higher than buying April vol. If you've noticed over the last couple of months, they've been about the same. So you've got a little bit of a vol differential. And now you're just going shorter term, which makes it a little bit more of a directional trade.
Directional trade in SPY. In Qs, I did that 1x3. So I'm already short 2 extra calls on the upside. So now short premium in the NASDAQ, which is of the group, the highest volatility.
You know what you're forgetting to give thanks to also is rolling at 21 days, because 21 days was Friday of last week when we had a nice little rally. Again,
look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
Me?
Global markets never sleep. Explore them with Forex on Tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tastytrade.
Hello, everybody. Tim Knight here. Another cool trading day, I must say. It's kind of like yesterday was. That is to say, a nice week opening, which yesterday and today I took advantage of by scurrying out of the larger positions. And then, for no particular reason, I just kind of hacked its way higher. Unlike yesterday, we are still quite in the red. Bizarrely, if that's a word, yesterday it pushed everything into the green. It's like, why? This seems kind of bad. Why would you make things positive? But yeah, just bid them up. And it reached important resistance levels. And yesterday, having gotten out of my larger shorts in the early part of the day, I got back into some short positions near the end of the day when things were strong. Not as aggressively. Would have had a better morning if I was really aggressive, but you never know what's going to happen overnight. And then today, super weak open. Yesterday, for example, I sold half of my diamond puts. Today, I sold another 40%. So it's 70% less than it was Monday morning in terms of size. And the big winner was my newfound friend, South Korea, EWY, which last week, until late last week, everything in Asia was going crazy high. Again, why? You've got Japan, which makes the United States look prudent in terms of its debt. And, their average age in Japan is like 93 or something. And then you've got South Korea, which shares this long border with an insane man with nuclear weapons. So I don't know what the appeal is, but they were sky high, record highs, and they've made good shorts lately because, wow, did they get wiped out. So we've got the gift of a little extra time today, and so let's jump in, and I've got kind of a longish list of charts. Let's bang through them, because there's a lot of cool stuff cooking. Here's the diamonds. It's going great. As you'll recall, a couple of weeks back, we were starting to get to the damage to the trend line. That was a bit of a signal. And then starting last week, we started to get some nice movement down. And yesterday, as I said, the low for the day was almost precisely at that resistance line I drew, which is this gap. And then it rallied all day long, inexplicably. So this is where I sold half of the puts. Today, it opened way down here, below resistance. Put it in a different way. The pattern is complete. So the trend line is broken and the topping pattern is complete. Yay! We are above that support line now. Whatevs. It's fine. The damage is done. The pattern is complete. And, clearly, if I just put my little hands on my little hips and not sold any puts yesterday, I would have been better off. But you never know, because this was a rather scary situation for the 1 or 2 bears left on Earth. But it's continuing to work its way lower. So I've got a pretty peewee size puts on this. But as I've mentioned in the past, my own predilection is for tons of time, like in June, September, January, not like zero DTE type stuff. And so having Aprils for me makes me a little bit antsy. And so I've got a vanishingly small position on those April puts, but got a lot of other puts that expire way out in the future. and those are all doing well. So diamonds, big thumbs up. EWJ, I did not have a position today. I did yesterday, but wow, another great thing to just have held on to. Oh well. Look at this. Here's the lifetime high a couple of weeks back. And then we had our gap down. We pushed back up, and we might as well draw the other one. They don't cost anything. Let's put another horizontal ray there. Bang. And so we got deliciously close to it on Friday, which is when I shorted. It plunged yesterday. I thought, boy, am I smart. Well, not really, because look what happened next. I covered it round about here. And then today it opened way down here. I mean, just incredible. So this thing has moved from around 94 to as low as 84. So that's, I can't do the math that fast, but what's it, like 12% or something? That would be the equivalent of the Dow losing 6,000 points, which would require Pam Bondi to say something else now. Bring her back. So just amazing. So missed that one. I didn't miss this fellow, though, EWY. This is South Korea. I had gotten into this one on the short side also on Friday, covered yesterday for a profit, yay me. But I got back into it again late yesterday on strength. And even now, and it's rallied mightily here, even now it's down almost 10%, which would be about 5,000 points negative on the Dow overnight. It was way down here. So it was down like, 12% or something like that. It was really, really weak. So it undid a couple of weeks worth of inexplicable price gains overnight. So that was a great trade. I made mention of China last week because this support had failed, and it's getting fricasseed as well, day after day. Just down, down, down we go. So that's cool. Thus, if you look at something very broad and all-encompassing like emerging markets, EEM, that's bombing too. I don't know if this is accurate. Financial data is a tricky beast, so I'm not going to declare, but let's just assume it was. This is a fantastic shooting star. I've been doing this a long time. I've looked at literally millions of charts. I've got a pretty good eye for like data spikes. That looks to me like a data spike. I don't really trust it. But if it weren't, that's an amazing shooting star. Regardless, we fell yesterday and fell really hard today on the emerging markets. And then EFA, which is equities outside North America, very heavily traded, just sensational. Look at this. There's the wedge. And we were very politely within the wedge, la-di-da-di-da, life is good, life is grand, everything's going to be great. And then we peaked lifetime high on Friday, fell hard yesterday, and then fell so hard today, it was just like, I'm out of this wedge. See ya, buddy. And so it opened down here. The peak today, how about that? Just below the wedge. Magical. So that's pretty right on too. With all this going on, volatility is getting kind of spicy. This is the UVIX, which is the double leverage long VIX futures. And, this is a beast, of course. By and large, it tends to just collapse. It's lost, even in this short span of time, 90% of its value. But on occasion, like say right now, it does base and start to push higher. And so in the span of just a few days, we've gone from around 550 to earlier today, we were above $8. So just in a few days, a big move higher. It's way off those highs right now, but it's still up over 7% today. So that's, you can see quite plainly, and I guess there were some splits missed here. So it's kind of rare that you see this sort of basing pattern because this is a leveraged instrument and it takes a lot of negativity to sustain that so that the leveraged nature doesn't eat itself alive. Oil is blasting higher again. USO is up about 2.2%. Once more, it's well off its own highs for the day. I suppose, as with yesterday, there's this general, everything's going to be fine kind of zeitgeist going on. Maybe it will. I don't know. But USO has popped above this long, long zone where it's just grinded away for literally years. And so it's kind of escaped that. over with gold. And this is, as happy as I am with this market these days, the one thing I'm scolding myself hard for is not taking advantage of shorting miners yesterday. Because I know there's this shtick about, oh, I'm a perma bear. Yeah, but it's really more about wanting to trade extremes in price, either extreme lows or extreme highs. It's just that in my lifetime, things are usually at extreme highs. And gold, silver, miners, they were all going crazy yesterday, especially, like I said, gold and the miners. But I didn't do anything about it. And of course, I wake up to dust up over 20%. Gold peaked yesterday, but not at a lifetime high. It gave up way more than all that. It gave up the past week and a half of gains. So it's down almost $180 an ounce. So that's quite the wipeout, and probably surprising to those who expect it to just go up every day if there's a war on. And then silver's down over 6% and way below its own lifetime highs as well. And so with all this going on, SIL, the silver miners, they were right near lifetime highs yesterday, and they fell hard today, over 9%. Why don't we just drag this line up to its lifetime high? That's kind of a marker. So yeah, I mean, that's, that emphasizes it. Yesterday, we were just pennies away from lifetime highs. Now it's just getting walloped. Speaking of wallop, the big earnings news yesterday was Mongo Database, which I don't know if it's headquartered here in Palo Alto, but there's a building with Mongo around. It grew up here. I know that. It was established here, but it might be headquartered somewhere else. It's down over 20%. It's well off its lows, though. It's kind of intriguing because this is a sort of gap situation as well. If you look at this price gap right here, that was established way back in the day, back in August, we got pretty close to it. And so that has served as support and it's bouncing. And I imagine that you've got a very hard stop here with respect to resistance where the low was yesterday. So we're in this wide range now. How are we doing on time? Not bad. Nice to have an early start. I'll pick up the pace now because these are just various and sundry short positions. As I glance at my screen now, almost everything's in the red, some of them really nicely so. As with yesterday, it was juicier at the beginning of the day, but I try to get the big profits out where they're safe early on. So here's APLD, which is down nicely, 6.25% on that. It doesn't look that way. It looks like it's barely moving, but that weird price strength we had yesterday, I guess, has created that situation. So let's just mark that. Look at that. Look how nice that is. There's another price gap, which was, just a penny or two away, just tremendous. So yeah, 6.5% approximately down. ARM holdings, ARM, down about 2.5%, roughly. Etsy, ETSY, is down a little, about 0.25%, but I still really like this pattern. It hasn't truly broken down yet. It kind of teased us here and it's back in the pattern here, but it's still long-term pretty cool looking setup. This is a new one for me. I know this was a hot meme stock back here, but I don't think I've traded it before, but Open, OPEN, which is Open Door Technology, shorted this one. It's down over 3%. Palantir has been widely celebrated in recent days because it is being praised for its provision of intelligence for this war. It's up a little right now, but I will note that it's below really good-looking pattern there, very nice resistance. The pop we had yesterday and the continued strength today has merely pushed us back to the that neckline, or that just beneath what had been support, but what is now resistance. RKLB, Rocket Lab, is up a touch, I suppose, because ASTS was so strong. WDC, Western Digital, because we've talked about these storage companies like SNDK, like STX, This one has, for the first time since Liberation Day, broken its uptrend. It's out of the channel. And there's lots of stuff that just today, cracked their Liberation Day trend line. SMH comes to mind. The small caps, that is to say the Russell 2000. And those two are very, very tightly correlated. It seems they look almost identical for some reason. But yeah, today was kind of a victory to break that line at long last. Because yesterday it found support all over the place. Today we've got enough weakness to snap some of those lower. Here's a new one too. WRD. This is We Ride. And I'm short this, just like all these others. And this is down almost 6%. And I think you can see why. Let us highlight that distribution. And I stopped myself from saying top because the chart is at lifetime lows. There's nothing toppy about it. But in this is one of those situations where 0 is support. So it's still, although it's not at the top of the chart, it's still, I still call it a topping pattern, or let's call it a reversal pattern. AMD, the big semiconductor company here, off almost 4%. This has been making its way lower nicely. I shorted it on this pop here when Meta made their big announcement about gobbling up tens of billions of dollars of their chips. So that was alluring enough to jump in again. So that's been behaving itself. BDN, Brandywine. This is also down over 2%. And I think we've got, just 2 or 3 more of these. FUTU, that is Futu Holdings, is down over 3.25%. Very pretty pattern there. We've looked at this a bunch of times. Monroe, MNRO. This is also down almost 4%, and that's been being very well behaved for the past couple of weeks. And another semiconductor company, Micron, MU, has broken its symmetric triangle. So this is down over $30, over 7%. And that triangle is done. So another good thing. QUBT, I think, announced last night. I think they had their earnings last night. And they rallied strongly on that and then decided not to anymore. So they are actually down on the day over 8%. So that was my one kind of hand wringer last night because I'm short this. But yeah, it worked out great. It never rallied. And gosh, I got a lot of symbols today. And I'm out of time, even though I got extra time. Oh well. Royal Caribbean RCL, this is fighting back to some degree. But I covered part of that position yesterday, but I'm hanging on to it. And for the daring among you, I still think Axon's pretty interesting. We've rallied almost $200 on this in recent days, but I still think there's a tremendous amount of overhead supply there to take advantage of. And one big winner today amongst all these is Credo, CRDO. I puts on this bad boy, and it's down almost 15%. So that's terrific as well. So let's just close real quick with the spiders, SPY. We've talked about the range these have been in, and you will note that we did get just a little below that range today, and the bulls are like, and so they've been bidding it up. That's okay. We've got a little damage there, and just let's keep a close eye on that because, if some exogenous event takes place to thrust that lower and keep it below there, that's a pretty big deal. But that's the little exploration that the market did, and it's so deep that it's rallied back. So that's it for me. CrowdStrike is after the close today, their earnings, CRWD, no position, but definitely worth watching because that's one of the few interesting earnings plays this week. So see you tomorrow. Thanks for the extra time. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed.
Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome back. My name is Liz Deerking. That handsome devil to the right of me is Mr. Tony Batista. Thank you for joining me today.
Thank you so much for having me, Liz. I really do appreciate it.
I had to call you out of retirement for the last call. I was like, who can I call? You know why? Do you know why Jenny's not here today?
Is it her birthday today?
The big 5-0.
Wow. I didn't know if it was today or yesterday. I'm gonna have to text her before one of the other big guys does, so I don't get in trouble.
She's on an airplane home right now. They went to Florida for the weekend. So
that's awesome.
Yeah.
For the weekend.
It's Tuesday. Well, you know,
I'm looking at my fancy watch here. Do I have something wrong?
I mean, don't hate the player, hate the game. It's Liz and Jenny style weekend.
Understood. Do we have your platform up there?
We do. We have my platform up right now. What
Awesome.
a wild freaking day in the markets.
It really was. I mean, when you think about it, even the S&P's flirted with 6,700 this morning. Here, it ends up, the plunge protection team is alive and well. I will say that. This market is not going down without a big fight. I mean, we're down over 2% today, and you had just about everything going in the opposite direction. Gold and silver were lower. Oil was higher, one of the only ones that was higher, still higher, but not as high as it was when we left the show. We were selling oil at 77 and change. /CL is under 74 now. When we left the show, we were buying E-mini S&Ps at 67.40 on their way to 67.20. I mean, when we got off the show, we talked about how we're going to sit with our position for now, but you know, finger on the trigger to try to get out of these. We end up not going any lower, which made it a little bit easier. Volatility was unbelievable, almost 25 today on /VX. Volatility was bid all night last night. It never went down. It was up around, well, right about where it is right now. It was up around 3.5%, 4% all of last night, and then just zoomed volatility at 25, really coming down nicely to under 22 right now. And here we are, 68.36, 68.50 is kind of the mean where we've been hanging out. What is your take from being on the floor of the SIBO? I know you weren't there this week, but you've been on the floor of the SIBO.
And we'll be there tomorrow. Jenny and I will be back on the floor tomorrow. So we'll see.
Awesome. Well, volatility, when it gets like this, the guys have an opportunity, and there's usually some two-sided action, but we really haven't had two-sided action in the market. We've had huge swings in the market, but we haven't had that, I don't know, kind of markets like we were used to on the floor.
Right.
SPOs go up 20, 30 handles. They come down 15, 20 handles. They go back up 10 handles. They come back down, a trading, scalping market. This has really been a position market. And I know I'm taking over your time here. And
I love it. Keep going.
And I'll stop here for a moment. But when you look across the board here, a lot of the stocks that, I don't know, kind of got us here from the very beginning today are not really rallying that much. And I'm talking about NVIDIA.
Yeah, it's funny. I typed it in before you said it.
Yeah, down a little bit over $2 in Nvidia. Well, $2 right now. AVGO down around $5 or so, $4 and change here, but was significantly lower. You had quite a few other stocks too. I'll get to them right now. Google's down $3.50. I'm not going to throw Apple in there because Apple's been doing quite well. I mean, it's down $1, and it had a pretty tight market all day today. Really hasn't moved. But some of these other kind of I don't know, speculative stocks, the VRTs of the world, down almost $11, $12 today after being down significantly more. Tesla never got its wings underneath it, down $10 and change, now under $400. Tesla's one of the most widely traded product that our customers trade.
One of the most active traded today was Tesla and these options in these markets, which is crazy.
Yes, totally. A stock like AU, which I get a lot of emails about, a gold-related product there, down $13, $14. So there's a lot of things here that brought us to the promised land that have got hit today. And you had your Microsofts of the world, maybe even catch a little bit of a bid. Maybe they came for the pigs a little bit today. Some of the other ones like, I can't say Goldman Sachs up $1 is coming for the pigs.
No, you can't say that because look at this.
Goldman Sachs has been getting hit as of late. Palantir had a big day yesterday to the upside. It opened significantly lower, caught itself a nice bid here, only up $1, but significantly off its lows.
No, we've talked about this today. This is a defense stock, and I'd never played it as a defense stock. So that's the reason it got the big lift yesterday.
Yep.
I didn't mean to break your cadence, but this is, so what I find fascinating is, and I love that you're referencing when you got off the show, because you do a live show from 7:30 in the morning until our show starts at 10. And I'm going to guess when you log on at 7:30, that's not the first time you saw the markets, right? So where was the low when you woke up this morning?
We were down 90 handles when I woke, a little over 100 for a second, and then about 90 handles by the time I got to the office. So we've come back, let's just call it about, half of the move. And I actually like this action a lot better than yesterday's action. I actually, all things being equal, I actually thought we were going to have today's action yesterday. Like, I really thought we would have a flush out. I talked about it on the show. You're down over 2% in just about every indice. Russell down 3.5%.
Yeah, the Russell's really taking it on the chin. That's the one that was down. It couldn't get out of its own way today. And even that had come back a little bit. Russell's only down 1.5 when I saw it 3.5.
Right, only down 1.5 when it was down 3.5%. Now, I don't trade a lot of Russell. I traded the Qs for my option trades today. I sold a put spread in there.
I wanted to show you something because I feel like it's very important that we're all doing this. For those of you just joining us, you can just log right onto Tasty's YouTube and look at this. You're right here. Q's Chaos. There it is. If you want to click and see what Tony's referring to, his option trades today, there it is.
Yep. I sold a put spread in there for down near the lows. Now, it just so happened that around 10 o'clock when I put that on, we were near the lows, but that was my thinking all along throughout the day. Did it in a small defined risk way, $20 wide put spread.
I got to check your work because I heard that you have your own little box now. Is this true?
It didn't populate today. I wish it did. Yeah, we teased everybody with my skinny picture. I have a fat picture with my son, and then I have a skinny picture on there just by myself. So as time goes by, I get a little bit skinnier. Maybe
oh my goodness, that's so funny.
Yeah. But today was a day that really tested, I think, a lot of players. And I think when people look at their accounts, not just their trading accounts, like when they look at their overall accounts, their 401ks, which I think a lot of people will start to do when you get this kind of, market action here where we're not going in one direction straight up, where it's easy to look at your account. It's hard to take a quick look at what you have now. I think people are going to see, with basically the market unchanged, I don't think they're going to like what they see in a lot of their 401ks and other places. So,
well, and I'm glad you brought that up because, given what's going on in the news, not even if they're looking at their statements, but given what's going on in the news might force people to open up and look at their 401ks. So on our show, we like to call people that aren't traders the Gen Pop. And when the Gen Pop opens it up, they're going to be surprised at what they see because it's not a straight up market.
No, it's not a straight up market, and it's violently unchanged these days, right? I mean, really kind of going nowhere. We've had a big, huge, channel here from 7,000 on the ES down to about 67.50. I'll throw out the low today. So you got about 7,000 to 67.50, and here we are at 68. And change, the low end of this kind of big range for all year long. I mean, I believe we started the year.
I'm right on it. I'm on where we started. Hold on, there's January 2nd. So we started the year a little bit higher than right now. So we've come down a bit, but we're basically just
we're 80, 90, 100 handles off of unchanged for the year. But yet, what I'm trying to get to is I think 401ks and others are going to have a little bit of. They're not going to be happy with what they see. And that'll be the true telling if we get any kind of rotation or people looking to sell, assets because they don't like what they see.
I agree. Now I'm going to do a little bit shameless plug for mine too, because here was my market movers that I did today. And I did something today. So I talked about, and I think you're going to get this, Tony, and I asked TP, but I have all confidence in you. So I was a child of the 80s. Born in the 70s, raised in the 80s. I owned video stores in the 80s. So I started my market movers with saying, fear does not exist in this dojo, does it? What movie is that from?
Oh, no, I don't know it. I do not know it. You got me. You totally got me.
Okay, well, it's Karate Kid. And my whole point behind this was, in this market, when I opened it up and I looked at my account, it was almost like the feels like temperature for a temperature. It's like it's 60 degrees outside, but it feels like negative 30. It felt worse than it was. And then I was like, situation normal. Take a look at this chart. We've really gone, to your point, we've really not gone that far.
No, we haven't, but we've had some big moves and some big moves in stocks. I mean, we've been talking about this all the time, the Mag 7s not cooperating, not participating with the up move that we had in the market as of late this year. The rest of the market has held its head up. And now I think the rest of the market is kind of, not losing steam, but certainly taking a breather here. And you're going to need those Mag 7, those Mag 10 if you're trading or looking at the new product from the
SIBO. Yes, we filmed live from the pit of the SIBO in there one day.
Yes. You're going to need those. You're going to need those to overperform for this market. You saw EWZ if you take a look at Korea today, and I think that's what this whole move was all about. How you had not EWZ, EWY, right?
Yeah.
Sorry, EWY. I apologize.
I want to make sure that we're just listening.
When you look at EWY here, I think that was the big kind of catalyst to today's move. And I thought it was a little bit exaggerated. I didn't think we would go down 2%. If not now, when was how I kind of left the show when we got off the show. If you can't play for a pop down 2%, what are you doing here? I think it's a lot harder to buy them here right now on the close than it was when we were trading, 67.40 where, we started buying them. And you've kind of lost oil a little bit here, although it's $73 and change. I don't know if oil's done moving. You put a little bit of a damper in the metals, though. Gold and silver down, 6% and 3% respectfully. I think you got, maybe a little bit of I don't know. My son was trying to nibble long on gold. I don't think we ever got filled.
I scalped SLV today on the low. So I scalped it, bought the low, got out of it because Jenny is going to kill me if she sees us long silver in the trading account. So it's her birthday. I figured I would scalp it real quick, give her a little bit and then come back there. I don't know if you've noticed this or not, Tony, and I want to ask your opinion because I do like the timing of things. Like you trade in the morning. I look at it all day long too. And I'm not saying that I don't, but when we're doing our live show from 10 to 11, Jenny and I notice a lot. And TP and I were talking about this yesterday. We will reverse during our show specifically because the European markets close. So
I don't know if it's because of that, but it's irrelevant what the reason is. Like, I never know what the reason is. Like, I don't know why my wife loves me. You know what I mean? But I deal with it. You know what I mean? I'm happy with it. I'm glad that's the way it is. I don't want to know what the reason is, to be quite honest with you. But didn't Jajun back in the day do a little
the Jajun? Okay, so the Jajun study, which we actually retrofitted to fit into the hour of our show, it's actually during your show. So
is it really? Okay.
It is. Between 9 and 10 a.m. Central Standard Time, there are more 5-minute up bars than there are 5-minute down bars. And so that was the crux behind. He didn't come up with the trade. We just came up with you wrap around the at the money SPX put spread, and when you make $50, you go Jajun.
That's fair enough. We'll have to bring that back for sure. What do you think about volatility today? Flirting with 25. Do you think, with all the news and everything that's going on today in the market, do you think that 25 upside number holds for the short term here? And by short term, I mean for the rest of this March cycle.
So I think no conflicts are resolved right now. And you're going to have to wait until the guys after us to get any macroeconomics, but because these two fools are not macroeconomists. I'm sorry, Tony, I didn't mean to call you a fool. Yeah. But right now, as far as I know, watching the volatility, I think that we're going to be in some two-way action. I think yesterday and today could be kind of pretty typical markets. I mean, the other way could happen too, where we open up huge and then come down to a normal level. So I don't know. I think the volatility is going to keep its wings up for a while.
Well, I think if the next time you see volatility at 25 or 26, then the market's going to be down 4% and not 2% the way it was today. I think every time volatility goes back to its lofty numbers, it needs more of a catalyst to get there. And the only way it can get there is if the market is significantly weaker than it is. So I hope we get two-sided action the way we have. I hope we stay in this big channel that we're in. I think it's an easier call to say we're going to go under this 6,700 than over 6,900. And for that reason, I think you see 69 before you see 67. I don't know if we go anywhere, but that's what I'm thinking. I don't know.
I don't disagree with you. And I got to give TP props because he called the close today saying we're going to be down only about 50 or 60. So I got to give him props because it looks
good job out of him. He's right there. Yeah.
But he always says this is better be lucky than smart. But yes, so I kind of agree with you. I think we're not going to go too far, but we do have the increased volatility kind of across the board. So I want to caution people because I sometimes will look at this being like, this is an opportunity. I want to take advantage of this high volatility and put some positions on, but I still need to, I'm going to close my positions a lot faster and redeploy capital a lot faster in this market. I'm going to be a little bit more nimble and agile with the volatility as high as it is right now. I don't know if you guys will probably trade the same way. There's a little bit more scalping and a little bit more, I'm going to close things quicker than I normally would. Selling premium, it's hard though when the vol keeps its wings up.
Sure. Before our show was over today, I took a look at the S&P 500 just as one of the lists. You have the high option volume list. You got the NASDAQ list. I just looked at the S&P 500, just all the names of them in a watch list is what I'm talking about, Liz. And there were about 8 stocks of the S&P 500 that were green on the day. Change that to S&P 500. If you go down to
no.
Market indicators.
Market indices, yes, and then
and go all the way down to the bottom where it says S&P 500.
There we go.
There you go. And if you click on the net change,
and then I'm going to go, well, let's see what's green. We've got a lot more than 7 right now.
Sure. So all I'm trying to say here is you had 6 or 7 stocks, of which S&P 500 stocks of names I did not know what they were. I mean, there were 1 or 2 oil-related stocks, but that was about it. And now you have a much broader, almost 50-50 up and down on the E-mini S&Ps. And if you look at even the stocks that are down, you still get your Sandisk, which is down 50 points. You got your Caterpillar, which is down 30 points. And that's why the market is lower today, AMAT in the 20s. But you got a lot more stocks in the S&P 500 that have had a nice little rebound here off of their lows, even the stocks that I mentioned just a moment ago. I don't know. So for that reason, the big spike in volatility, the absence of two-sided action intraday, man, it really feels heavy to me, the market. And for that reason, with volatility contracting the way it is, I really think it's like a reverse Jones. I really think, you see 69.20, we're at 68.20 right now. I think you see 69.20 before you see the lows again at 67.20.
What about the 7,000 people that were screaming from the rafters? 7,000 is a given. Do you think that's too high?
Man, with all the, listen, I know the Iran war is getting all the talk right now, but we still have thousands of people dying every day in the Ukraine. And it's been going on for 3 or 4 years now. Yeah. You certainly don't want that going on in Iran. And I don't think it has that kind of makeup to it anyway, because we're not Russia, we're the United States. And it seems like we take care of business a lot easier than Russia takes care of business, if that's trying to compare the two. I'm getting morbid here, so I'm going to stop for a quick second. But I think there's just too much going on in the world, even though war is typically bullish long run, for us to see 7,000 in March again, even though the implied volatility would tell you we can get there. I think we have this fear up and down movement just a lot wider than people think. Probably, 65.50 to 69.50. I think we're higher. We're higher to the highs, but I think we go higher first than we are the lows. I think
it's interesting, just kind of because you and I have been doing this for a long time. I just changed this to delta, and I went to the end of the March 31st. Yeah. So the probability of us getting up or touching 7,000 at some point in the next 28 days, you double the delta, is going to be over 50. So. Yeah, because
the expected move is that great, with volatility being that great, and I get it. And it's up or down. What's the downside?
No, that's what I'm saying. Well, I just picked the 7,000 number, so it's the same thing. So if we, getting all the way down,
go to 6,600. What's 6,600? That would be
6,600. It's the same thing. You've got almost a 60% chance, just under.
Right. That's exactly what I'm talking about. So what I'm saying is that we're 68.20. I think we get to 69.20 before we get to 67.20, but I don't think we go any higher than the 69 handle and change. So I think we're closer to the highs, and I think we could see new lows in the 66 handle. That's my take. As of right now, though, after this volatility spike, I don't think they can get that volatility back up to the 24, 25 handle, even with everything that's going on around the world. And maybe we catch a small little bid here for another 50, 60 handles in the EME S&Ps, get back to where we were yesterday, and then it's, I don't know. Then
it's anybody's game.
Then I'm nervous.
Yeah. Okay, so I'm gonna, only because this is last call, we recap what happened in the day, and we actually look at earnings trades. On a day like today, I don't know that
crowd search is really the only thing that you got, and it doesn't have.
Yeah, I pulled it up from Bob's list. He's great. He sends it to us. Bets things. Bob on Fire is amazing, and he's got CrowdStrike, GetLab, and Abercrombie and Finch. On a day like today, I don't even know if I'm going to look at those. I will be looking tomorrow. You mentioned AVGO when we were talking today. AVGO has earnings tomorrow, and so does JD. So those are two of my not bigger positions, but positions that I maintain in my account. So I will be looking at it tomorrow. But today, CrowdStrike, GetLab, and Abercrombie and Finch, I really have no desire to trade any of those.
I don't have any desire to trade them either. And with everything that you have moving in this market today, why you want to look at earnings, unless you have a hell-bent market call on it, either bullish or bearish, I don't see why you trade anyone.
Okay, but a good plug, because if you do have a hell-bent bullish or bearish call, tomorrow Tony Batista and his son are going to trade it. And what's your assumption?
You are correct. What's your assumption will be a good one tomorrow. That's for sure.
Yes. So send him all your crazy assumptions and watch how they can make them come to fruition, because that's a good segment. So please, I think Josh can pull up the art card of where it's supposed to go, because I actually don't know the name of where it's supposed to go. tastylive.com/ there we go.
There we go.
tastylive.com /assumption. Fill it out. Liquid products, please. That's the one thing. It's very challenging as a trader when they send us something so obscure that's not liquid.
E-mini S&Ps last week have had an expected move for the day around on the low end 35-ish or so, and on the high end around 50-ish or so. It's going to show you 60 right now for the 1 day E-mini S&Ps, which would be March 4th. Tomorrow being March 4th. Doesn't that seem relatively low to you when you look at
What's going on? It seems insanely low to me.
So do they have it wrong?
No, they never have it wrong.
Okay,
I mean, every time I think I'm going to
so you're making the point I'm trying to make here. So I can think whatever I want to think. You can think whatever you want to think. The world can think what they want to think. But when I say, you're looking at, for a week here of expected moves, and I'm just going to go from a calendar week, I'm just going to go 5 days away to March 10th. You got a 150 handle expected move in the next week. So both my numbers are inside the expected move. So I'm not saying anything profound here.
We had that today.
It is wild. Yes, almost. Yes.
We had that today, and you know what? You guys do that segment that Kai does, where it's it's the weekly recap, and he'll give you what the move for the SPX was for the week in the past week, and it's eerily accurate. So you get wild swings intraday, but they're looking at it for the week, right? So then all of a sudden, sometimes things normalize. This too shall pass. So I don't know. It'll be an interesting week to watch. I think there is opportunity abound. Today was not what I expected. I expected us to stay down a little bit more than this. I mean, we're limping into the close with SPUs down only 64. So I just want to look at it from percentages because that's what the regular people do. We're under 1% in the E-mini S&Ps.
Yeah. But you're almost 2% in the Russell on the downside.
That is true.
I will say this, and I said it early on the show, like you got rid of some of the meme kind of futures that I don't, have a good handle on. Gold and silver. Those were two that were kind of parabolic, acting kind of unnatural to me. Gold, silver, oil acted unnatural to me earlier today. That's why we decided to trade it from the short side. We did that on split decisions that you could see there on YouTube too. So things that kind of go, why is it acting like this? Usually to me seems like it's getting too frothy to one side or the other. Now, we had 1 million E-mini S&Ps trade before 9:30 or right around 9:30 Central Standard Time. We have a little over 2 million for the rest of the day. So we had first hour of trading, we had 1 million E-mini S&Ps trading. For the rest of the day, you had a little over 1 million E-mini S&Ps trading on an up move. Do you find that good, bad, indifferent, doesn't matter to you?
Well, I don't think it matters, and I couldn't make anything out of it if I wanted to. But that to me says people see the market, they see that the spike down lower, and they are reacting. So sometimes I think as a trader, it's better to sit. We're small fries though. So there's a lot of big institutional trades out there that have to react. But me, when I open up my account this morning, I actually said to myself, wait, hold, just hold, because panic selling or panic buying or panic adjusting is not necessarily the way that I like to trade in my own account. So
I was out 20 some odd handles on E-mini S&Ps, and I wasn't saying hold. I was praying at that point. Okay, so it's all perspective at that point.
And there is the bell, and guess who's coming in immediately after us, which I think is going to have a huge following today. Our in-house macroeconomists, and I can't wait to see how they break it down. Chris did a great job on your show today too.
He did do a good job on the show today. He was a little pessimistic. He was a little bit bearish. I would almost like to join him on the show because there was only one of us that was kind of saying, I'm buying the dip here. And he's usually the dip buyer. I don't know. He was a little scared.
Did you take his temperature?
He's recovered, okay?
Did you take his temperature? Was he feeling okay? Because Chris is usually very optimistic.
He does have a lot of snow in New York, so it might have a bearing on that. You might be right.
All right, well, Tony, I cannot thank you enough for joining me.
Thank you, Liz, for having me. I appreciate it.
Very fun day. Your enthusiasm is duly noted, and I appreciate it. So everybody out there, stay tuned. The next show is very, very good. Chris and Elliot are two of my favorites. And Tony, thank you. Have a wonderful night.
You got to love these markets, right? I mean, you really have to love these markets when they're like this.
I do. I love every minute of it.
Awesome.
All right, we'll see you tomorrow.
Thank you.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
The Carter Doctrine is back. It's Tuesday, March 3rd, 2026. This is, well, overtime. I'm your host, Chris Vecchio in New York, Elias Spivak's in San Francisco. We're here for the rest of these 30 minutes as we wind down the trading session. And another remarkable trading session. Painful for people like myself who may just be a little too long gold and silver on days like today. Otherwise, though, stocks which do leak lower ultimately find some reason to rebound in the second half of the day. And it's not just a stock rebound and a volatility compression, but it's likewise that move lower in oil prices, which start around, we'll call it 11:40 a.m. Eastern time, that allows for broader markets to find a little bit of stability here as the day goes on. Ilya, oil prices are up, stocks are down, vol has inched higher here. Bond yields have bounced back and forth. Bonds were much weaker on the session, resolve a little bit, not so low on the day. The dollar continues to scream higher here. Let's talk about this potential catalyst for why the market turned around today, however, because this morning, Reuters reported that we got word from President Trump that the administration was considering backstopping basically the maritime industry that goes through the Strait of Hormuz. And in doing so, he said, quote, "Let our position be absolutely clear. An attempt by any outside force to gain control of the Persian Gulf region will be regarded as an assault on the vital interests of the United States of America, and such an assault will be repelled by any means necessary, including military force," end quote. And, oh no, wait, that was Jimmy Carter in 1980 in his State of the Union address, which famously became known as the Carter Doctrine. Jimmy Carter of the variety who had to sell his peanut farm to avoid conflicts of interest, certainly unlike a president launching a crypto endeavor the day before he's sworn in. But nevertheless,
now a crypto billionaire.
Donald Trump invoking the ghost of Jimmy Carter to a certain extent, Ilya. Is this the end of the Hormuz crisis?
I don't think so. I don't think that we can take these kinds of pronouncements at face value, largely because we are already doing all the things that we need to be doing in that area to make good on those kinds of promises. In other words, if we were going to say that we are going to be in a position to guarantee safe passage through Hormuz, what would we be doing? well, short of not having attacked Iran to begin with, we would be doing what we're doing now, which is beating them back such that we can establish military dominance over the region, or certainly over that part of the maritime passage. So is this news, is what I'm trying to say. Well, no, we're not doing anything different. This is just somebody saying a thing. But also, does it really change the bottom line? No, because even before the U.S. engaged with Iran over this weekend, we've had crude oil prices that were rising since the beginning of the year. So this war is an accelerant. It's not a trend definer. So no, I don't think this is an issue that's going away. At least it isn't going away faster than our military action in the region. That has to work in order for this to go away.
Does our military action need to work for this to go away? Let's just say tomorrow, hypothetically, Trump gets to the podium and says, we've accomplished our objectives. We killed Ilya's Twitter friend, the Ayatollah, and only Ilya's friend, the Ayatollah, let the record show. And, we're pulling back all the troops. Time for everyone to come home. It's St. Patrick's Day soon, and everyone's got to be home to enjoy their corned beef and cabbage.
And we're running out of ammo. What?
Well, ammo's weeks from now. Let's say just tomorrow.
Yeah.
Does Iran stop firing missiles at tankers transiting the Strait of Hormuz?
Absolutely not.
Realistically, you think that the Gulf states then just allow Iran to keep shooting missiles at the carriers, the tankers that are leaving their docks?
Well, this is exactly the point here, right? Is you need to establish a monopoly on the use of force in the Persian Gulf. You don't have that. You don't get to say, we will guarantee the passage of XYZ paper boat through the Strait of Hormuz unless you have a monopoly on the use of force in that area. Otherwise, insurers are just not going to insure the boats. And if you wanted to insure the boats, how are you going to insure them? With U.S. taxpayer money?
Yes.
No.
Yes. What else was I going to use? Yes. Yeah. That's what the Board of Peace is for. Why else does
then when you don't have the monopoly on the use of force and you lose one of the boats and the taxpayer is on the hook and you got to go into the midterms with that, the math starts to get ugly.
Sure, but this is a material development on the day, and it clips oil's wings. And if it ultimately is the kind of development that permits oil to continue to flow through the strait, it avoids what's probably the worst case scenario for the region, which is having done the research last night over the course of the day today, it appears that industry estimates are around a consensus that you only have 25 to 30 days of supply capacity to build up in the Gulf region. That's accounting for onshore storage and the 50 million barrels of floating storage that's currently available in the Asia corridor. And so after that 25 to 30-day window, a lot of these wells start to get shut in. And given the age of some of these wells, it's not just like, again, flipping a switch, turning on and off the water at your faucet. It could be days, weeks, months before the wells could even be turned back on again. So a production disruption 3-4 weeks out from now is really what the market is starting to clam up about. And when you get news like a Qatari LNG facility is hit and shut down, and you have UAE or various other countries' facilities who are now not even on the northern side of the Strait of Hormuz, they're south of it, and their facilities are starting to get hit, the scope and scale of infrastructure and supply shock begins to spread. But if the U.S. is putting assets into the region, Ilya, and as you noted, the collective we, kind of like when I say the Mets win, we win. Mm-hmm. I'm certainly not on the front lines. But if the United States were to establish that monopoly on force, which was a pretty cute way of saying a monopoly on violence,
yes,
then the spice will continue to flow, and then the shut-in scenario that the market has been discounting, perhaps over the past 2 days, that risk is clipped. And that is a totally different economic can of worms for the market to price in than what we were fearing perhaps at the earliest points today. It doesn't mean we're out of the woods by any stretch of the imagination, but it does take something significant, reduce the probabilities of it to allow a breather here across today's session.
Well, and I think this is really the key here, that when you consider what you're looking at, okay, let's say you do establish a monopoly on the use of force in the strait, and you ensure safe passage of ships. Do you have an off-ramp for what is the immediate holy moly moment here? Okay, maybe. Do you have a change in trend that's been going on since the beginning of the year, well before you had a attack on Iran? No.
Not really in anything, by the way. Not in oil.
Not
going
in
up,
anything.
Not in stocks grinding sideways. Which, I mean,
exactly.
We are higher than we are closing today at the same level we opened at. Yes, we opened up at 68.20. We're currently at 68.20 right now.
Which just tells you this is, you can't extrapolate anything here. You would be hard pressed. And so it doesn't change the game, broadly speaking, on what is, in my mind, the much more important narrative. If you get stickier oil prices, then what you end up with is an inflation risk. And I think that's why gold looks the way it looks, and bonds looked the way that they looked, and the dollar looks the way that it looks. It's holding its breakout. We're looking at, I think, the market's recalibrating this thinking.
For today's show. So I went back to 1979 when the Shah fell. I went through Wikipedia, looked up every instance in which the Strait of Hormuz was set off in the news, seeing if this is an event that causes a little bit of an oil disruption or fear. Starting in 2004 with the data available using Google Trends, I was able to use Hormuz or Strait of Hormuz or Ron Hormuz to find when we saw bumps in news flow regarding this as a potential risk. And so I looked at the various dates for these events. And so I also then took the, thank you, TradingView, data from TradingView on oil, the S&P 500, gold, and then US GDP and US inflation in the periods following these shocks to kind of get a very basic model to figure out what kind of price changes we could be looking at here. And so with respect to what you're saying about inflation, energy contributes roughly 10% of the basket. And so if oil rises, let's just say 25%, the energy component rises 25% times 0.1, a 2.5% contribution, which adjusted for pass-through lag and weighting, as we've seen historically, net CPI impact would be plus 0.5% up to 1.5% over 2 to 4 months. So we'd be looking at headline CPI here going from 2.5% or 3% up to 3 to maybe 4.5% range.
And you begin to see the impact usually with about a month's lag. It takes some time for the full effect to work its way in, but typically, this is not a perfect science, but you get a move in oil, and about a month later, that move starts to appear in CPI. Those tend to be where the turning points line up.
You mentioned GDP. Oil shock on GDP is negative 0.03 to negative 0.05 per 10% oil rise per quarter. And so that means you're looking at minus 0.3% to minus 0.8% annualized. That is growth down, inflation up if this persists and there's a material. The concern about the significant supply disruption continues, which leaves the Fed in not much of a good place right now.
No, not a good place at all.
They typically look through energy shocks, which brings about one of my favorite things we're about to see in financial media. All those folks in 2022, Ilya, who were saying that inflation was transitory, and then all the other people who are saying, no, it's not. You're saying it's transitory for political reasons. I have a feeling they're going to be flipping roles real quick.
Yes. Yes.
Where they're going to be
Incidentally,
people who-
I was one of the people screaming it wasn't transitory. And it was because all you had to do was read the University of Michigan Consumer Confidence Report and go, are consumers changing their behavior? Yes. Yes, they are.
They are.
And that was it.
Yes. You were earlier on that than I was. I was on team transitory for a while longer than you. And then ultimately, changed my mind. But that's what people do when they get new information.
I mean, that's what you're supposed to do.
But why were team transitory? Because the Fed's literature and their research says to avoid.
That's right.
Changing policy based on what they perceive to be temporary inflation shocks. And COVID was temporary. The Russian invasion of Ukraine made it not so temporary, compounded the problem. So then the question is, does the Fed look through the inflation shock to ultimately provide support for the economy vis-a-vis rate cuts throughout this potential episode? Right now, if we look to the market to see where the pricing is, you do get a rebound over the course of the day here, Ilya. So it kind of goes to show that oil is in the driver's seat right now, and the inflation impact here is more important than the growth impact. Because if you're worried about the growth impact that higher oil prices present, then higher oil prices rate cut odds up. But in this case, we see that as oil comes in and the inflation concerns subside and the growth concerns subside, rate cut odds actually go up. So everything's pivoting around this inflation inflation issue right now, plain and simple. We don't need to look much further than that.
Yes. Yeah. I mean, I think that's absolutely clear that what we're looking at here is very much the same narrative that we've been talking about really for the better part of a year. It's a Fed rate cut narrative. And a wrench has been thrown in the works. And that wrench is crude oil. But when we look at really what was the baseline going into this year, we're going to get these cuts. The Fed is going to come around. There's a glut in oil. That's not a concern. We're going to see the tariffs rebase out of the calculations, which, by the way, they're doing until all of this. So far, so good. The Fed's been right about that. Goods inflation has, in fact, formed something like a plateau in recent months and has, in fact, started to come in. So far, so good. The Fed's right. Except now you have this left field development because everybody's expectation for an oil glut was wrong. And it's not that it was wrong because they're bad analysts or they were looking at incorrect data. The events changed. And this is not an oil glut kind of an environment. This is a China needs to find how in the world they are going to get their oil. Because, by the way, never mind the fact that the capturing of shadow tanker fleet vessels and instability in Iran before we struck and our decapitating of the regime in Venezuela was hampering supplies that were below market rate, sanctions busting supplies. Well, now we've shut the Strait of Hormuz with what we're doing. So China can't even get backup supplies from the likes of anybody in the Gulf, Saudi, Iraq. What do they have? Brazil, Guyana, Mexico. The big suppliers where they tend to get most of their oil, something like 4/10 of China's oil is Hormuz. So where are they supposed to get it now? So this complicates the situation. This is an oil story that's not going to go away. And it's ultimately a Fed and a rate cut story when you boil it down.
Yeah, I bring up FXI here, the Chinese index for our consumption on the screen. It's up 1.9% off the low today, in line with when oil peaks and you ultimately see U.S. equity markets bottom out. Volatility starts its trek lower over the course of the session, and it hasn't come in fully just yet. We do see a rebound here, not so immaterial over the second half of the trading day, right? Maybe that bounce from 2140 up to about 2215. We are settling in again a little bit lower than maybe the bears would have liked. No one walks away happy. We're closing below, just like we did yesterday, closing below the prior day high. Ilya, that doesn't mean the move up is over, but
right,
you're not seeing a lot of desire once Europe closes. Once Asia closes, Europe closes, U.S. traders are able to start picking up the pieces a little bit, and that was certainly the case today.
Yeah. I mean,
is today a washout? I'm asking just in terms of sentiment here. I know it can get worse, but given the headlines that we saw, I woke up this morning and I was surprised to see an email come in from you after I woke up.
Yeah. I was.
You saw the headlines overnight.
I was watching. I was riveted, and so needless to say, I am running on almost no sleep at all. But hey, it's an interesting world out there. So I'm looking at this and going, well, you know what? The one thing that maybe made a move today, and maybe did something, is gold.
You are having a nice time.
So on the daily chart, it looks like this holds. And let me preface this by saying I remain structurally bullish. But when you look at a 4-hour chart, it sure looks like you broke something here today.
Well,
it sure looks like you might be grinding through some sort of a range support here. Now, maybe not. I will be rapidly getting back long. This move today basically took me to break even. I was up a good 4 or 5% of equity on this position, and the move took me to break even because of my mantra this year, not to just exit positions, but to flip them over when they invalidate. I am now a little bit short, but I will be long in a heartbeat, and I'm doing it through futures so that I can do it after hours because I'm structurally bullish. But if we're going to be talking about the Fed having to basically tell everybody you thought you were getting cuts and now you're not getting any, this is not going to be an easy adjustment for gold as a nearer term thing.
You spell paper hands in Russian. Sorry, unrelated to what I'm talking about.
It doesn't make sense in Russian. Alas.
Silver has an uptrend.
I could share with you an analog, but this is a family show in Russian.
January, February swing lows holding up right now, producing an early March swing low. I'm keeping it simple here, Ilya, for myself, because I don't want to do too much thinking here when the charts look like this. When we are in a market that is giving us, let's give a little bit more space there. Let's go 50. There we go. Okay. We're going to keep this real simple because I need to keep things real simple in these kind of markets so I don't overthink and get away from my primary goal, which is capital preservation. If we are back above, we'll call it 87 tomorrow, I'm going to be feeling better about things. If I find this below 79.5, time to get off the silver ship. And you mentioned gold already giving way.
Maybe.
It's, I always tell you, horizontal support matters more than diagonals. There's no so subjective.
Right. That is what you always say. I will point out that the congestion we're looking at preceding this breakdown was taken out on the 4-hour chart today with a close.
Yes.
With a close. And I don't like that. I don't like it one bit. I especially don't like it when it makes sense because yields were doing what they were doing and the dollar was doing what it was doing. Well, not happy.
I'm not happy. I didn't flip like you. Maybe I need to have paper hands in gold. What I did do today, though, is looking at copper because copper here has a meaningful pullback as well. If this whole notion that global growth isn't going to be materially negatively impacted. It's going to deal with a spike in oil and come back in. China is not going to be so negatively impacted, Ilya, right? They are the world's largest consumer of copper here. So CPR has a 62.5 IVR at 55 days to expiration. On the other side of that 25 to 30-day window in which storages could potentially fill, and then you mentioned munitions, that is a part of the analysis where a lot of experts are saying, given current production run rates, unless the Defense Production Act is invoked, then we can't really sustain a significant war effort at the current pace. We could always slow the pace down, right? But at the current pace that we've had for the past 4 days, we wouldn't be able to sustain that for more than, again, a 21 to 27 day window. So that's why 24 to 27, like 3-4 weeks, that's really when the conflict would run. So I'm thinking about vol on the other side of that, Ilya. 55 days is still more than 27. Here, 5-6-5-5 put spread to take advantage of the vol. 60% probability of profit, risking 3 to make 2. It's a little bit better than the 2-to-1 that we were looking at earlier. So I think we have to take our shots where we can get them, which is also why with the Russell here today, thinking again about those expiration windows, that's the bad one. Here's the good one at 45 DTE, 2,500, 2,550, looking at short put spread. Why? We held the 50-day moving average for another session. I'm just going to take a stab that today's low is a washout low that we can trade around for a little while.
Could be.
Just could be. Some minor bets, not thrilled with everything in the price action, licking my wounds. Aside from doing the Benedict Arnold in gold on May, what else do you find yourself looking at tomorrow? Keeping in mind, very fluid, where we reserve the right to change our minds at any given moment, considering the news flow.
Absolutely. So similarly to that, I flipped over my Aussie dollar position. I was long. I am now a little bit short. I got out of the bonds because they looked like they were going the wrong way. Thankfully, I waited a good long time over the course of the day, so I managed to get out not at the lows, but already on the way back higher. And again, I'm still bullish on the bonds. For me, these were tactical adjustments, basically looking to get past whatever this kicking up of the collective dust is and letting the markets kind of wash out and consider. I did something today that I thought was very fortuitous, which was I got an opportunity to reload on Brazil. I got out of Brazil on Monday. And it's because it felt like it was going to be heavy. It felt like it had a good run. It felt like the momentum was fading. And boy, was it good timing. Because today, EWZ got shellacked. But it also then came back. So I've extended my duration and I'm back long.
Oh, yeah, I think the pronunciation is Bumaznia Ruki. Paper hands.
Ruki, but there you go.
With that, overtime's out of time for this Tuesday, March 3rd. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm Chris. We're eating hot dogs tonight. Sorry, family. Vecchio, good luck trading. See you on the other side. Ilya's back with Macro Money after this.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before, and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Another day, another blistering seesaw for the financial markets. Well, they're really struggling to figure out where they're going, but we're going to try to do our best to get a sense after what was another headline-driven day and really ask what is increasingly, at least to me, sounding like the big question to be considering. This is Macro Money, of course. I'm Ilya Spivak, head of global macro here at tastylive. And that question that we want to get an answer to is, what do markets really fear here? Is it the war after the US and Israel struck Iran and kicked off the conflict that we're now watching with bated breath? Or is it its inflationary consequence? So let's consider the evidence here and figure out what this actually is. Because if this is a story about war, well, then we find an off-ramp to the war and maybe the thing ends up being something like a flash in the pan concern. Maybe this is one of those fade geopolitical risk types of opportunities. But if it's about more than that, well, then we're looking at a different kind of situation. So as far as the S&P is concerned, we can see the markets tried to break lower today, tried to get under that range support, but ultimately got pushed back into the middle of consolidation. So risk sentiment ends up without a decisive break. Of course, yesterday's rally off the gap that was after the weekly open with war in the headlines, that doesn't get follow through either. So if yesterday you took our cue here on Macro Money and said, just because the markets are rallying to erase the gap, that does not mean the story's over. Well, today you learned it was not over indeed. But likewise, if you were getting bared up here as we got through this support. Well, that wasn't correct either. So for now, we continue to consolidate as far as overall risk sentiment is concerned. Probably the big standout on the day is the big sell-off in gold. And that's where things get really interesting. And when we start to talk about, well, maybe this is not just about war headlines as such. Typically, gold does well in periods where geopolitics gets shaky and investors start to want some sort of a non-sovereign way to store value and to move value, whereby they're not so confident perhaps in fiat and much more importantly, the fiat systems tied as they are to government action and government prerogatives in a time of war, where those government systems might get weaponized. Witness what's happened with the weaponization of the U.S. banking system in the contest between the U.S. and China, where Huawei basically became persona non grata, or company non grata, I should say, I suppose, for the U.S. banking system, and effectively cut Huawei off. So we normally see gold thrive in this kind of an environment because it's pointedly a non-sovereign value vehicle and doesn't necessarily adhere to those kinds of limitations. And yet it is sharply lower here today. In fact, looking at shorter term charts, you might even surmise that there's a lasting break here, although it's maybe a bit tentative as we test former resistance become support. In tandem with this move in gold, you likewise get a run up in interest rates. This is the 10-year note here. We can see it moved sharply lower today. Of course, by the end of the day, again, we recoil back and end up in the middle of the range again. But the thrust here in the wake of everything that we're seeing was lower gold, lower bonds, therefore higher yields. And one spot where that dynamic still very much appears in force is the US dollar, which for a second day now shot sharply higher. Again, it didn't quite hold this attempted break through that swing high from earlier in the year in DXY, the US dollar index. But nevertheless, this looks like a critical level has been overcome and looks like there's room for at least more exploration on the upside. Now, what does it mean that stocks, let's say, are biased lower here today? They do close down after all. We don't get the decisive trend break, as we said, but we ultimately end up with lower stocks, lower gold, lower bonds, and a higher dollar. What does that tell us altogether? Well, it seems like the markets are looking at the situation and saying, that's a loud crude oil rally we've got there. And that crude oil rally probably portends inflation if any of this is sticky. And if it's sticky, then we're probably not looking at an environment where the Federal Reserve is going to be in a position to cut rates anytime soon. What happens then? Well, a non-interest bearing asset like gold is hampered. Bonds go down because interest rates are baked out for something more elevated than previously thought. And the dollar gets a lift because, of course, owning a currency with interest rates shifting to a higher setting in the outlook is how classically interest rates and currencies are seen playing off against each other. A currency is a yield-bearing instrument. When interest rates for a given currency go up or are expected to be higher than they were before, that, of course, means that on the one hand, it's more expensive to borrow that currency, but on the other hand, it's more lucrative to lend it. And so people are encouraged to be holders of that currency and collect that yield. And so we're looking at this surge in crude oil. Obviously, the prior ranges that we had here, even since that shootout between Iran and Israel last year, are long since history after this breakout. And so shifting gears to a weekly chart here, we can see we've made a strong case for a break of the downtrend that's been with us since basically the latter half of 2023. And if that's the case here, if we're really going to make a lasting level change in crude oil, well, then indeed there is reason to be concerned about inflation. We've looked at before, there's about a month-long lag between when you get a move in crude oil and it shows up in CPI. Now, CPI is already north of the Fed's 2% target here. Here's that target. We're already hovering north of that. And if this is going to prove telling, well, then the next move higher here might well take the Fed into a more hawkish direction, which is, by the way, some place where they've already been steering. Of course, minutes from January's FOMC struck a hawkish tone. Everything we've heard from Fed officials commenting since then has been more hawkish. Even dyed-in-the-wool doves like Chris Waller, Governor Chris Waller, who has been advocating rate cuts since June of last year and all the way up until January of this year. Stephen Miran, who comes to the Fed from the White House with a mandate for rate cuts and a voracious appetite for them until just about now that he's resigned his White House position and is fully at the Fed. All of even their comments have started to shift to a less dovish direction. Meanwhile, the markets are only somewhat shifting. They are still calling for the better part of 2 rate cuts this year, 45 basis points on the menu, although notably, we are seeing a little bit less of an easing bias. We were firmly on the fully priced in side of 2 cuts even recently. Here was 50 basis points right here, just at the start of February and for most of that month. So now we've shed about 5 basis points of that. But now the timeline is starting to kick in. Market's saying, oh, well, we're not going to be in a position maybe to cut rates quite so aggressively as we wanted this year, but that just means we're going to have to do more next year. And so not surprisingly, the tally has been growing. This is not dissimilar from the dynamic we saw last year, where the markets thought the Fed needed to cut last year. And then when the Fed resisted and resisted and resisted going into the mid-year, what the markets did said, right, so you're not going to cut soon, but that means you're going to have to cut more later to catch up. And indeed, that seems to be the kind of logic starting to reappear here again. 19 basis points for next year, which is, of course, the much better than even odds now that we're going to get a further 25 basis point cut next year. So we're looking at 64 out of a full 75 basis points being baked in here. So in kind of very simple terms, we're looking at about an 85% chance here, give or take, that we are going to get 3 cuts between now and the end of next year. And that, of course, is still way more dovish than what the Fed has in mind by almost a full rate cut. Now, under the surface, we can see the markets have shifted their timing. The first rate cut now pushed out to July for this year. The second one all the way to December. Even as recently as last week, we were looking at June and September, maybe October as the timeline. Clearly, the markets have noticed what's going on here, but they still want these cuts. And so the next question will probably come, so much as we can benchmark around these war headlines, from a bit of economic data. At least that part is actually on the calendar and scheduled for a particular time. And that, of course, is the service sector ISM report. The Institute for Supply Management gave us a strong manufacturing PMI report earlier in the week. We're expecting a similar reading to last month's for the service sector. That, of course, the much more important part of the total here, because services are overwhelmingly the largest part of the U.S. economy by a long mile as compared to manufacturing. But the question here, probably less so about the pace of economic growth and more so about underlying inflation. What did we see in the manufacturing report? Well, certainly the pace of output and the pace of economic activity growth was welcome. In fact, we can see here for the past 2 months on the manufacturing side, we've had the strongest growth since about the middle of 2022. And of course, as ever, this works in the usual PMI logic, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so what we see here is, but for 1 month here in 2024 and just barely another one, although that looks more like a flat result, let's say generously, but for 2-3 months since 2022 and until the end of 2025, contraction was the name of the game for manufacturing. We had readings sub 50. The first 2 months of 2026 here, we've come storming back. We're well north of 50, and we have the strongest 2 months of growth since back here. However, the employment side of the equation continues to be in contractionary territory, that index sub 50. New orders jumped in January, but cooled off a little bit in February. But what did surge in February was prices. In fact, this is a blistering rise, unlike we've seen in months. And so the inflationary read-through here is really the main story. If we see anything like this start to appear in the service sector report, it won't really matter so much that it's relatively elevated when it comes to the pace of growth, and that, in fact, we're looking at some of the strongest economic activity growth that we've seen since mid-2024. The issue will be those rate cuts and whether they can happen in an inflationary environment before there is this oil shock, and certainly after. We can see here the S&P 500 has not budged since late October, when the Fed told markets that they were over-extrapolating rate cut expectations, and the story stopped getting more dovish. We are basically oscillating in that same area in a range ever since on cumulative policy expectations, though again, because of this war, more recently we've started to skew slightly lower. For its part, the S&P 500 wants no part of the upside, while these rate cuts appear to be in question. And of course, as we've talked about before, the reason the markets seem to want these rate cuts, despite the inflationary impetus, despite economic growth, which again, looking at the ISM numbers here, is hardly something to bemoan, it seems to be because of this lingering uncertainty on trade policy. As we can see here, looking at the World Trade Policy Uncertainty Index, there is more uncertainty now, even as we've come off the peak spike around Liberation Day last year. Just looking at the amount of volatility around the averages here for the overall index, there is much more volatility here than the first term for President Trump, and certainly miles more volatility than there was even during COVID, when the entire global economy and the entire global supply chain was basically on pause. Now, why is the market so worried about this volatility? Well, as we can see here, though the president said in his State of the Union that the tariffs were driving stocks to record highs, seems like maybe the story is a little bit older and has much more to do with outperformance in the tech sector. Of course, those of us that are market watchers are hardly surprised. The AI boom and the build out for it has been overwhelmingly the driver for equity markets, and we can clearly see that here. But of course, the survival of this narrative depends on the AI story continuing, and it's difficult to continue that story with a shaky global trade environment because the AI supply chain needs frictionless global trade. Close to a quarter of the entire supply chain is in Asia, and a little bit under that in Europe. And a lot of these, as we've talked about before, like lithography in the Netherlands, like chip making in Taiwan, a lot of these steps in this supply chain are single points of failure. There is nothing to replace them. So you need this supply chain to work in order for there to be an AI boom. And if the global supply chain is this level of shaky and policy is this uncertain, well, then that doesn't really help that which is the pillar upon which stock market sentiment rests. It certainly doesn't help that on top of all of these fast and furious headlines coming out of the Middle East, we, of course, also last week had the unraveling, 2 weeks ago now, the unraveling of the president's signature law on tariffs as the baseline for the regime. The Supreme Court saying that the president cannot use the international emergency that's implied in the IEPA Act, International Economic Emergency Powers Act, is what that stands for, that the president cannot invoke that to put a tariff on anybody for any reason, whenever. And then, of course, the president's tariff regime basically came undone. It's been reinstituted, sort of, for 150 days via a different statute, but that's temporary. And of course, most of the revenue that's been had from the tariffs so far was had through this IEPA tariff logic. And the Supreme Court helpfully didn't make things clear by specifying whether the government has to give this money back or not. And so now that's opened the door to a whole bunch of lawsuits, of which there are many, since the Supreme Court has begun hearing the arguments here in early November. And so we end up with even more trade uncertainty, and thereby even more desire for rate cuts, seemingly, and those rate cuts having an even harder time materializing because of this oil situation following on from the war. So looking at the price action today, it seems telling that gold is not up, that bonds are not up, making this less so a pure risk aversion environment, and more so still a conversation about the Fed, inflation, and whether the markets will get the safety net of cheaper money that they've been pining for over a year. And so from a positioning perspective here, I couldn't help but flip this gold position over today. I'm still structurally bullish, but one doesn't argue with the price action. So when the position went from being up about 4-ish% of equity to being flat, and the price action suggested that maybe we have a near-term breakdown here, the position had to be flipped upside down. And so now I'm a little bit short. I want to be long again. I think that's the path of least resistance ultimately, but in this environment, one must be nimble. I've likewise flipped short the Aussie dollar, which seemed to take out its near-term range today. I am still long the dollar against the pound and the euro. That continues to work. I helpfully got out of Brazil early in the week before today's big sell-off, but when that big sell-off seemed to find something like the bottom of a range, I reloaded. And so this is a new EWZ call that I've bought here now with more time, 73 days to maturity. I took profits on those calls at 33 strike earlier in the day on Monday. So we'll see if this ends up being the place where this ultimately bottoms, but it's something that I want to have on structurally, and so there it is. I still have a little bit of short exposure or put on the insurers ETF here, KIE, expecting some of these squeezes in private credit to ultimately come to something, and the insurance companies own a ton of that, so perhaps there'll be some knock-on exposure. Of course, the actual private credit names, your BlackRocks and KKRs and Apollos of the world, have already been falling for the better part of a year. So that move is relatively mature, but this maybe is early to get going. And I'm still short risk, not because there was clarity in today's moves, or at least since the beginning of the week here, but because there hasn't. And so if the object here was to be short against what were essentially October highs, well, then that premise continues to hold. And of course, still long crude oil, which is a trade I've been nursing since the beginning of the year and continue to nurse so far. I've been in it now for well over 50 days, and at this point, I still have 45 days to go. So while this narrative continues, it continues. And that is macro money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe, and we'll be seeing you on Macro Money tomorrow. Happy trading.